एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। अभी की सबसे मेजर और बड़ी न्यूज़ वो है इंडिया और यूएस के बीच में ट्रेड डील। इंडिया ने यूएस के साथ एक ट्रेड डील साइन कर दी है। इंडिया पे जो अभी 50% टैरिफ है वो रिड्यूस होके 18% हो जाएंगे। गिफ्ट निफ्टी को भी देखोगे, आज अर्ली मॉर्निंग ओपन हुआ एंड ओपन होते ही अर्ली मॉर्निंग मोमेंटम आ गया था। वैसे ये न्यूज़ तो कल ही आ गई थी, बट कल के बाद अगर चेकआउट करोगे 15 मिनट का अगर मैं चार्ट देखूं, दिस 15 मिनट चार्ट, ये हमारा कल इंडियन मार्केट जब कल क्लोज हुआ था एंड कल क्लोजिंग के बाद इफ यू लुक एट दिस, इज इंडियन मार्केट क्लोजिंग। कल शाम को न्यूज आई थी, मार्केट एक बड़ा मोमेंटम किया और आज भी अर्ली मॉर्निंग ओपन होके सीधा ऑल टाइम हाई चला गया था। थोड़ा बहुत वहां से ऑल टाइम हाई से प्रॉफिट बुकिंग आ गई है वापस, ठीक है, 1-2% के आसपास, बट एक बहुत बड़ा गैप अप देखने के लिए मिलने वाला है। बैंक निफ्टी ऑलरेडी 5% अप चल रहा है। So, very good news for Indian market. We can expect a huge gap up in Nifty, Bank Nifty, both। दोनों ही जगह एक बहुत बड़ा गैप अप एक्सपेक्ट कर सकते हैं मार्केट में, होना चाहिए। ठीक है, कल हमारा जो इंडियन मार्केट क्लोज हुआ है वहां से अगर चेकआउट करोगे तो ऑलमोस्ट 6% मार्केट ऊपर गया था, अभी 4% के आसपास है, तो एक बहुत बड़ा गैप अप देखने के लिए मिलेगा। यहाँ पर चेकआउट कर सकते हो, ये ऑल टाइम हाई है गिफ्ट निफ्टी का। मार्केट वहां से थोड़ा सा रिट्रेस किया है, देखते हैं अब इंट्राडे में कितना और नीचे आता है या फिर वापस से ऊपर ही जाता है, तो इट इज़ कम्प्लीटली पॉजिटिव। नेचुरल गैस भी ओपन हुआ है, हल्का सा फ्लैट ओपन है, देखते हैं इसमें आज कुछ ट्रेड बनता है तो। बट निफ्टी बैंक निफ्टी काफ़ी बड़ा गैप अप लग रहे हैं दोनों ही। गोल्ड और सिल्वर को भी चेकआउट करेंगे तो उनका भी सेम ही सिचुएशन है, बट अभी के लिए गिफ्ट निफ्टी इज कम्प्लीटली गैप अप गाइस, वेरी बिग गैप अप यू कैन से। देखना होगा, निफ्टी इतना ऊपर ओपन हो रहा है, गिफ्ट बैंक निफ्टी कहाँ ओपन होता है। बैंक निफ्टी तो मुझे लग रहा है शायद और ऊपर ही जाएगा। क्रूड ऑयल को भी देख लेते हैं, इफ यू लुक एट द क्रूड ऑयल, ठीक है, फ्लैट ओपन हुआ है, हल्का सा गैप डाउन है, फ्लैट ही कहेंगे, इतना कोई खास मोमेंटम नहीं हुआ है। तो थोड़ा सा नजर अभी इंडियन मार्केट पर रखते हैं। तो ये ओपन ही होने वाला है। लुक एट द बैंक निफ्टी। प्री मार्केट देखते हैं कहाँ ओपन होता है, बिकॉज बैंक निफ्टी तो अपने ऑल टाइम हाई से उतना दूर था नहीं। ठीक है, डेली वाइज देखोगे निफ्टी काफी दूर था, निफ्टी ने अपना ऑल टाइम हाई को हिट किया है, तो बैंक निफ्टी भी एक्सपेक्ट करेंगे कि वापस अपने ऑल टाइम हाई के आसपास ओपन हो जाए। ऐसा अगर हुआ तो ये भी अप्रोक्सीमेटली 1500 से 2000 पॉइंट ऊपर है। तो निफ्टी और बैंक निफ्टी में दोनों में ही एक काफी बड़ा गैप डाउन बिकॉज ऑफ इंडिया यूएस ट्रेड डील, जिसमें इंडिया पे जो टैरिफ थे अभी जो चल रहे हैं 50%, वो रिड्यूस होके 18% हो जाएंगे। तो ऑलमोस्ट एवरी इंडस्ट्री विल बेनिफिट। इंडिया ऑलरेडी साइन गुड ट्रेड डील विथ यूरोप, नाउ विथ यूएस। थोड़ा गैप अप ओपन हो जाए तो उसके बाद ट्रेड भी क्या किया जाए, लाइक मार्केट क्या और ऊपर जाएगा या प्रॉफिट बुकिंग में आएगा, दैट विल बी अ क्वेश्चन नाउ। राइट नाउ दिस इज अ मेजर न्यूज फॉर इंडियन मार्केट। देखोगे गोल्ड भी एक हल्का सा कल इंडियन जो मार्केट क्लोज हुआ था वहां से हल्का सा गैप अप ओपन हो रहा है, एमसीएक्स में ओपन हुआ है। एंड सिल्वर भी एक हल्का सा गैप अप ओपन हुआ है। फॉरेक्स में चेक करोगे, मैंने कल आप लोगों को बार बार बताया था $78 काफी इंपॉर्टेंट लेवल होने वाला है। उसके नीचे जब तक प्रॉपरली ब्रेकडाउन रिटेस्ट नहीं होता और नीचे जाएगा नहीं। कल एक दो बार मार्केट ने ब्रेक करने की कोशिश करी, एक ही बार ब्रेक करने की कोशिश करी, $78 के नीचे कैंडल क्लोज भी करी थी। फिर मैंने आप लोगों को बताया था अगर वो कैंडल नीचे नहीं जाती है तो फिर प्राइस रिकवर ही करेगा या फिर कंसोलिडेशन कर सकता है। तो फॉरेक्स चार्ट में देखोगे वो सेम लेवल $78 का, ठीक है, होल्ड करके बैठा हुआ है मार्केट अभी भी। लुक एट दिस। एंड प्राइस विल गो अप। कल यहाँ पर मार्केट ने एक ब्रेकडाउन किया था, मैंने बताया था इस 4 आवर की कैंडल के नीचे अगर वो कैंडल क्लोज हो जाती है तभी ब्रेकडाउन माना जाएगा, नहीं तो ये फेक है। वापस रिकवर किया, उसी लेवल पे अभी है। तो मुझे लग रहा है कंसोलिडेशन में ऊपर ही जाना चाहिए अब इस प्राइस को यहाँ से थोड़ा बहुत। एटलीस्ट 195 से $100 तक तो एक लेवल है टारगेट के जोन का, वहां तक जरूर जाना चाहिए आने वाले टाइम में, अनटिल अनलेस कोई और मेजर न्यूज़ नहीं आती। सो yeah, it is holding the $78 support area now, silver in forex, which is very good. बैंक निफ्टी या ऑल टाइम हाई, वाओ, 61,000 पे ओपन हो रहा है बैंक निफ्टी। 2792 पॉइंट इन स्पॉट। स्पॉट में 2792 पॉइंट गैप अप ओपन, ऑलमोस्ट अपर सर्किट के अराउंड ही मान लो। 5% पे अपर सर्किट लग जाता है। 4.76% अप, ह्यूज गैप अप इन बैंक निफ्टी, ऑलमोस्ट 2700 पॉइंट का। निफ्टी भी चेक। वाओ, निफ्टी स्पॉट ऑल्सो ऑलमोस्ट अपने अपर सर्किट के अराउंड, लगा नहीं है, 5% पे अपर सर्किट लगता है। 4.86% गैप अप ओपन है। 1219 पॉइंट, 1219 पॉइंट का गैप अप। तो ये ऑलमोस्ट अपने ऑल टाइम हाई पर ही ओपन है। ठीक है, तो निफ्टी बैंक अपने ऑल टाइम हाई के ऊपर इतना बड़ा निकल गया है, तब देखते हैं प्रॉफिट बुकिंग आती है या फिर नहीं, क्योंकि बहुत बड़ा गैप अप है। अब क्या यहाँ से कंटिन्यूएशन में जाएगा या प्रॉफिट बुकिंग होती है, नीड टू सी। यहाँ तो कोई रेजिस्टेंस भी नहीं है कि प्राइस कहाँ तक आया, अभी गैप ही बनता है जो फिल हो सकता है, अदरवाइज। ठीक है, निफ्टी 50 भी ऑल टाइम हाई के ऊपर नहीं निकला है। अभी भी चेकआउट करोगे ऑल टाइम हाई के ऊपर अभी भी क्लोजिंग नहीं, ओपन नहीं हो रहा है। तो 26,400 ऑल टाइम हाई इसका रेजिस्टेंस है। इसके ऊपर ब्रेकआउट होता है तो शायद और ऊपर जाएगा। देखना पड़ेगा क्या इसके ऊपर ब्रेकआउट होता है या फिर नहीं। ये यहाँ ओपन हो रहा है, कल अगर कोई ओवरनाइट पोजीशन ले गया तो भाई क्या प्रॉफिट है। एनीबडी इज होल्डिंग ओवरनाइट पोजीशन। इंडियन डॉलर्स भी देखोगे तो काफी स्ट्रेंथ हो गया है, $91.51 से अभी $90 पे ओपन हो रहा है। व्हाट अ मोमेंटम। बहुत कम होता है ऐसा कि मार्केट गैप अप हो जाए इतना बड़ा किसी न्यूज़ की वजह से। नॉर्मली मार्केट इस तरह की न्यूज़ पे गैप डाउन होते हुए काफी देखे हैं। इतना बड़ा गैप अप, क्योंकि आज एक्सपायरी भी है, ध्यान रखना। निफ्टी की ऑप्शन की एक्सपायरी भी है, आज 3 फरवरी है निफ्टी ऑप्शन एक्सपायरी। लेट्स सी क्या होता है अब आज के दिन। ह्यूज गैप अप, वाओ। ठीक है, इंट्राडे में इतना बड़ा मोमेंटम जरूर देखा है कई बार, बट किसी न्यूज़ की वजह से इतना बड़ा गैप अप हो जाए, कंप्लीटली अनप्रेसिडेंटेड। और ये न्यूज़ भी कल आई थी, कल रात को, जब कमोडिटी मार्केट हमारा ओपन था उस समय ही आई थी न्यूज़। कल भी शेयर कर दिया था वैसे तो मैंने इसको। ठीक है, फ्यूचर देखते हैं फ्यूचर कहाँ पर ओपन होता है, बिकॉज फ्यूचर इज इंपॉर्टेंट। फ्यूचर कहाँ पर ओपन हो रहा है, दैट नीड टू बी सीन। मार्केट जस्ट ओपन ही होने वाला है फ्यूचर में। निफ्टी की एक्सपायरी है, ध्यान रखना, ऑप्शन किया आज, निफ्टी ऑप्शन एक्सपायरी टुडे। वाह, 26,000 की कॉल, कल 1 रुपए चल रही थी, 151 चल रही है नाउ। ठीक है, फ्यूचर देखोगे थोड़ा सा प्रॉफिट बुकिंग में आ गए, ओपन होते ही प्रॉफिट बुकिंग है, कंप्लीट प्रॉफिट बुकिंग। ठीक है, ये बैंक निफ्टी का चार्ट है, बैंक निफ्टी अपने ऑल टाइम हाई के ऊपर ओपन हुआ, ओपन होते ही प्रॉफिट बुकिंग आ गई है कंप्लीट। 2% डाउन है। निफ्टी हाई के अराउंड ओपन हुआ, वहां से इसमें भी प्रॉफिट बुकिंग है, फ्यूचर थोड़ा सा नीचे ओपन हुआ है, प्रॉफिट बुकिंग चल रही है। 26,000 की कॉल ने तो कमाल कर दिया भाई। 10,000% का रिटर्न है, 10,000% का रिटर्न कल। रिटर्न कम होके रिड्यूस होके 6,000% आ गया, 10,000% रिटर्न। ठीक है, कल ये लगभग 2-3 रुपए के आसपास चल रहा था शायद, 26,000 का कॉल, सीधा ओपन ही 300 के आसपास हुआ था। 10,000% का रिटर्न नाउ रिड्यूस होके 5,000% पे आ गया है। ये कंप्लीट प्रॉफिट बुकिंग। यहाँ पर ना एक रेजिस्टेंस है, याद रखना। निफ्टी फ्यूचर में देखोगे ना 26,000 एज रेजिस्टेंस है, उसके ऊपर ओपन जरूर हुआ है मार्केट, बट क्या ये होल्ड करेगा नहीं करेगा इंपॉर्टेंट है। 20 कल भी हम बात कर रहे थे 26,000 के ऊपर अगर ये निफ्टी बैंक निफ्टी फ्यूचर होल्ड कर जाता है तो आप मान के चलो ये अपने ऑल टाइम हाई को बहुत इजीली ब्रेक कर लेगा, क्योंकि मार्केट स्ट्रक्चर के अकॉर्डिंग ये एक कंसोलिडेशन जोन में चला गया था। डाउन ट्रेंड में आने के लिए इसको 26,000 से रिजेक्शन लेना जरूरी है। अभी देखोगे कैंडल 26,000 के पर वापस आ गई है कि नीचे आ गई है वापस। अगर ये 26,000 के ऊपर ही क्लोजिंग देती है या फिर अभी इसके ऊपर ही सस्टेन करती है बाय एनी हाउ, तो फिर हम ऑल टाइम हाई को वापस इजीली ब्रेक होता हुआ देखेंगे। बाकी बैंक निफ्टी तो ऑलरेडी ऑल टाइम हाई पर है। कल एफ ने काफ़ी बिकवाली करी थी। डी ने कल काफ़ी हैवी क्वांटिटी बाई करके रखा हुआ था। देखो बैंक क्या करता है, निफ्टी फ्यूचर 26,000 लेवल इंपॉर्टेंट है नाउ फॉर इंट्राडे। ट्रेड डील तो ठीक हुई है इंडिया और यूएस के बीच में, क्या ये कंटिन्यूएशन पे मार्केट जाता है ऊपर या फिर वापस से एफ बेरिस हो जाते हैं आज। हाँ 2% का गेन तो चला गया ऑलमोस्ट। 4 पॉइंट समथिंग % के आसपास गैप अप ओपन हुआ था। दिस कैंडल ऑलरेडी ओपनिंग के बाद 1.36% निफ्टी फॉल है। बैंक निफ्टी थोड़ा ज़्यादा ही फॉल हो रहा है। 1% ये भी फॉल हो गया। ठीक है, अभी भी ओवरऑल तो पॉजिटिव ही है। बस ये देखना है कि अब बैंक निफ्टी ऑल टाइम हाई के ऊपर कंसोलिडेशन करता है नहीं करता है, फिर पूरा गैप फिल करने चला जाता है। ठीक है, ये जस्ट प्रॉफिट बुकिंग है, दिस इज नॉट अ सेल ऑफ, मुझे नहीं लगता है सेलिंग कुछ दिख रही है। प्रॉफिट बुकिंग है, नीड टू सी कितनी होती है प्रॉफिट बुकिंग, क्या कंटिन्यूएशन में चलता है या फिर नहीं। स्पेशली निफ्टी निफ्टी इंपॉर्टेंट है, 26,000 का लेवल, इसके नीचे आज क्लोजिंग नहीं चाहिए। गैप अप ओपन हुआ है, ब्रेकआउट समझ सकते हैं, बट क्लोजिंग बेसिस पे आज चाहिए 26,000 के ऊपर, अगर मिल गया तो वापस ऑल टाइम हाई एक्सपेक्ट करेंगे फ्यूचर में। 26,000 के नीचे कोई भी क्लोजिंग आती है, स्पेसिफिकली 25,600 के नीचे अगर एनी हाउ क्लोजिंग आ गई ना, दैट विल अगेन नेगेटिव। निफ्टी फिफ्टी फिर से बेरिस मुझे लगता है हो सकता है। 25,650 के नीचे अगर आज क्लोजिंग हुई आज के दिन की फ्यूचर में। ठीक है, कल अगर कोई ओवरनाइट होल्ड करके ले गया है तो भाई आई होप, कॉल साइड पे वैसे मुझे लगता नहीं कोई ले गया होगा, बट फिर भी कोई ले गया है तो यू विल गेट वेरी गुड प्रॉफिट टुडे। ठीक है, अब देखो इस तरह के मार्केट में यहाँ पर कुछ कर नहीं सकते, लाइक थोड़ा सेटल हो जाने देते हैं मार्केट को। मैं थोड़ा हायर टाइम फ्रेम पे देख रहा हूँ मार्केट आज क्लोज कहाँ करता है, बिकॉज देखो अगर 26,000 के ऊपर अगर आज डेली टाइम फ्रेम की क्लोजिंग आती है, आई एम बुलिश कम्प्लीटली फिर। ठीक है, 25,650 के नीचे क्लोजिंग आती है फ्यूचर में, देन अगेन आई एम बेरिस। तो ये दो लेवल हैं आज के लिए, इतने बड़े गैप अप के बाद। अब ओवरनाइट अगर होल्ड करके गए हो देन ओनली यू कैन गेट द प्रॉफिट। बाकी कल मैंने आप लोगों को बताया था ईटीएफ गोल्ड के किसी ने अगर बाई किए होंगे, वहाँ पर भी अच्छा प्रॉफिट है। एसबीआई का मैंने कल बताया था ईटीएफ बाई करके गए हैं ओवरनाइट। एसबीआई का गोल्ड ईटीएफ वो भी ठीक ठाक ही चल रहा है अभी नाउ। वो सारे स्टॉक्स में प्रॉफिट बुकिंग ही चल रही है। कल अगर कोई ऑप्शन सेल करके गया था, स्पेशली कॉल शॉर्ट करके गया था, तो भाई उसको तो काफी लॉस हो गया होगा। कोई पुट बाई करके गया होगा, उसको भी काफी हैवी लॉस हो गया होगा। 1 मिनट का चार्ट है निफ्टी बैंक निफ्टी का। इतनी बड़ी कैंडल बनी है तो अब देखना है कंटिन्यूएशन करता है या फिर नहीं। इतने छोटे चार्ट इस तरह के मोमेंटम में कुछ कर भी नहीं सकते हैं यहाँ पर। थोड़ा सा प्राइस एक्शन बनने का वेट करते हैं, अभी तो फर्स्ट कैंडल ही बनी है 15 मिनट की। टाइम फ्रेम का चार्ट देखोगे, इतनी वॉलेटिलिटी है निफ्टी फ्यूचर में। एंड बैंक निफ्टी भी देखोगे, टू मच वॉलेटिलिटी। दिस अ मंथली टाइम फ्रेम चार्ट, अभी क्लोज होने में पूरा टाइम है, 1 महीना। अरे यार ये क्या हो गया? ये सेम लेवल है आई थिंक निफ्टी बैंक निफ्टी का। करेक्ट। ओके, बैंक निफ्टी देखोगे लोअर एंड से रिबाउंड कर रहा है अभी भी। 4 आवर की कैंडल इंपॉर्टेंट है।
Another redhead actually crossing the Bloomberg terminal right now, saying that SpaceX and XAI together would be valued at $1.25 trillion. Again, this is coming from the company memo that Bloomberg reporters have seen, although we should point out this information is not yet public. Let's bring Ed Ludlow into the conversation. And Ed, I do want to start off with that $1.25 trillion valuation. And I guess my question to you is, how much of that valuation is SpaceX and how much of that is XAI?
The vast majority, and just to clarify something you guys were discussing a minute ago, there's two separate memos. The valuation comes from a memo that's been sent out by SpaceX's CFO, Brett Johnson. So, you know, it's based on the terms of the combination, $1.25 trillion valuation, but a share price at $526. You know, you can do the math on the value add. SpaceX's last valuation was $800 billion in the tender we reported, and XAI is just north of $200 billion. But, you know, Ryan did a good job on summarizing the kind of how we got to this point. There were a lot of SpaceX investors that were not in favor of this combination because of the debt component on XAI. So that debt's going to get factored into this, right? And they'll have to do some interesting financial mechanics, just like they did when X, the social platform, and XAI combined into a single entity as well.
Yeah, and I'm wondering why it's important to these companies, to Elon Musk, to have this merger happen before SpaceX potentially goes public later this year. Because you think about SpaceX, obviously it has a viable product. It has a very impressive valuation. You think about potentially building data centers in space, that I could see that, but it just feels much further off and maybe not as relevant to this specific public offering.
Yeah, I mean, another point of clarification is that our understanding is that this IPO of the combined entity is going to go ahead. You know, when we reported that there were two scenarios under consideration, the merger of private SpaceX with public Tesla and the merger of the two private companies, XAI and SpaceX, a lot of people were asking quite rightly, well, what about this great big IPO that you guys have been reporting on? And our understanding from sources is that proceeds. Just to build a little bit on what Ryan was talking about, it's literally about inference, running AI models. And, you know, the point of having data centers, which are literally satellite form factor in space, you know, SpaceX builds them, has the capital to buy the GPUs, which it intends to raise from the IPO. And XAI makes use of that compute capacity because it is energy efficient and there is minimal latency in getting the results of running that model back down to Earth. That is the rationale. But you have two very different companies now combining that were in different financial health.
Right.
You know, SpaceX has rude revenues, but also seem to be quite profitable. XAI burns through cash like it's going out of fashion.
चाइनीज स्टॉक्स को भी देखोगे, टेक स्टॉक्स को, तो ऑलमोस्ट 20% का फॉल किया है वहां पर अक्टूबर के हाई से चाइनीज स्टॉक्स। क्रूड ऑयल थोड़ा सा रेंज के अंदर ही है, कल तो रेंज थोड़ी ब्रेक कर दी थी, लेट्स सी। PN India stock jumps as Trump cut tariff on exchange for curbing Russian oil.
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Doug Krisner. Elon Musk is planning to merge SpaceX with his artificial intelligence firm xAI. We are told the combined company is expected to have a valuation of $1.25 trillion. Here is Bloomberg's Ed Ludlow.
The rationale is, vertical integration. This is something that's kind of been hiding in plain sight, right? And the idea, SpaceX provides the launch capacity, and together the two companies design satellite form factor data centers, very focused on inference.
That is Bloomberg's Ed Ludlow. Federal agents on the ground in Minneapolis will now wear body cameras. Homeland Security Secretary Kristi Noem said the program will be expanded nationwide as funding becomes available. Now, the use of body cameras by federal agents follows a national outcry over the killings of 2 U.S. citizens in Minneapolis. President Trump said he's okay with the move.
Well, it wasn't my decision. I would have, I leave it to her. They generally tend to be good for law enforcement because people can't lie about what's happening. So it's generally speaking, I think 80% good for law enforcement. But if she wants to do that, I'm okay with it.
The adoption of body cameras has the potential to ease the path for passage of a government funding deal. The House of Representatives is back in session to begin consideration of a revised funding package passed by the Senate over the weekend. Now, President Trump is pushing ultra-conservatives in the House to accept a deal he struck with Democrats to end the partial government shutdown. Meantime, there is a bill to keep the government operating while allowing 2 more weeks of discussions for an agreement on restrictions for ICE. Pennsylvania Democratic Congresswoman Madeline Dean is calling for total reform of ICE.
I have suggested an absolute freeze of ICE funding at this point. And I've described this to my friends and colleagues on the appropriations bill and in our leadership, a clawback of funding. How is it that we went from $6 billion to DHS to an additional $75 billion and even more in the big, beautiful bill?
That is Pennsylvania Democratic Congresswoman Madeline Dean speaking on Bloomberg's Balance of Power. Bill and Hillary Clinton have agreed to testify in a House Oversight Committee's investigation into Jeffrey Epstein. A spokesperson for the Clintons said they will appear after months of refusing to comply with subpoenas from the House Oversight Committee. This comes just days before the chamber was expected to vote to hold the Clintons in contempt of Congress. We move to business news next. After the bell, Palantir Technology forecast revenue for fiscal 2026 significantly above Wall Street expectations. We have more from Bloomberg's Charlie Pellet.
It's a boost for the data analytics company after its shares have gotten off to a lackluster start so far this year. Brent Thill is an analyst at Jefferies.
Palantir's fundamentals are doing extremely well. Cash flow growth well above forecast.
Palantir relies on government contracts for the lion's share of its U.S. revenues. It says annual revenue will be between $7.18 and $7.2 billion. Analysts on average estimate it $6.27 billion. In New York, Charlie Pellet, Bloomberg Radio.
The Trump administration is looking to make a big move in rare earth minerals. The White House is launching a $12 billion critical mineral stockpile called Project Vault. The aim here is to aid manufacturers and to minimize reliance on Chinese rare earths. Here is Bloomberg's Jennifer Welch.
Ultimately, the scale of the challenge is huge. I mean, we think about how reliant the United States is on China, how dominant China is in not just the production of the raw materials, but in derivative products. It's immense, and it takes time for those supply chains to build.
That is Bloomberg's Jennifer Welch. And that is news when you want it with Bloomberg News Now. I'm Doug Krisner, and this is Bloomberg.
As a place to do business, the UK stands apart. Not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading financial centres, the UK puts over £10 trillion to work every day. fueling innovation across every sector. Home to 4 of the world's top universities, it provides exceptional talent and breakthrough research. This sits alongside a clear 10-year industrial strategy, unlocking smarter regulation and making it faster and easier to operate. Stability with dynamism. Global connectivity with local depth. It all adds up to greater growth. Visit business.gov.uk/growth.
iPhone when sold overseas to how much you're going to have to pay for that summer trip to Europe.
This story is about the global community losing its confidence in the US dollar and quietly quitting US assets, but this administration doesn't seem to mind it.
The dollar had its biggest drop since U.S. President Donald Trump unveiled his universal tariffs last April.
Donald Trump imposes the steepest U.S. import levies in a century, with China facing a tariff of more than 50%. The dollar is also weaker.
The dollar fell in a really big way against major peers: the yen, the euro, the pound, the Swiss franc. This chart over the past month shows just how stark the dollar's drop has been so far this year. The vast majority of days, the moves are very slightly up or very slightly down. But on January 27th, the dollar fell 1.1%. That large of a move accounts for about 1% of all days.
To understand the current dollar decline, we need to broaden the lens here a little bit because it is coming off very strong levels. Even at the start of 2025, the Bloomberg Dollar Index was hovering at near the highest in at least 20 years.
The foreign exchange market, or FX market, is where investors buy, sell, and speculate on currency movements. The scale of the currency markets is massive. On average each day, some $9.5 trillion is traded in the currency markets.
Despite rising doubts about the dollar, it continues to be the world's dominant currency and has been so ever since World War II. It is the most used in global trade, foreign transaction, the FS market, and it also accounts for the lion's share of global reserves held by central banks, even as that has come off a little bit in recent years.
A number of factors can affect the currency markets, but the primary force behind the dollar's fall right now is Trump. Fear has been fanned by Trump's unpredictable policymaking, including his threats to take over Greenland, political pressure on the Federal Reserve to lower interest rates, and tax cuts that have deepened the U.S. deficit. Trump has indicated he's comfortable with the dollar's decline.
No, I think it's great. I mean, the value of the dollar, look at the business we're doing. No, dollar's doing great.
His remarks underscore the lingering risks and the risk that global investors will look elsewhere.
It's becoming clear that tariff threats are being used as a negotiating tool on nearly every front, not just trade, and that casts a shadow over the U.S. economy at the time when growth is still fragile. If you look at the past 6 months or so, there has been little to no job growth in America, and that's largely believed to be the result of the trade war and the immigration crackdown.
The dollar's weakness has come despite a rise in Treasury yields and the Federal Reserve's reluctance to cut interest rates further.
For global investors who want to participate in U.S. stocks or play the AI theme, they may now be emboldened to hedge more of their U.S. dollar exposure given the dollar declines.
A prolonged and sharp weakening of the U.S. dollar brings with it a number of dangers for the U.S. economy. Trump in the past has made no secret of his desire for a softer dollar. A weaker dollar will boost American exports and promote American.
It's raised alarm among creatives who are concerned about how their work will be used and whether AI will render them obsolete.
Proponents argue AI can bolster creativity, not diminish it, by automating mundane filmmaking tasks that require more time and money when left to humans.
So on this episode of AI IRL, we'll hear from experts across the industry who have different visions of how artificial intelligence will transform entertainment and where that leaves human ingenuity.
If there's one thing everyone can agree on, it's that AI-generated films and TV will hit the red carpet sooner or later. The question will be, who gets the credit? Duncan Crabtree Ireland, thank you so much for coming on the show.
It's a pleasure. Thanks for having me.
You're the National Executive Director and the Chief Negotiator for the Screen Actors Guild. AI has emerged as a key issue among Hollywood actors and other creatives, but it's been used in the industry for years. What is it about generative AI that poses such a threat?
Well, I think really it's the fact that the capabilities of generative AI really haven't even been tapped. The surface hasn't been scratched yet on them. And the idea that, that there could be an AI tool that could help do traditional editing a little more efficiently or provide some additional capabilities there is one thing. The idea that you could have an AI tool that's used to create digital replicas of performers and then actually convince
reinforce competitiveness in services which India has established. So it boils down to basically making sure that from a policy perspective, we remove regulatory uncertainties, provide policy predictability, etc., and continue to bring down input costs for businesses through deregulation exercises and looking at tariff distortions, both domestic and external, etc. And these things remain unchanged.
I know the markets are not the economy, not a reflection of the fundamentals, but we know foreign investors have been making exit from the Indian market. Do you think this is the moment where a reversal happens? Do you think international investors will start coming back?
Absolutely. I think from my own conversations with many investors, this question was a big overhang in their heads. And I think this overhang now being removed, the investors would be willing to look at India's otherwise extremely sound macro fundamentals in a much more positive light. Absolutely. I agree with you that this would be one of the most important fillip or signals to investors to return to the Indian market, considering the pervasive uncertainties that prevail elsewhere.
Van, just one final question. The biggest risk for India in 2026?
The biggest risk, it is basically the global geopolitical situation, which could, independent of India now, given that the trade deal has been done, independent of India-centric factors, a global financial market meltdown or some geopolitical conflict, making cross-border capital flows extremely uncertain and tighter will be an important issue to watch out for. And apart from the fact that financial market corrections tend to have global spillovers, I would put these two risks as important risks to watch out for.
Van, always a pleasure to have you on the show. V. Ananda Nageswaran, Indian Chief Economic Advisor. Now, still to come on Insight, Canada is making a strategic shift on trade, a deal with China, talks with India, and less reliance on the U.S. Former Trade Minister Mary Ang will be joining us with her insights. This is Bloomberg.
So as a lead sponsor of the Indian cricket team and with World Cup T20 around the corner, what's the reason behind the strategic partnership?
Well, obviously the brand recognition and the reach into the rural markets of India. To increase our distribution network in the rural market is our main objective, whereby we'll get increased revenues and EBITDA margins. The trust that the Indian cricket team has from the Indian nation, that's the trust that Apollo brings on the table.
For us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, We are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Novian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth we started with by empowering our customers across all our segments?
In case you missed it on Bloomberg Tech.
We're accelerating their EDA software. We're accelerating their simulation software. We're integrating AI technology, physical AI and agentic AI into their team center and their factory automation operating system. We're working across this entire spectrum together, and we're going to put the technology to use basically as soon as we can.
Don't miss Bloomberg Tech, live every weekday.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
The middle powers must act together, because if we're not at the table, we're on the menu. But I'd also say that great powers can afford for now to go it alone. They have the market size, the military capacity, and the leverage to dictate terms. Middle powers do not.
And that was Canadian Prime Minister Mark Carney's speech, and that was the highlight of Davos for his call for so-called middle powers to come together and rescue the liberal order. Joining us now, Mary Ng, former Canadian Minister of International Trade. Good to have you with us. We heard from Prime Minister Carney saying that, if you're not at the table, you're on the menu. It's well and good calling the middle powers to come together, but it's not that easy.
Well, it isn't easy, but the question is, shouldn't you try and do that? And Canada, we're 40 million people. We're the 10th largest economy in the world. I'm here in Jakarta. Canada and Indonesia have a newly minted trade agreement that I happily was able to do some negotiating and concluding of that. But Canada and its trading partners, whether it's in the CPTPP or whether it's with our colleagues in the European Union, it is time to get to the table. It is time to be ones to set the course for the future. I think the Prime Minister also said that if you, as a middle power, if you're smaller and you're negotiating against any of the large superpowers, you're going to come at it from a disadvantage. So why would we take the path, which is each of us trying to compete to get the best, to get the best by essentially appeasing. Wouldn't we do this better if we were to come together and find a path forward where we actually do have some strength in numbers?
You may not necessarily have the option. I just had a conversation with Mari Pangestu, the former Trade Minister of Indonesia. She said that ASEAN nations wanted to respond to Trump and Trump's tariffs collectively, but they were not allowed.
I don't disagree with that. But I do think that that recognizing that this is the global order that we're in today, we should, as countries who can find predictability, who can find stability, who can find the advantages in each other's supply chains, we should try to do that. I mean, I look at Canada and our trade agreements, whether it's with the CPTPP, so the Trans-Pacific Partnership as a bloc, and there we helped the United Kingdom and supported the United Kingdom to join that pact. And today, the CPTPP are also in discussions potentially with the EU to create that sense of collaboration. I think we have to give it a try.
Mary, it is about diversify, diversify, diversify. But when you diversify, in the case of Canada, looking to China for a trade deal, it is slapped with 100% additional tariffs. How do you do this? How do you trade? How do you negotiate?
Well, I think in China, just to be very clear, it isn't a trade deal. Canada and the United States, of course, is our largest trading partner, and our second largest trading partner is China. There are issues that are really important for Canada, in particular with those producers. I'm thinking about our farmers. I'm thinking about our canola farmers in particular, or those that export seafood and commodities. China is a market for Canada, and it's really important for us to be able to find a way to work together so that those exports and that trade continues to flow in a way that doesn't have, that also doesn't have tariffs. So we need to be able to do that, and at the same time, do what we do with the United States to preserve this important economic relationship that has served all of our economies for decades and decades. I think the Prime Minister was also very clear. It isn't a trade agreement with a non-market economy, which is what China is. We are very respectful of that provision. We continue to keep to our commitments in that trade agreement. So I think it's important for us to be able to walk and chew gum at the same time.
It is a balancing act, though. How do you deepen trade ties with China while still not offending the U.S.?
I think you can do it one step at a time, incrementally.
How does that look like?
Well, I think right now, what's positive is that there are the ability for the two countries to be talking to each other and sort of taking good progressive steps forward, having the tariffs significantly reduced for our canola farmers, I think is really good. Let's do that and make sure that continues to work, and let's create some stability there. I think you do it one step at a time.
We heard Prime Minister Mark Carney talk about how this is the new world order. Does this new world order come at a higher cost for companies?
It may well. It may well. If you think about how manufacturing is done in Canada, if you think about the high standards for our labor and our wages, or the high standards that come with the cost of just doing business in a sustainable way, those are costs that have been inputs into our economy, and it's a choice that is made by those countries wishing to collaborate and to trade with each other. I think that is good. I think that every economy wants aspiration for its people. They want better conditions for their workers. I think that they want their middle class to grow and to increase their economy and to prosper and to create productivity and competitiveness. Those are the kinds of things that Canada has always been able to offer, and we do that willingly. And I think now we're looking for partners to do that and to keep doing that with us.
In the end, in 5 years, do you see the world decoupling even more? I mean, some have suggested that it's strategic decoupling, especially between the U.S. and China. Is that what we're looking at? And, how about the rest of the world? Where do they fall? How do they fall in line?
Well, when I think about our trading partners, and what is it that I do in the past as the trade minister and now sort of, as someone in the private sector, it is finding those opportunities to make sure that we get those companies, those technologies, those innovations into other supply chains. So here in Indonesia, are we able to collaborate on education? Are we able to collaborate on technology? Are we able to collaborate on the technology and the knowledge for the sustainability in mining? Mining is a big sector here. And we have enormous, wonderful Canadian companies that offer capabilities sustainably. Can they be the companies that will go into those supply chains? And I think that we're going to do that not only here in Indonesia and with markets that are here in Asia, but with all of our trading partners as well. And I think we're doing that vice versa. And yes, we will continue to be a trading partner to the United States. How could we not? They are our neighbor. They are, we have done this for decades upon decades. There are tremendous industries that are tremendously integrated, and it is our hope that we continue to do that. But it is also, I think as Prime Minister said, we have to live in the world that we are in and not for the one that we wish, and therefore we must plan accordingly and find those relationships and diversify accordingly.
Right. and it is a balancing act.
It is a balancing act.
We thank you so much for your time today. Mary Ang, former Canadian Minister of International Trade. Well, we'll have more of our conversations. Of course, I'll be speaking with a finance minister of Indonesia. We'll bring you the details later on. This is Bloomberg.
Bloomberg Invest, where intelligence meets capital. In the heart of the financial district, powered by Bloomberg's award-winning journalists, bringing together the market's most influential minds.
A big part of our job thematically is understanding the risk environment we're in.
We are facing a once-in-a-generation technological disruption.
We will continue to have a convergence in credit markets.
Liquidity at moments in time when there's a lot of volatility is challenging.
Bloomberg Invest, March 3rd and 4th in New York.
I never have changed my show to make it for YouTube. I'm very conscious of the fact that ABC pays for the show and YouTube pays nothing, and YouTube gets to sell it and keep half the money. And that's quite a deal for them, it really is. But I've never made the show for YouTube. With that said, I love YouTube and I love being on YouTube because all you really want deep down is for as many people to see your stuff as you can. And I know that it has hurt because it is so easy to watch the monologue on YouTube now. I know that it has hurt the ratings, not just for our show, but all of the shows. And maybe that's kind of what has killed late night TV. More likely the fact that we have our lead-ins are a tenth of what they were when I started.
I was alarmed to see that the most watched video from your show had fewer views than the average Mr. Beast video. And I don't know what that says about the state of the world, but
I think it says Mr. Beast is kicking ass, is what it says, yeah. Well, you know what? There is a big difference. When you do the show every night, you're not going to get as many views. But we still, I mean, I woke up this morning, there were 2.2 million views of my monologue the night before. So for everyone who says late night is dying, it's just not true.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Katie Greifeld at the JP Morgan Healthcare Conference in San Francisco, and this is Bloomberg.
Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks bounce back from their worst sell-off in more than 2 months as a rebound in gold and silver helps calm markets after Monday's volatility. President Trump announces the U.S. will slash tariffs on India to 18% after Prime Minister Modi agrees to stop buying Russian oil. And oil slides as U.S. and Iranian officials plan to discuss a new nuclear deal this week. But Trump warns that bad things would happen if they can't come to an agreement. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, volatility, that's the theme of the last couple of days. And what we're seeing this morning is a complete reverse of what we had yesterday. There is green on the screen. The handover from Wall Street was pretty positive as well today. You can see right behind me, the handover from Asia Pacific. Asian equities up 2.7%. So Kospi, which was one of the biggest laggards yesterday, is actually up about 5% this morning. So maybe it's all just a bad dream. We'll We'll talk more about that throughout the rest of the show. S&P futures above 7,000, about 0.3% firmer this morning. We had strong ISM manufacturing data come through from the U.S. yesterday, the strongest level since 2022. So that gave a bit of a boost to equities, and also in after hours, a lot of focus on Palantir. The stock is trading quite well in extended trading. So again, that's giving a bit of a boost to the tech sector this morning. Gold, take a look here. We are actually stabilizing 3.3% after the massive sell-off we saw on Friday and on Monday. It seems as though the 50-day moving average has actually held for both gold and silver. Silver also rebounding today. We're back above $80 per ounce. So let's see whether this holds. But at least some of that massive shakeout that we had the last couple of days seems to have subsided for now. We will talk more about commodities later on in the show. And then Brent, keeping a close eye there on the price action. We are down a little bit this morning, down about 0.4%. Of course, yesterday we did have a massive drop on back of news that the diplomatic channel between the U.S. and Iran is being worked on. And there is a potential meeting coming up towards the end of this week with Iranian officials and the U.S. in Turkey. So something to think about there. We're down about 0.3%. But let's go back and talk about markets. Min Min Lo is with us in Hong Kong for us. Min Min, I know with the exception specifically of the Hang Seng Tech Index, for the most part, the handover has been positive.
Yeah, it's been a good day for Asia. We certainly are seeing stocks rebounding after the sell-off yesterday, but I just want to focus on the Aussie market, which just closed a couple of minutes ago. We have the RBA raising key interest rates by 25 basis points. The first central bank to start that hiking cycle this year. The RBA sees inflation, growth, and employment all remaining elevated this year. So pretty hawkish comments there. It also raised its forecast for inflation this year by about 50 basis points. So you can see here the Aussie dollar gaining about 1% against the US dollar. The stocks gaining as well, but we're seeing a sell-off in the bonds market, and analysts expecting that sell-off could continue. Maybe that 5% handle could be in sight by the end of the year. But flip the board, another currency that is gaining in Asia is, of course, the Indian currency. A lot of relief for this currency, which has taken a beating the past year. Long-awaited trade truce with the United States, which is cutting the reciprocal tariffs from 25% to 18%, and also removing the additional 25% punitive tariffs that are meant to punish India for purchasing oil from Russia. So you can see the stocks and the currency all gaining as a result. Jumana.
Yeah, so many stories coming through from Asia this morning. And also would just point out to our viewers that the Kospi is now up almost 6%, 5.7% higher today in trading. Also very strong handover from the Nikkei, up 4% as well. So a very bullish handover. Min Min Lo in Hong Kong, thank you. Well, President Trump is pushing House Republicans to accept a deal he struck with Democrats to end the partial government shutdown. In a post on Truth Social, Trump told lawmakers to swiftly pass the measure with no changes. The bill would fund most agencies through September and the Department of Homeland Security through February the 13th, preserving funding for immigration raids while both parties negotiate changes to enforcement policies. The U.S. Bureau of Labor Statistics, the BLS, will not release the January jobs report this Friday as scheduled due to the shutdown. In addition to the usual monthly payrolls and unemployment data, the January report is expected to show a downward revision on job growth in the year through March 2025. House Speaker Mike Johnson has said he hopes the continuing funding measure to reopen agencies will be passed later today. Okay, let's talk more about the U.S. economy and broader markets. Happy to say that joining me right now is Stephen Major, Global Macro Advisor at Tradition Dubai. There is a lot going on, a lot of volatility. I read your most recent notes. I quite enjoyed the description of the Overton window moving, because you talk about volatility spiking and then it fading. Today's a good example of that. Yeah. And sort of the market moves on. Yeah. And it feels as though really our tolerance and our acceptance of all of the deluge of headlines that come through has shifted. It's a lot higher than it used to be in the past.
Well, you've understood it then. You understood the paper, because the point is we are becoming used to this, and so every Monday morning we have a conversation about things that you couldn't even imagine a year or so ago. I mean, who would have guessed that you'd have Greenland or Venezuela as being the center of attention?
Yeah.
It was plausible to imagine that Japan could be important, but then did we know that we'd have these sort of outsized moves in the bond market? Who would have forecast gold doing what it did? So this volatility becomes normalized, and therefore it becomes very difficult to have a shock. And that,
or a sustained shock.
A sustained shock, yeah. But the thing is that to make money in markets, you need things to happen that weren't expected, almost by definition. And so we're talking about fat tails of a distribution. What I'm saying is something has to happen that nobody is talking about or expecting. Well, what we've done is we've moved the range of things that we can talk about and expect. Yeah. and that I think it has explained some of the low volatility that we've had.
You know, your roots obviously fixed income, broad macro, and for so long the game in town was financial repression because central banks' balance sheets got so large. Yeah. Now you've got a new sheriff. You've got Kevin Warsh, and he's explicitly talked about the fact that the Fed's balance sheet is too big. Yeah. Should investors have to start reassessing the outlook based on the view that, you know, in the past the Fed would always have your back? It might not be there anymore.
Oh, you're quite right. We can all study the history of the speeches, and so we get an idea of what the playbook might look like if he is appointed. I'm just going to stress that.
Yeah.
There was some strong critique after the financial crisis, and so we know the balance sheet position, but it is a bit more complicated about the concept of the accord with the Treasury and how that evolves through time. So put it this way: regardless of who the governor of the central bank is, the Treasury has been taking more authority since Janet Yellen. Mm-hmm. So surveys started back then about buybacks. We have the buybacks now. So the Treasury is actually involved. The idea of yield curve control and trying to control the term premium, stopping those long yields go up, it isn't just about the Fed. It's also about what the Treasury is doing, right? So of course, the two are going to work together. They always have. So I think it's dangerous if we assume that Mr. Walsh, if he gets this appointment, will do a certain thing. I think we can see that rates are going to come down, and I think it's a fairly good assumption that he wouldn't have got he wouldn't be considered for the role unless he was in the rate-cutting camp. I think I can assume that. Reasonable enough.
Yeah. So I mean, there are a couple of rate cuts priced in for this year.
A couple of priced in, but it looks more. We could have 4 or 5 rather than 2. That, I think, is the possibility that markets are sniffing around.
Okay. What is your view on the steepener trade? I mean, everyone seems to be in that
don't
trade.
Like it.
Why don't you like it?
I've never really liked it. And again, if you
it's done well. It's worked.
It depends which part of the curve, Drummer, because if you had it in the front end, 2s, 5s, 2s, 10s, it would have been okay, but not 10s, 30s. Much of the time it's in a range. And also you have to think about the cost of financing the trade. You have to buy 4 times as many 2s as you do 10s. So who actually makes money out of this? I think if you're so sure that front-end yields are going to go down and you think the curve's going to steepen, just buy the market. Just be long, right? Yeah. So I'm not convinced about the steepener. I think that there's a better trade to just go long into the belly of the curve, for example, and play the roll down.
How closely are you watching the price action in JGBs to determine where the rest of global yields?
Well, I'm trying to ignore it. There you go, because I think that the price action is informing the narrative, and that can be confusing. This idea of losing control and what have you, and the price action has been crazy. So. I think that if you take a step back and look at where yields are, forward yields, for example, you can receive Japan, you can buy Japan fixed income at levels that we haven't seen, and it compares favorably with other markets. You can hedge the currency in the forwards because the rate is so low. So actually, it's becoming quite compelling. Look, it's a very brave thing to say, but I think we've got to the point where we could be oversold in Japan, and also I think it's in the US's favor to try and stabilize things a bit.
Yeah,
you can think about that as well.
Yeah, so I'm going to, of course, with knock-on effects, I'm going to bring it back to the beginning of our discussion. Yeah. What do you think is the most underpriced risk out there right now?
Well, I suspect it's the overvaluation in some of the risky assets, and I have to come back to the S&P 500, which seems to have been gliding through much of this, and there's been the huge rotation. I think this assumption that we can maintain these valuations so disconnected to the real economy. This is what worries me, is the overall picture of financial assets moving so far away from the real economy. That's been going on for a while. And look, it's not going to happen this week. And by definition, this kind of thing you can't forecast. This is what I'm trying to say. So I think it's in the valuation of the stock market. Yeah. And I start comparing, say, stocks to credit, for example, in fixed income. Now, surely we must get to the point whereby investors will think about rotating from equities into credit because of the valuation play. They want to secure the income stream through time. So look at maybe bank stocks versus certain bank bonds, for example. So I'm looking at things like that, and just I can't believe that this has been going on, and it's so if I look at the risk, it's the overall level of valuation that has been underpinned by all kinds of forces through time, and now this rotation. To me, that's the big risk.
Yeah, Stephen, always good to chat to you.
Thank you.
Thank you so much for coming on, Stephen Major, Global Macro Advisor at Tradition Dubai. Coming up, U.S. and Iranian officials are expected to meet for talks in the coming days over a new nuclear deal. More details on that next. This is Bloomberg.
So as a lead sponsor of the Indian cricket team and with World Cup T20 around the corner, what's the reason behind the strategic partnership?
Well, obviously the brand recognition and the reach into the rural markets of India. To increase our distribution network in the rural market is our main objective, whereby we'll get increased revenues and EBITDA margins. The trust that the Indian cricket team has from the Indian nation, that's the trust that Apollo brings on the table.
So as a lead sponsor of the Indian cricket team and with World Cup T20 around the corner, what's the reason behind the strategic partnership?
Well, obviously the brand recognition and the reach into the rural markets of India. To increase our distribution network in the rural market is our main objective, whereby we'll get increased revenues and EBITDA margins. The trust that the Indian cricket team has from the Indian nation, that's the trust that Apollo brings on the table.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. President Trump says the U.S. will reduce tariffs on India to 18% after Prime Minister Narendra Modi agreed to stop buying Russian oil. Bloomberg economy and trade reporter Shruti Srivastava joins us now from New Delhi. Well, presumably this is good news for India. What's been the reaction today?
Oh, the reactions have been very positive. This is indeed a huge win for both India and the Indian government led by Prime Minister Narendra Modi, which has been battling negative sentiments through the last year because of high tariffs. India had projected that it will grow by as much as 7.2% in the new financial year, which starts in April. But Chief Economic Advisor just told Bloomberg TV that that projection might go as high as 7.4%, which will retain India's status of, being the fastest major growing economy in the world. The capital outflows, which we were seeing in the past few months, the high rupee volatility, which we were seeing in the last few months, it has been one of the worst performing currency in Asia. All these asset classes are likely to benefit because of the India-US deal that Trump announced on Truth Social yesterday. The labor-intensive sectors, which have been buffeted by 50% high tariffs, they are also expected to gain out of this deal.
Way to go before it becomes like really, easy enough that it's really scary.
And I think that's really useful because you help us paint that picture that this isn't about throwing an AI at a problem and suddenly solving a question that we couldn't solve before, but it is about speeding up the process that is involved in trying to answer that question. And I think that's really useful exactly to keep in mind, right? And that's what we're talking about almost with bioweapons. Like it's all part of that same argument that we have so much to do. AI just helps us get through some of that stuff, not actually solve the problems.
It helps us get through it, and it will help us get through it much faster. Building an AI scientist will not just help science, it will help AI also.
What is the next frontier?
The next frontier after the AI scientist.
Yeah, after you solve all this AI scientist related stuff, which sounds like a walk in the park. So
yeah, we'll be, check back in a few days. We'll probably have finished it, right? Accelerating discovery research, after we have access to an AI scientist that will make science move much faster, we need to understand how fundamental biology works so that we can cure diseases. And, I'm hopeful that there are many, many diseases that we currently struggle with that we will have treatments for or cures for in our lifetimes by virtue of the acceleration that will come from, from combining AI, from bringing AI into science. So that's thing number one. And then thing number two is on the other side, once we have an AI scientist and people are able to benefit from access to that expertise, I really hope that the quality of medical care, for example, will get much, much better worldwide.
Sam, thank you so much for joining us.
Thank you. This was great.
Bakker, thank you so much for joining us.
Great to be here with both of you.
So you're President Biden's scientific advisor, and you also lead the Office of Science and Technology. You also spent a lot of time at DARPA, which is the federal agency that developed technology like GPS and the foundations of the internet. Many people don't know that. And that's because government today isn't exactly known for being at the cutting edge of technology. Can the rise in AI mark a change in that, where government plays a bigger role in driving innovation versus playing catch up to the private companies that are developing it?
Well, AI is changing a lot of things right now, and that's why President Biden's been extremely clear that it's one of the greatest opportunities of our times, and it's going to come with risks that we have to manage. And the work that's underway, the White House has been driving a lot of forward action here in this area. That work is about managing risks, but it's also about seizing the opportunities. And some of those big opportunities from AI are about the research that continues to be funded by the federal government.
So do you think that government can be a driver of innovation in this new age of AI versus just relying on private tech companies to come up with that technology?
Well, we're seeing a surge, and we're very happy that that surge in AI technology has come from American companies. It builds on the shoulders of many, many, many decades of publicly funded R&D, and now what the companies are doing on top of that. So I very much see it as a system where all the pieces have to work together. I spent half of my professional life in public service, but the other half in commercial technology, and every big thing this country has ever done has taken all of us, and that's certainly going to be true for seizing these opportunities from AI as well.
What are some of the moonshots that the U.S. government is currently working on that could incorporate AI in advancing them?
President Biden likes to talk about this being the only country in the world that can be defined in a single word, and that word is possibilities, and that's what science and technology is all about. So I'll mention a couple of areas. One very important area of focus is changing health outcomes. And in this area, the President and the First Lady last year reignited their cancer moonshot. It set an extremely aggressive goal of cutting the age-adjusted cancer death rate by half over the next 25 years. That's about double the rate of progress that we've been making on cancer. The other goal that went with that is to change the experience of people and their caregivers and their families as they are all going through this cancer experience. And if you think about it, who isn't touched by cancer? This is one of the most foundational things, and an area where everyone in this country can pull together for a moonshot goal that really, really matters. Well, how are we going to do that? Well, to do that, we need to prevent more cancers. We need to detect more cancers quickly so that they can be caught. And we need better treatments for when cancer does move forward. And in every one of those areas, from public health to developing new drugs to tailoring clinical care for an individual, every one of those is an opportunity for AI to help accelerate progress in some very dramatic ways. So that's one huge example. I could tell you a similar story about dealing with all the effects of climate change as they're coming, modeling extreme weather and helping the country be more prepared for resilience.
Could you expand a little bit on your outlook on how that could be achieved?
Well, let's step back for a minute. What these AI systems are so powerful that they can seem magical, but really what they are doing is statistics at an extraordinary scale. So large language models that led to chatbots are about training these systems on human language so that they can build statistical estimates of answers to your prompts. When you're thinking about something like weather, that's another very, very, very complex system. Think about how huge the atmosphere is that surrounds the world. Think about how complex the calculations are when we run simulations to try to estimate how the weather will progress in the short term. And then think about how hard that problem is when we're thinking about climate effects over many years and many decades. That is the complexity that AI helps wrangle because of this new approach of training a computer on a lot of data so that it can build better estimates of what could happen in the future. And harnessing that power is going to lead to some very practical advances, we think, in both understanding weather better, but also understanding long-term climate effects. That's what's going to help us be more prepared and more able to deal with what's coming.
And obviously the US is a huge key driver in developing AI technologies, but I'm curious, as a non-US citizen, who do you see elsewhere in the world doing interesting things?
Well, this is a global technology. First of all, again, AI, it seems like magic, but it really is human beings and corporations that are building compute, that are training it on data. They're using algorithms that are developed in research communities and widely shared. And so the ability to build AI of various sorts, it happens around the world. And in fact, I think that's good because there's so many applications globally that we'll want to pursue. But of course, it does mean that it really comes back to the question of what kind of a future we're going to build. And, if you think about it, it's such a powerful force right now. Every country around the world is using AI to build a future that expresses their own values. And I think this is why it is so important that like-minded countries with democratic values and norms come together and agree about how we're going to build the rules of the road for AI.
You're advising President Biden on this new age of artificial intelligence. How is the Biden-Harris administration thinking about AI?
The starting point for this administration is what the president talks about every time he talks about AI. He sees its power and its potential. And every time he talks about it, you can hear his optimism about all the things that it's going to bring. And he's very clear-eyed that that doesn't come for free and that managing its risks has to go hand in hand with it. President Biden frequently talks about the fact that we're at a pivotal moment in history in which the choices that we make in the next few years are going to shape many, many decades ahead. AI for him is very much part of this moment. And that's why you've seen this administration move out so actively with urgency, starting by listening to all kinds of communities. We talked about the work that we've done with industry, but also we've had very active engagement with civil society.
Dr. Prabhakar, thank you so much for joining us.
It was a pleasure. Thanks for having me.
Anima and Kumar, thank you so much for joining us. So you're a professor at Caltech and you're senior director of AI research at NVIDIA.
Which actually makes you the perfect person to answer a question that we've had, which is, really broadly, how is AI changing, or has it been changing the scientific process over the last couple of years? Let's begin with that.
Yeah, this is such an exciting time. Thank you for having me on this show. And, the world has seen ChatGPT and the power of AI when it comes to language models. But to me, that's just the beginning, because beyond language, we can think of all kinds of scientific processes. And by understanding that through AI, we can do everything better, faster, cheaper, more accurate, and really be able to come up with new inventions and discoveries.
Let's dig into that. What does an AI-enabled lab look like?
Yeah, to me, like AI will completely transform the scientific workflow the way we know it. Ever since the 17th century or even earlier, the way we came up with new inventions or discoveries was somebody has some intuitions, right? They went to the lab, they tinkered, they're like, oh no, this doesn't work. And okay, this works, let's move ahead.
Trial and error.
Right? Exactly. And now think about AI being able to do that in the virtual domain, like being able to accurately simulate many of the processes or learn from data, right? The observations directly. And with that, be able to come up with better design, better discoveries than what would have taken really long in the real world.
What's changing the most right now? When you look at the landscape, is there any particular field that you see evolving much more quickly than any other field?
One thing that we're working on heavily is the Earth-2 project at NVIDIA, where our goal is to build very accurate digital twins of this planet. Be able to predict not only short-term weather, but also long-term climate change eventually.
The digital twin of the Earth, what is being twinned?
Yeah, all the processes on this planet. Think of like the atmospheric processes of convection currents, storms, right? Even really like fine scale features of cloud turbulence, what's responsible for hurricanes, for instance, how would this hurricane paths change, and can we come up with the right risk assessment? Because these are chaotic systems. These hurricanes can go in so many different ways. Can we really hone in on what is the risk to different human populations based on what we see today? So these cheaper and faster weather forecasts with AI will also enable us to create better probabilistic assessment of extreme weather events.
Let's talk about some of the other fields that AI is making transformations in the scientific process. For example, genomics or even drug discovery. What's going on there?
Oh, it's such an exciting time there because, the same kind of generative AI that we see for language, you can replace the letters of the English alphabet instead with nucleotides. ATGC, if you recall, what makes up our DNA, right? And with that letters, you can now ask the language of the genome and have a model learn that.
So if there are tasks that artificial intelligence can make more efficient or even replace humans in a lab, what's kind of the vibe in the scientific community? Is there as much fear as there is in other industries that AI could take their jobs?
I don't think it'll happen anytime soon, and maybe never, because humans are such creative beings, right? We're always thinking of the, next unknown question, right? There's so many deep mysteries of the universe. There's so much we still need to understand, and AI is a tool. This will enable lab scientists to rule out a lot in simulation before they can go and do their experiments. So they only need to do a few. But then I feel like there'll be always things that'll be still unknown and to be conquered.
There's a lot of, I don't want to use an unpleasant word, but there are a lot of people who don't believe in things like climate change. And there are a lot of skeptics who believe that science is out to get them, or that, we're all just sitting here lying. Is there work being done that you think could actually win over some of these skeptics? Is there a way to demonstrably show them?
Yeah, I do think all the work we're doing will help towards this, because, this is not some model that's in some supercomputing facility, right? Not available to the public. You can download this and go try some of this yourself. Just like a video game, you can play the game of climate change one day, right?
Quantum physics.
So everything becomes accessible. At least my hope is, chunk of the community that is curious will have resources online that is much more open, so they feel like they can participate in that.
If you think about the scientific journey that humanity's been on over the last 300 years, it's been quite good. Just take us 10 years from now. Like, how different will things be?
I think the whole process of scientific research and development will be accelerated many, many times, right? Even orders of magnitude in some areas. And that'll just mean that we can quickly rule out things that don't work and hone in on things that work. Certainly, drugs designed by AI, they're already coming into trials, and that'll just increase fully. Personalized medicine for cancer and all of these, where we really haven't been able to understand, right, for various different targets, how to quickly design drugs. This can make it much faster and also cheaper, because right now so many of these treatments are too expensive to be done at scale. So it'll make this democratized and cheaper. And yeah, I think this will hit every area. I don't think any area is immune to this.
I think it will be interesting, won't it? 10 years' time, if it takes the average drug 10 years to come to market, and if AI systems right now are coming up with some of the potential candidates for a future successful drug, then in 10 years' time, are we going to see a waterfall of new drugs?
I mean, it may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
actually work.
Exactly, effective.
Thanks so much for joining us.
Thank you.
Thank
it's been
you, Maud.
fascinating. Yeah. Thank you for taking the time.
Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have, sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are, equally creative, and they've been able to take, tools and ideas that are available both in open source and the academic literature and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. There's, without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
Now, we're talking about superpowers, Clash of the Titans sort of stuff. It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy, we're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US, I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
what could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, it's talent that drives, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, it's still really important to be physically proximate to other people who, are working with you in the office. I mean, I think that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? China restricted gallium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. We're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, can you tell, because we're all friends here.
Sure, go for it.
Do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years' time, those kinds of AIs are set loose on the open web in, a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner. Thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors, but what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from U.S. sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the U.S. really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, U.S. policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, I mean, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
How does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is just very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's not the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China, in terms of what you're saying.
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to opt in to different uses. Of course, in China, there's always the exception, unless the security services think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks bounce back from their worst sell-off in more than 2 months as a rebound in gold and silver helps calm markets after Monday's volatility. President Trump announces the U.S. will slash tariffs on India to 18% after Prime Minister Modi agrees to stop buying Russian oil. And oil slides as U.S. and Iranian officials plan to discuss a new nuclear deal this week. But Trump warns that bad things would happen if they can't come to an agreement. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Bersetchi in Dubai. Well, volatility, that's the theme of the last couple of days. And what we're seeing this morning is a complete reverse of what we had yesterday. There is green on the screen. The handover from Wall Street was pretty positive as well today. You can see right behind me, the handover from Asia Pacific. Asian equities up 2.7%. So Kospi, which was one of the biggest laggards yesterday, is actually up about 5% this morning. So maybe it's all just a bad dream. We'll talk more about that throughout the rest of the show. S&P futures above 7,000, about 0.3% firmer this morning. We had strong ISM manufacturing data come through from the U.S. yesterday, the strongest level since 2022. So that gave a bit of a boost to equities. And also in after hours, a lot of focus on Palantir. The stock is trading quite well in extended trading. So again, that's giving a bit of a boost to the tech sector this morning. Gold, take a look here. We are actually stabilizing 3.3% after the massive sell-off we saw on Friday and on Monday. It seems as though the 50-day moving average has actually held for both gold and silver. Silver also rebounding today. We're back above $80 per ounce. So let's see whether this holds. But at least some of that massive shakeout that we had the last couple of days seems to have subsided for now. We will talk more about commodities later on in the show. And then Brent, keeping a close eye there on the price action. We are down a little bit this morning, down about 0.4%. Of course, yesterday we did have a massive drop on back of news that the diplomatic channel between U.S. and Iran is being worked on, and there is a potential meeting coming up towards the end of this week with Iranian officials and the U.S. in Turkey. So something to think about there. We're down about 0.3%. But let's go back and talk about markets. Min Lo is with us in Hong Kong for us. Min, I know with the exception specifically of the Hang Seng Tech Index, for the most part, the handover has been positive.
Yeah, it's been a good day for Asia. We certainly are seeing stocks rebounding after the sell-off yesterday. But I just want to focus on the Aussie market, which just closed a couple of minutes ago. We have the RBA raising key interest rates by 25 basis points. The first central bank to start that hiking cycle this year. The RBA sees inflation, growth, and employment all remaining elevated this year. So pretty hawkish comments there. It also raised its forecast for inflation this year by about 50 basis points. So you can see here the Aussie dollar gaining about 1% against the US dollar. The stocks gaining as well, but we're seeing a sell-off in the bonds market. And analysts expecting that sell-off could continue. Maybe that 5% handle could be in sight by the end of the year. But flip the board, another currency that is gaining in Asia is, of course, the Indian currency. A lot of relief for this currency, which has taken a beating the past year. Long-awaited trade truce with the United States, which is cutting the reciprocal tariffs from 25% to 18%, and also removing the additional 25% punitive tariffs that are meant to punish India for purchasing oil from Russia. So you can see the stocks and the currency all gaining as a result. Jumana.
Yeah, so many stories coming through from Asia this morning. And also would just point out to our viewers that the Kospi is now up almost 6%, 5.7% higher today in trading. Also very strong handover from the Nikkei, up 4% as well. So a very bullish handover. Min Lo in Hong Kong, thank you. Well, President Trump is pushing House Republicans to accept the deal he struck with Democrats to end the partial government shutdown. In a post on Truth Social, Trump told lawmakers to swiftly pass the measure with no changes. The bill would fund most agencies through September and the Department of Homeland Security through February the 13th, preserving funding for immigration raids while both parties negotiate changes to enforcement policies. The U.S. Bureau of Labor Statistics, the BLS, will not release the January jobs report this Friday as scheduled due to the shutdown. In addition to the usual monthly payrolls and unemployment data, the January report is expected to show a downward revision on job growth in the year through March 2025. House Speaker Mike Johnson has said he hopes the continuing funding measure to reopen agencies will be passed later today. Okay, let's talk more about the U.S. economy and broader markets. Happy to say that joining me right now is Stephen Major, Global Macro Advisor at Tradition Dubai. There is a lot going on, a lot of volatility. I read your most recent notes. I quite enjoyed the description of the Overton window moving, because you talk about volatility spiking and then it fading. Today's a good example of that. Yeah. And sort of the market moves on. Yeah. And it feels as though really our tolerance and our acceptance of all of the deluge of headlines that come through has shifted. It's a lot higher than it used to be in the past.
Well, you've understood it then. You understood the paper, because the point is we are becoming used to this. And so every Monday morning we have a conversation about things that you couldn't even imagine a year or so ago. I mean, who would have guessed that you'd have Greenland or Venezuela as being the center of attention.
Yeah.
It was plausible to imagine that Japan could be important, but then did we know that we'd have these sort of outsized moves in the bond market? Who would have forecast gold doing what it did? So this volatility becomes normalized, and therefore it becomes very difficult to have a shock. And that,
or a sustained shock.
A sustained shock, yeah. But the thing is that to make money in markets, you need things to happen that weren't expected, almost by definition. And so we're talking about fat tails of a distribution. What I'm saying is something has to happen that nobody is talking about or expecting. But what we've done is we've moved the range of things that we can talk about and expect. Yeah. and that I think it has explained some of the low volatility that we've had.
You know, your roots obviously fixed income, broad macro, and for so long the game in town was financial repression because central banks' balance sheets got so large. Now you've got a new sheriff. You've got Kevin Warsh, and he's explicitly talked about the fact that the Fed's balance sheet is too big. Should investors have to start reassessing the outlook based on the view that, you know, in the past the Fed would always have your back? It might not be there anymore.
Oh, you're quite right. We can all study the history of the speeches, and so we get an idea of what the playbook might look like if he is appointed. I'm just going to stress that.
Yeah.
There was some strong critique after the financial crisis, and so we know the balance sheet position. But it is a bit more complicated about the concept of the accord with the Treasury and how that evolves through time. So put it this way, regardless of who the governor of the central bank is, the Treasury has been taking more authority since Janet Yellen. Mm-hmm. So surveys started back then about buybacks. We have the buybacks now. So the Treasury is actually involved. The idea of yield curve control and trying to control the term premium, stopping those long yields go up, it isn't just about the Fed. It's also about what the Treasury is doing, right? So of course, the two are going to work together. They always have. So I think it's dangerous if we assume that Mr. Walsh, if he gets this appointment, will do a certain thing. I think we can see that rates are going to come down, and I think it's a fairly good assumption that he wouldn't have got or he wouldn't be considered for the role unless he was in the rate cutting camp. I think I can assume that.
Yeah.
Reasonable enough.
Yeah.
So
I mean, there are a couple of rate cuts priced in for this year.
A couple
anyway.
of priced in, but it looks more. We could have 4 or 5 rather than 2. That, I think, is the possibility that markets are sniffing around.
Okay. What is your view on the steepener trade? I mean, everyone seems to be in that
Don't
trade.
like it.
Why don't you like it?
I've never really liked it. And again, if you
But
look,
it's done well.
well,
it's worked.
It depends which part of the curve, Jemima, because if you had it in the front end, 2s, 5s, 2s, 10s, it would have been okay, but not 10s, 30s. Much of the time it's in a range. And also you have to think about the cost of financing the trade. You have to buy 4 times as many 2s as you do 10s. So who actually makes money out of this? I think if you're so sure that front end yields are going to go down and you think the curve's going to steepen, just buy the market. Just be long, right? Yeah. So I'm not convinced about the steepener. I think that there's a better trade to just go long into the belly of the curve, for example, and play the roll down.
How closely are you watching the price action in JGBs to determine where the rest of global yields?
Well, I'm trying to ignore it. There you go, because I think that the price action is informing the narrative. And that can be confusing. This idea of losing control and what have you. And the price action has been crazy. So I think that if you take a step back and look at where yields are, forward yields, for example, you can receive Japan, you can buy Japan fixed income at levels that we haven't seen, and it compares favorably with other markets. You can hedge the currency in the forwards because the rate is so low. So actually, it's becoming quite compelling. Look, it's a very brave thing to say, but I think we've got to the point where we could be oversold in Japan, and also I think it's in the US's favour to try and stabilise things a bit.
Yeah,
right? You can think about that as well. Right?
Yeah, so I'm going to, of course, as with knock-on effects, I'm going to bring it back to the beginning of our discussion.
Yeah.
What do you think is the most underpriced risk out there right now?
Well, I suspect it's the overvaluation in some of the risky assets, and I have to come back to the S&P 500, which seems to have been gliding through much of this, and there's been the huge rotation. I think this assumption that we can maintain these valuations so disconnected to the real economy. This is what worries me, is the overall picture of financial assets moving so far away from the real economy. That's been going on for a while. And look, it's not going to happen this week. And by definition, this kind of thing you can't forecast. This is what I'm trying to say. So I think it's in the valuation of the stock market. Yeah. And I start comparing, say, stocks to credit, for example, in fixed income. Now, surely we must get to the point whereby investors will think about rotating from equities into credit because of the valuation play. They want to secure the income stream through time. So look at maybe bank stocks versus certain bank bonds, for example. So I'm looking at things like that, and just I can't believe that this has been going on, and so if I look at the risk, it's the overall level of valuation that has been underpinned by all kinds of forces through time, and now this rotation. To me, that's the big risk.
Yeah. Stephen, always good to chat to you.
Thank you.
Thank you so much for coming on. Stephen Major, Global Macro Advisor at Tradition Dubai. Coming up, U.S. and Iranian officials are expected to meet for talks in the coming days over a new nuclear deal. More details on that next. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. President Trump says the U.S. will reduce tariffs on India to 18% after Prime Minister Narendra Modi agreed to stop buying Russian oil. Bloomberg economy and trade reporter Shruti Srivastava joins us now from New Delhi. Well, presumably this is good news for India. What's been the reaction today?
Oh, the reactions have been very positive. This is indeed a huge win for both India and the Indian government led by Prime Minister Narendra Modi, which has been battling negative sentiments through the last year because of high tariffs. India had projected that it will grow by as much as 7.2% in the new financial year, which starts in April. But Chief Economic Advisor just told Bloomberg TV that that projection might go as high as 7.4%, which will retain India's status of being the fastest major growing economy in the world. The capital outflows which we were seeing in the past few months, the high rupee volatility which we were seeing in the last few months, it has has been one of the worst performing currency in Asia. All these asset classes are likely to benefit because of the India-US deal that Trump announced on Truth Social yesterday. The labor-intensive sectors, which have been buffeted by 50% high tariffs, they are also expected to gain out of this deal.
So here's what's interesting. Trump said that India has agreed to stop buying Russian oil. But last week, Bloomberg actually sat down with the Indian oil minister, who said that India continues to buy Russian oil, albeit at a slower pace. What do we know about what exactly they agreed to?
Now, that's where the confusion lies. We still don't have clarity on what the two sides have agreed beyond what Trump posted on Truth Social. While we do know that India has given purchase commitments of $500 billion to be invested in technology, energy, precious metal, etc. And it has also agreed, as per Trump's social media post, to reduce all its duties to zero. There are very few details which are coming from the Indian side. We have no clarity whether India has actually agreed to stop buying Russian oil. So we'll have to wait for more details from the Indian side before we come to any conclusion on that.
Shruti, thank you so much for breaking it down for us. No doubt, though, the headline positive for Indian markets today. Shruti Srivastava, Bloomberg economy and trade reporter. Well, oil is falling again this morning, marginally so, as tensions ease, with U.S. President Trump saying he expects talks with Iran over a new nuclear deal in the coming days.
Right now, we're talking to them. We're talking to Iran. And if we can work something out, that'd be great. And if we can't, probably bad things would happen.
For more on this, we're joined by Stuart Livingstone-Wallace, our executive editor for MENA and Russia. Stuart, looks like the talks actually are going ahead this week. What do we know about them?
Yeah, well, we don't know who's showing up, number one. We think it might be Witkoff. We think it might be the Iranian foreign minister. But we don't know where, and we don't know when, and nor do we know really what's on the agenda beyond nuclear.
We do know what's happening.
What is nuclear exactly? Is that nuclear weapons? Is that nuclear enrichment? Is that the highly enriched uranium stockpiles that they have, with several hundred kilos of those, and where do they go? So there's lots of speculation about what it might be, but at least for now, it looks like there will be talks.
Okay, so here's the interesting thing. You say nuclear, and they want to talk about nuclear.
Right.
Our understanding was that the Trump administration, based on various reporting, was pushing for a more comprehensive deal that didn't just cover nuclear, but also covered the ballistic weapons stockpile that Iran was sitting on and their funding of various proxies around the region. Do we understand now that perhaps the Trump administration is going for a more sequential approach in order to bring Iran to the table?
Yeah, possibly. Again, we're guessing here. We don't know. So, yes, I mean, the expectation, you would presume, would be, yes, you can deal with the nuclear file. That is, in itself, a hugely complicated process. But unless you're addressing the ballistic missile production, unless you're addressing the proxies, you're going to end up right back at square one, which is what we've seen in the last several years, where you have this sort of ongoing conflict or series of conflicts across the region. So unless those are addressed, you don't fix the Iran problem.
What role are Arab nations playing in bringing Iran to the table?
I mean, it looks like there have been just about all of them, this flurry of diplomatic activity, most of it behind closed doors. You know, we're getting whispers and glimpses here and there of what's going on, but it's absolutely clear that the message from them is, let's try the diplomatic tact first, because they know just what's at stake. And you saw the Supreme Leader come out yesterday and say, if you attack us, this will probably lead to a regional war. And I think that fairly reflects exactly what the Arab leaders are worrying about.
Yeah, I just wonder what's different this time around from last time around, because we've been here before. The U.S. have tried to enter into negotiations with Iran, and they were steadfast in their pushback on specifically on enrichment, low-level enrichment. What has changed?
I mean, I think two key things that changed. Number one, those protests that we saw at the end of December and into January, you know, and then the impact that had across the country. And, you know, the fact that that was caused by this basically an economic meltdown, which is still going on, and there's really no escape for them unless they can get some sanctions relief. And then number two, their proxy militias across the region are heavily degraded or disappeared altogether. Yeah. So Iran is in a very weak position.
Probably top of mind, though, as they have said, is sanctions relief. Stuart, thank you so much. Stuart Livingstone-Wallace, our executive editor for MENA and Russia. And as we just discussed, despite easing tensions, some of the LNG industry's biggest companies are skipping a key conference in Qatar this year. That's as worries mount that simmering U.S.-Iran tensions could still erupt into a regional conflict. Several buyers from Japan, the world's second largest LNG importer, are opting not to take part because of safety concerns. All right, coming up, taking AI to the stars. Elon Musk will combine SpaceX with xAI as he looks to fuel his costly ambitions in artificial intelligence and space exploration. We'll have the details next. This is Bloomberg.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Horizon's Middle East and Africa. I'm Jumana Bersetchi in Dubai. Elon Musk's SpaceX has acquired his artificial intelligence startup xAI ahead of a planned IPO set to value the combination at more than $8 trillion. The deal was announced in a statement on SpaceX's website, confirming our earlier scoop. For more, let's bring in our Asia tech correspondent, Annabelle Jewelers. Annabelle, well, interesting to see that this tie-up has gone ahead, especially because SpaceX is considered to be the crown jewels of the operation. What do we know?
Yeah, that's it. I mean, it's sort of combining what's really been one of the best performing of Elon Musk startups with a company as well that's got a very high cash burn rate of around $1 billion a month. So it is an interesting sort of combination, but at the same time, it really speaks to Elon Musk's overall vision, which is essentially to dominate both AI and also space exploration. So there was a statement that was actually shared with employees on this, confirming some of our earlier reporting, but essentially he's saying that the acquisition forms the most ambitious, vertically integrated innovation engine on and off Earth. So the goal here is about bringing together AI, it's about bringing together rockets, space-based internet, a lot more. But talking about the financials, because this part actually wasn't confirmed in that employee memo, but what we've heard from sources close to the matter is that it's going to be a valuation of around $1.25 trillion. So a trillion of that rather is SpaceX, $250 billion is xAI, and the company as well still looking ahead possibly to a listing later this year.
Yeah, as we originally had been reporting. How has Elon Musk explained the rationale for the deal?
Well, I think it really speaks to his vision of the best way to do AI computation, and that is, in his view, within the next 2 to 3 years, is by going into orbit. Because when you put data centers into space, there are some advantages, and the main ones that people talk about is essentially you've got access to a cheaper energy. You've, of course, got a lot more space to do this as well in terms of physical space. But it is something that also has a lot of challenges, a lot of engineering challenges, like figuring out how to launch, maintain massive solar panels, protect electronics from cosmic rays. I mean, that is some of the issues, but certainly it is a vision that not just Elon Musk has. There's several companies as well that are competing to put data centers into space. But that is, I mean, Elon Musk is one of those people that sees that this is where it's headed, and that explains the overall rationale for combining the two businesses.
Asia Tech correspondent Annabelle Jewelers, thank you so much for bringing us a big corporate story overnight. Well, China is banning concealed door handles on electric vehicles, becoming the first country to outlaw a design originally made popular by none other than Tesla. It follows several high-profile incidents, including 2 fiery Xiaomi EV crashes in China, where power failures were suspected of preventing doors from opening. The new safety rules will require vehicles sold in China to have mechanical release both inside and outside. They take effect on January the 1st of next year. And I will be speaking to BYD's Executive Vice President Stella Li next hour from the World Government Summit here in Dubai. So don't miss that conversation at 10:40 across the Emirates, 6:40 if you're watching in London. Before we go to break, I want to take a look at how some of the key commodities are faring, particularly gold and silver. We are seeing things actually stabilize this morning. We're taking a look at the rebound in precious metals with George Chevalier from 91. That's coming up next. This is Bloomberg.
Crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks bounce back from their worst sell-off in more than 2 months as a rebound in gold and silver helps calm markets after Monday's volatility. President Trump announces the U.S. will slash tariffs on India to 18% after Prime Minister Modi agrees to stop buying Russian oil. And oil slides as U.S. and Iranian officials plan to discuss a new nuclear deal this week. But Trump warns that bad things would happen if they can't come to an agreement. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersechi in Dubai. The theme overnight is green and stabilization. Let's see how long that lasts for. A very strong handover from Asia Pacific, though, as you can see behind me. MSCI Asia Pacific up 2.8%. Some really stellar gains, the likes of the Nikkei, Kospi, the laggard yesterday. Today is up almost 6% today in trading. So what went down yesterday is going up a lot this morning. Handover very positive there. S&P futures, you can see, tilted towards positive as well, up 0.2%. We're trading through 7,000. Strong ISM manufacturing data coming through yesterday. And of course, don't forget, we're still gearing up for a really big earnings week. Today, on the chip maker side of things, we're watching out for AMD. So for anyone involved in the AI space, something to watch out for in earnings there. Gold, take a look at gold. We are stabilizing this morning, up 3.6% after a lot of volatility on Friday and Monday. We're still down, though, to 4,800, and of course still positive for the year. The question is whether this actually is stabilization. We're holding above that 50-day moving average, but is it going to continue? We're also seeing some stabilization in silver this morning as well. So some calm prevailing in precious metals. We will talk more about that with our guest in just a few moments. And then Brent down, sliding a little bit this morning, down 0.6% after yesterday's more than 4 or 5% declines. This is all geopolitical premium as we talk about the U.S. and Iran engaging in indirect or possibly direct, we don't have a lot of details at this point, discussions around a potential nuclear deal towards the end of this week. So we're going to keep a track of that and whether these discussions actually yield to anything. But let's talk more about all of the price action in Asia. There's a lot going on today with these stocks, with the big rebound we've seen, with the RBA. Min Lo is in Hong Kong for us.
Hey, Jumana, the winds are behind the sails in Asia today. Take a look at the screen. All green here. Huge rebound. The Kospi and the Nikkei both have erased the losses yesterday. A couple of tailwinds at work here. We have the U.S. manufacturing data expanding. We have the precious metal space also rebounding there. So all of that injecting some calm into the market. And take a look at Samsung at one point hitting above 10%. Samsung and SK Hynix combined now have a market cap that has surpassed the two top Chinese tech companies, Alibaba and Tencent combined. And it shows you that the focus of AI investment has really shifted towards infrastructure and some of these Korean chip makers that are at the center of that supply chain. But in China, though, it's a completely different story. Hang Seng Tech has fallen 20% below its October peak, continuing to extend declines by 1.2%. You can see here big drops across some of these tech names, Kuaishou down by close to 5%. That's after the Chinese government hiked the VAT tax rates for the telcos from 6 to 9%. And the fear is that these tech companies could be hit by the additional taxes next. But that's still speculation at the moment. But we're seeing the market moves here. We're also checking some of the mining stocks in Asia because the U.S. has decided to start Project Vault. That's a critical minerals fund or stockpile similar to an oil stockpile to reduce dependence on China and protect companies against wild swings in materials prices. And here you can see huge gains in some of these mining stocks in Australia. This is up close to 10% in Korea and China as well. Most of these mining stocks gaining as a result.
Yeah, I wasn't exaggerating when I said there's a lot going on in Asia today. Min Lo in Hong Kong, thank you so much. Let's talk more about what's happening with the RBA, the Aussie dollar gaining after the RBA raised its key interest rate by 25 basis points, becoming the first major monetary authority to hike this year. So the central bank increased its cash rate by 25 basis points to 3.85%.
Based on the data we've seen and the conditions here and around the world, the board now thinks it will take longer for inflation to return to target, and this is not an acceptable outcome. Now, I know this is not the news that Australians with mortgages want to hear, but it is the right thing for the economy.
James McIntyre, Australia economist for Bloomberg Economics, joins me now from Sydney. So RBA are bucking the global trend. Most central banks have been cutting. RBA have gone for a hike. Why?
Yeah, well, it's the RBA is not only bucking the global trend, but it's just 6 months after they delivered a third rate cut. Not a very deep rate cutting cycle, although they had not a very deep rate cutting cycle. But here we are having a little bit of a reverse course. The why comes down to one of the things that Bullock told us in her press conference. They've got some surprises, and they've been surprised enough on inflation and a little bit on growth to warrant putting some additional, making an adjustment on rates. It was very clear from what Bullock said that she described the decision to deliver a 25 basis point increase to 3.85% as an adjustment and not necessarily a new rate cycle. So it's really going to be very, continuing the RBA's data-dependent path, but the data that the RBA has seen over the last 6 months or so have led them to this decision today.
Yeah. I've noticed, I was looking at the currency, and initially we had that big spike up. We pared back some of those gains. Is it because the RBA are not committing to further interest rate hikes in the future? Is this why we're seeing that reaction in the market right now?
Yeah, look, some of that initial reaction. Today's hike wasn't fully priced in for by the market, so that initial reaction would have been adjusting to the fact that what was suspected was delivered, but the RBA has charted a hawkish path in its forecasts, but then some of those comments from Bullock generally sort of teasing it or somewhat teasing it back a little might be adding to that flavour there about not believing that there's further moves from here. Now, there still could be. The RBA's forecasts do show that they expect inflation to continue, and Bullock was quite careful to highlight that they're very carefully watching what the upcoming quarterly inflation reads are, and they do want to make sure that even though they're expecting a little bit more pressure over the next quarter or two, that there are some signs about the components of the inflation basket that they are a little bit worried about coming back to heel and consumers pulling their heads back in. They will be expecting to see, though, and their forecasts indicate that this hike will do some damage to the economy. If they do see that softening coming through, it's likely that those additional hikes that are in their assumptions that the market had been factoring in and are currently a threat won't necessarily come through.
James, thank you so much for breaking it down for us. James McIntyre, Australia economist for Bloomberg Economics in Sydney. Well, precious metals clawing back some losses after the dramatic unwinding of their record-breaking rally. We're also seeing copper bouncing back slightly on signs of dip buying from investors in China, which remains the biggest consumer of the metal. Joining us now is George Chaveli, a natural resources portfolio manager at 91. Let me start with the origin of this massive unwind and positioning that we saw over the last couple of days. So what was the catalyst for the big shakeout for gold and silver in your mind?
Well, we'd obviously had a huge run-up in prices last week, and then we obviously got confirmation that Trump was nominating Kevin Warsh as a new Fed chairman. Now, this obviously isn't confirmed until it's gone through the House, but he was seen as a more sensible pick, a more reliable pick than many of the other names being thrown around. That caused the dollar to strengthen, and some of this froth that was in the market really came out very quickly, which happens in precious metals. And we've seen, obviously, that unwind Friday and then yesterday. Clearly, we've seen a bounce today. Where we go from here is always very uncertain, but hopefully we can, base around, between 4.5 and 5,000, because we still think many of the longer term factors are still at play here when you're looking at precious metals prices. Yeah.
Yeah, so we'll come to those. Before I ask you about some of the fundamental drivers, earlier this week, the CME Group announced that they're starting to raise margins on both COMEX gold and silver futures because of the amount of volatility that we've seen in that space. Is that likely to deter the marginal speculative buyer?
In the short term, clearly it leads people to adjust their positions, but these changes generally get absorbed pretty quickly, and people then adjust to the new margins.
So let's talk about the fundamentals, though. We've spoken about this in the past. Do you believe that the fundamentals are still intact in terms of the structural buying that we've seen, the central bank buying of gold that we've seen, some of the geopolitical uncertainty that's been driving investors into this space, and all of those? Has any of the thesis changed given the massive run-up in prices we've seen?
Frankly, we haven't seen a lot of change. I think one of the interesting statistics now you can see is the volume of gold bought by central banks actually increased in the second half of last year over the first half, with the fourth quarter being very strong. If you turn that into value terms, clearly that was a record level. Now, overall buying by central banks last year was a bit lower than the previous 3 years. It was just over 860 tons compared to just over 1,000 tons each of the previous 3 years. But that number is still much higher than any previous year since the 1950s. And in value terms, of course, was a lot higher than even those previous years. So we still see appetite from central banks. We've obviously also had a new buyer with Tether coming into the market. They've been a big buyer of gold over the last year as well. So we've continued to see the range of people buying gold broadening really through last year.
What about silver? I mean, silver seems to be a high beta form of gold. When it's rallying, it rallies more than gold, and when it sells off, it sells off more than gold. But you don't have the same structural buying going on there. You don't have central banks buying or adding silver to their reserves. So how does that distinguish the thesis of silver and where it can get to versus gold?
Yeah, no, silver's slightly different, and you're right. It's really a high beta version of gold. It obviously appeals to a lot of retail, obviously being a lower value metal and one they can buy a reasonable quantity of. But we've also, a big driver of silver over recent years has been industrial demand. It is an industrial metal, and its use in photovoltaics, solar panels, has increased demand massively over recent years. Now, there are some signs that is tailing off, not least the higher prices are leading manufacturers to thrift and cut back on the amount of silver they use, but there are a number of applications. And you have to remember with silver, we've only just seen it peak in terms of industrial demand, having been in a massive slump for 20 years because it lost one of its main uses, which was in photography and X-rays when they went digital. So we've actually only seen silver demand reach new peaks in recent years. And we've had 2 decades of really very little silver supply or increases in silver supply because of low prices. So this is a market that's seen a big rise in demand over the last few years. That is slowing now, but it's still a big underpin.
Okay, final question for you. As an investor, how do you stomach this much volatility in your underlying asset?
Oh, you get used to it. I mean, if you're investing in resources and resource equities, you have to be able to, look through these periods of volatility and look at the longer term returns. And particularly in the equities, we've seen very good returns, both in gold, precious metals, and other resource companies over recent years. And that's something, we advise investors when you look at these markets, you do need to take a long-term view and look through that volatility because it's always been there and always will be.
George Javali, always good to chat to you. Thank you so much for coming on. So much has been going on in precious metal space. Really good to get your thoughts. Natural Resources Portfolio Manager at 91. Well, coming up, private investment plans seen surging in South Africa as reforms lift confidence. We'll bring you that story next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Planned capital investment in South Africa is seeing a surge, with new commitments from businesses tripling as reforms begin to improve confidence. New data from Nedbank highlights a growing shift towards private capital to drive growth, even as government-led projects announcements decline, rather. For more, we're joined by Bloomberg's Ntando Thakwana. Ntando, I feel like the story around South Africa macro the last couple of months has been really positive. How much does the rise in capital investments and these commitments by firms signal confidence in the economy?
Well, it's a bit of both, Jumana. Good morning. But there's enough evidence that it's really shifting towards genuine confidence. And we've seen that in the bond rally of last year that has been sustained through to this year. But chief among everything is the government's progress in implementing long-awaited structural reforms, such as in the energy and the freight and logistics sector, but also in the communications and the visa systems of the country. And these are all factors that firms have been waiting for to prove that the conditions are better for investment. But cyclically, we're also seeing that the economic fundamentals are really supportive. We're seeing lower interest rates, quite a subdued inflation environment, and better prospects for growth. So this really does sort of mark an inflection point for private firms.
And of course, when we look at the numbers, that private sector investment figure tripled last year. How significant is that in the context of South Africa's long-running, bigger picture? It's been an investment slump.
Well, it's quite significant if you think about the fact that companies have really been sitting idle on cash and have not been deploying capital into the economy that could actually build on the structural reforms and the infrastructure drive in the country and lift the economy. So it does sort of mark an important turn and could bode well more broadly for gross formation capital this year, which is also facing really positive prospects.
All right. Thank you so much for bringing us that story. And of course, the momentum certainly appears to be there as far as the macro is concerned, growth outlook, and now reform momentum and investment as well. Bloomberg's Ntando Thakwana, thank you. Now for a look at some of the other stories we're following today. Kenya's debt repayments to China fell by more than a third after the conversion of dollar loans for a railway project into yuan. The two nations agreed last year to convert the balance of 3 loans totaling $5 billion. It gives Kenya a reprieve as the economy struggles with mounting liabilities. First Abu Dhabi Bank plans to open its first sub-Saharan Africa office in Nigeria this year. That's as the UAE's largest lender seeks to expand on the continent. The bank has already secured approval in principle from the Central Bank of Nigeria and expects to open the office in the coming months. And coming up, Saudi Arabia has been rolling out sweeping reforms in a bid to draw more foreign investment. We'll discuss that next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Well, Saudi Arabia has rolled out a flurry of reforms in recent months, from opening property ownership to foreigners to liberalizing its stock market. The Crown Prince Mohammed bin Salman is pushing to attract more foreign investment. The move comes as the kingdom looks to ease fiscal pressure and keep up its ambitious economic diversification plans on track. For more, we're joined by Christine Burke, Bloomberg's Saudi bureau chief. Christine, I will just give it a little plug. You and I, alongside two of our colleagues, had a live Q&A session all about the reforms that the CMA have undertaken. So definitely, if you're watching this, go back and listen to that. It was pre-recorded. But let's go back to what is at stake here and whether the reforms introduced by the CMA have been enough to actually meaningfully shift FDI, which is ultimately the goal.
Well, look, I'd like to broaden that out to all of the reforms that we've seen. And I wish I had a crystal ball that could tell you whether or not all of these reforms taken together will really move the needle for foreign direct investment this year. But that's a tough question to answer. I think what we can see is that all of these reforms that have come through create a more conducive environment for foreign investors. So the CMA, by opening the equity market to all types of foreign investors, now just means that if you're sitting anywhere in the world and you're interested in holding a Saudi stock, well, hey, it's now a lot easier. Same thing in the property market. You want to get into property here. Well, now you can look at it. When it comes to the freezing of rent and some of the loosening of rules around alcohol, we believe that's a bit more geared toward competition, making Riyadh a more attractive place to live, which then draws in more companies and perhaps more investment through that form. All of these things taken together do stand to potentially draw in more foreign investment and get investors asking the question, like, is this a place I really want to be invested in? But what we hear continually is that what is crucial now is the implementation of these reforms, the rollout of these reforms, and for investors to see information clearly communicated to the market in order for them to feel that now is really the time for them to get in.
Yeah. And we've also heard from the CMA that foreign ownership limits, FOL, are under review. This is, I guess, the big thing that markets were on the lookout for. What did we learn, Christine?
Yeah, absolutely. This is the most highly anticipated move for 2026 when it comes to the Saudi equity market. So the Capital Market Authority has said in the past that it would review foreign ownership limits this year. Currently, rules limit foreign investors to owning 49% of Saudi listed companies. What we heard yesterday from the CMA is that a review of these rules is now underway. So it confirms that this review is happening. The CMA also said that it remains hopeful it will be able to change the foreign ownership limits this year. Now, we don't have any further information beyond that, so we don't know if that 49% cap is going to move to like 55% or 70%, or they're just going to do a full-out blanket removal. That is a big question that investors are asking. But at least what we heard yesterday gives us some confirmation that, yes, the CMA is reviewing these rules now. They are asking themselves the tough questions about how to go about doing this, and they do hope to implement some sort of change over the course of 2026.
Bloomberg's Christine Burke, Saudi Arabia Bureau Chief. Thank you so much for bringing us the latest there. Well, just a programming note, we're going to be at the World Government Summit later today, that is in Dubai, and we're going to be speaking to some great guests, including Stella Lee from BYD, that's coming up in the next hour, and IBM CEO Arvind Krishna, as well as Google DeepMind COO Laila Ibrahim. That's all coming up in the next couple of days. So stay tuned for our coverage from the World Government Summit. I'll be heading down there in just a short while. But as for now, let's take a look at how markets are faring up. It is a day of green across the board. The handover from Asia has been more positive. S&P futures up 0.3. NASDAQ also up 0.5%. So building on yesterday's more positive end to the session, we had better manufacturing data, and of course Palantir as well, one of the stocks that we're watching out for in extended trade. European markets also seen opening up in positive territory, up 0.4% as we speak to the stabilization that has come through in precious metals. Gold and silver regaining some of the ground lost today and actually managing to hold above their 50-day moving average. So perhaps the worst is over as far as that metals sell-off is concerned. That is it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai, but stay with me for Daybreak Europe. I'll be taking you through the next hour as well.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Joanna Versace with your top stories. Asian stocks bounced back from their worst sell-off in more than 2 months. A rebound in gold and silver helping calm markets after Monday's volatility. Musk's mega merger. SpaceX and XAI are set to combine in a $1.25 trillion deal as the world's richest man fuels his increasingly costly ambitions in AI and space exploration. plus a nifty deal. Indian stocks surge after President Trump slashes U.S. tariffs to 18% following agreement by Prime Minister Modi to stop buying Russian oil. Well, you heard it in the headlines. What we are seeing is some market stabilization today, better handover from Asian equities, and S&P futures pointed to open up in the green, up 0.3%, a better session for Wall Street yesterday. Stabilization prevailing in precious metals. Take a look at gold this morning. We are up 3.5%. Silver also seeing some stabilization after the heavy sell-off that we got on Friday and Monday. So some calm being restored in precious metals. And then Brent, take a look at the price action there. We're trading just below $66, down 0.6%, building on yesterday's declines as investors look towards those potential discussions between the U.S. and Iran over a potential nuclear deal. Let's switch over and take a look at some of the main risk events to watch out for today. On your calendar, 7:45 a.m. UK time. Watch out for France CPI. This is the preliminary figures, so you want to keep an eye out on that, especially with ECB coming up on Thursday and the general decline that we've seen in these inflation numbers. So French CPI, one to watch out for later this morning. And then we'll also be getting some Fed speak. So Fed's Barkin will be speaking later today. Any clues, hints on the signs of the U.S. economy, especially after the Fed opted to not cut interest rates at the last meeting. That will be closely watched. And then don't forget, it is earnings season still in the U.S. Later today, we get results coming through from AMD, a contender for NVIDIA in the chip space. So let's see what they have to say about AI. And so those are your risk events to watch out for later today. Well, there is a lot going on in Asian markets today. The handover pretty positive. We've also had an RBA decision. Winnie Su is in Hong Kong. Winnie, walk us through how these markets have been performing.
Yeah, morning, Jomana. It has been a pretty wild ride in the past few sessions, but today, a pretty happy day in Asia. Today, we've got MXAP here, in fact, up 2.8%, the best day since April, and we've pretty much reversed all losses from yesterday. And leading gains today here are the technology shares. You've just got Samsung Electronics actually extending gains to about 10% earlier, and that's really driving the Kospi here 6% higher, and overall lots of optimism after that big sell-off. However, bucking the trend, you've got HS Tech, in fact, down about 1% and dipping through that bear territory. And that's coming after some concerns around authorities potentially raising tax on some of the internet companies. Now, flip the board and take a look at cross-asset. You just mentioned that RBA rate hike, and that is lifting the currencies and also bond yields in Australia. Now, pairing a bit of gains there because we've got a bit of cautious tone coming out from the presser just now. However, when it comes to the Japanese markets, we're seeing that the 10-year yield, in fact, ticking slightly higher. A bit of weakness when it comes to demand from that bond auction earlier today, signaling that investors are still quite nervous ahead of that election this weekend. Now, flip the board and take a quick look at Indian assets. You just mentioned President Trump cutting those tariff rates to 18% from essentially 50% for India goods. So that is lifting overall stocks in India, especially exporters. And also currency here strengthening about 1%. Back to you, Jomana.
Winnie, thank you so much for the really comprehensive overview. There is a lot going on in Asia, as I mentioned at the top. Winnie Su in Hong Kong. Well, let's go back to markets now. Gold has jumped, clawing back some losses after the abrupt unwinding of its record-breaking rally that had driven prices down 13% in just 2 days. That's bringing Venram, Bloomberg MLive cross-asset strategist. So some calm is prevailing in markets today. Is the sell-off, the frenzied sell-off that we saw on Friday, Monday over for now?
It does look that way. It reminds me of what happened in October, Jomana, when we saw a very quick flash crash, kind of 10% correction, and then it's taken about since then to go to a new record. So I think that, the markets are still in this mode where there's a lot of momentum going into these trades, and there's lots of liquidity. There's plenty of liquidity chasing the markets that is willing to buy on every dip. That means that, within 3 to 4 months, I wouldn't be surprised if gold goes back to the previous record of around 5,600. But after that, what happens is that the risk reward gets skewed. So I don't think, investors should be chasing gold and silver at these levels.
Yeah, well, I guess now we can go back to thinking about what Kevin Warsh might mean for the Fed and the typical trades that people have been doing, stronger USD and the curve steepener. What derails those trades, the Warsh trades, so to speak?
Well, I think that, the question is, what happens if he wants to cut much more than the markets are pricing? The markets are pricing 2 rate cuts, as you know. And I think that, Warsh's op-ed in the Wall Street Journal saying that, there's more room to cut rates is what the markets are not prepared for. I think that the markets are thinking, look, he's got 1 vote in the FOMC, so how much is he going to be able to influence the trajectory of the FOMC? But I think to answer your question more specifically, I think what will happen to money markets if he starts shrinking the balance sheet, I think that will cause some ructions in the money market, which I don't think is priced in. So I think that's what I would watch out for.
Yeah, so a liquidity play to think about. Ven, thank you so much. Ven Ram, Bloomberg MLive cross-asset strategist. Well, big news in corporate space. Elon Musk is combining SpaceX with his artificial intelligence startup XAI in a deal that values the combination at $1.25 trillion. The acquisition was announced in a statement on SpaceX's website, confirming our earlier scoop. For more, let's bring in Bloomberg senior strategist Neil Campling. Interesting, very interesting to see these two entities tied up. And of course, SpaceX is more of the crown jewel than XAI is. What's Musk trying to achieve with this deal?
Well, certainly he's kind of mentioned that the grand plan in some ways is to have these orbital data centers. You're taking the whole data center and AI literally into space. So that's kind of the grand vision with this particular combination. We're still expecting SpaceX to have an IPO later this year, and some reports have suggested perhaps for $1.5 trillion. There is another part to this, I think, as well, which is that actually, when we look at numbers that people have been talking about, XAI has been loss-making. Some reports suggesting that it lost nearly $8 billion last year. So XAI effectively had run out of cash, so it kind of needed the combination and cash injection through Musk's empire, and I think that's an important reason as to why this is taking place now, rather than waiting to do the transaction closer to the IPO for SpaceX itself.
Really important point to mention there. Okay, let's switch tack and talk a little bit about Palantir. It's still earnings season. Really strong performance in extended trading. It seems like they have actually forecast revenue for the year that is significantly above Wall Street expectations. I mean, this is just all adding fuel to the fire around AI right now.
It's interesting you say that, actually. Fuel to the fire is a great phrase, because Palantir in many ways sort of ticks a number of boxes. Should we say it ticks the YOLO, MOMO, the box, momentum, the retail traders, the AI enthusiasts as well. So it ticks a number of boxes in many respects. Now, the 70% growth rate they posted for the 4Q numbers was staggering. Incredibly high growth, the highest on record that the company has posted since going public. It's also guiding to, as you mentioned, to very strong growth for 2026. But it kind of needs to, because it is trading on 56 times forward revenue estimates. But I thought it was the interesting phrase from the CEO actually that came out in the statement was that the performance of the stock or the results were a cosmic reward for the believers of AI and the stock. So the AI thematic is very much sort of still in focus, and the growth is still coming through, which will certainly be a relief today, given some of the performance we had last week from the likes of Microsoft, with the slower growth of Azure than people expected.
Yeah. Neil, stay with me. Yesterday, I was watching our programming, and you were talking a lot about this huge bond issuance that Oracle were planning on bringing to the market. We're now one day on from that, and I think it's safe to say that the bond offering was actually received with a huge amount of demand. Again, does that help allay some credit concerns that were perhaps brewing in the space?
I think it does. I think the structure of the combination of the bond and the equity was well received. It was well telegraphed. It wasn't a surprise to the market as such. And I think as well, by saying this is what they require for 2026, it's taken positively in the sense of they're not going to need to come back and tap the market again. And I think when you look at what happened with the CDS spreads last year, that was a big concern, is this just Oracle needing to continually tap the market? So I think there's some comfort in the fact that investors are now not expecting Oracle to need to come back to the market again. And the appetite, as you say, for the structure and being well received is definitely a positive step.
Yeah, $25 billion, and it received over $130 billion in orders. So it tells you a lot about the appetite that was there. Bloomberg senior strategist Neil Campling, thank you so much. Well, still to come, the world's largest EV maker, BYD, says it wants to boost international deliveries by 25% this year. We will be speaking to Stella Lee, the company's executive vice president, at 6:40 UK time. But first, after months of political upheaval, the French premier and his government have prevailed in passing a budget. More on that next. This is Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. The Bank of England makes its next interest rate decision. As inflation rises and the labor market cools, investors will be looking for clues from Governor Andrew Bailey on the pace of rate cuts for the year ahead.
With every cut in bank rates, how much further to go becomes a closer call.
Tune into Bloomberg for live coverage of the BOE decision and press conference. It all starts Thursday at 12:30 p.m. on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. France's parliament has adopted a budget for 2026 after Prime Minister Sébastien Lecornu survived 2 non-confidence votes. For more, Bloomberg's Caroline Conan joins us from Paris. So what's better than 1 confidence vote, 2 confidence votes that he survived? Carol, why has it taken so long? And is it fair to say that Lecornu is out of the woods now?
And in fact, he survived as many as
6 confidence votes over the past couple of weeks. So the least we can say that it's been a very long and very exhausting process for this budget. We're already in February, more than 1 month after the deadline. And France finally has a budget after this whole political uncertainty for the past 4 months. You know, Le Cornu had this change of method. He wanted to let the parliament debate. He wanted to let the parliament decide. That strategy showed somehow some success in December when he managed to pass through the social security budget. However, for the overall state budget, the mountain was too high. There was too much political infighting in parliament. So in the end, he had to use this constitutional tool, Article 49.3, in order to force the budget through without a vote. That led to 6 votes of no confidence over the past couple of weeks. And last night, finally, Le Cornu can breathe. He has a budget. Already last week in this same show, Daybreak Europe, we spoke with Roland Lescure, the French finance minister, who was already saying that France had a budget and was out of the woods for this year.
We have a budget this year, 26. That's a budget of stability. As you said, we're lowering the public deficit. We are doing 50-50 expenditure cuts and a bit of tax increases. We're going to have to work on the 27 budget, but give me maybe a week or two to enjoy the fact that we have passed a budget for 26, that we have respected our targets for 25, and that, yes, there's more work to be done, but so far so good, let's admit it.
The budget is far from perfect, but clearly it is a sign of stability after these 4 months of political uncertainty in France. Remember when Le Cornu resigned early October before being reappointed again a week later, the spreads between the French and the German 10-year yield were at 85 basis points. Now we are down to below 60.
Yeah, so we've seen them snap back. And I guess this leads me to my next question, Carol. We've talked about the political challenges in getting the budget passed, but what does it actually mean in terms of numbers for this deficit that we've been talking about and that investors have been so fixated on in 2026?
We actually had good news yesterday with this news that France is reporting the narrowest gap in public finances in 2025 since COVID, less than 125 billion euros, better than expected. So that gives hopes that Le Cornu will manage to reach this 5% deficit target for this year, even though the Bank of France governor, Villeroy-de-Galhau, has been disappointed that this budget is not ambitious enough in terms of deficit reduction and especially in terms of spending cuts, because in this budget there was a lot of concessions to the Socialist Party, so a lot of new taxes. For example, there is this extension of this new super tax on multinational, also the tax on highest incomes being extended, a new tax on family holdings, so not so much efforts on cutting spending. And clearly that's going to have an impact on the debt levels over the long term. This year already, France's debt is expected to reach 118% of GDP, could reach as much as 130% by 2030. And growth is not expected to be as high this year, just over 1% according to Bloomberg economists. So clearly, before the next presidential elections in 2027, already next year, we don't expect any major reforms for this government, given the lack of maneuver that Le Cornu has in parliament. And next month, in March, we're going to have in France local elections that could be a bellwether for what's going to happen at the national level next year.
So, some good news then. Bloomberg's Caroline Conin, thank you for bringing us the latest in France. Well, India stocks jumping and the rupee rallying after the U.S. reduced tariffs on the country's goods. President Trump says the U.S. will reduce tariffs on India to 18% after Indian Prime Minister Narendra Modi agreed to stop buying Russian oil. Bloomberg's India economy and trade reporter Shruti Srivastava joins me now from New Delhi. So presumably all of this is good news for India.
Definitely, it is good news for India. Throughout the last year, the overhang of high U.S. tariff, it weighed on the prospects of Indian economy, and with signing the U.S. steel, which comes in quick succession with the European Union deal, which was signed last month, India gets a good advantage, especially over its regional rivals like Vietnam and Bangladesh, which are both at 20%. So India gets an inherent competitive advantage, at least in the manufacturing sector. This has also revived India's ambitions of, being the manufacturing hub, the China Plus alternative it wanted to be. Plus, it's a good news across all asset classes. The capital outflows which we were seeing, analysts expect that they would be contained now. The rupee volatility that we have been seeing, of course, it's a huge boost for the rupee as well. Exporters who were buffeted by high U.S. tariffs, especially in the labor-intensive sectors like apparel, footwear, it's a big plus for them. At least the mood, the sentiment on the ground is likely to, revive after the deal. As we await the details, this is indeed a good news for India.
Okay, so you say we await the details. President Trump has framed this as India agreeing to no longer buy Russian oil. In an interview with Bloomberg Television a week ago, the Indian oil minister said that their purchases of Russian oil had actually declined, but it's still something to the tune of about 1.3 million barrels a day, down from 1.8 million barrels a day. So what do we actually know about what was agreed to between the two sides?
As you said, Trump has posted that India has agreed to not buy Russian oil, and the petroleum minister, he mentioned that India continues. Now, since the Ukraine war, India became one of the largest buyer of Russian oil. But due to Trump's pressure and high U.S. tariffs, India has indeed cut down its purchase of Russian oil, but that has not become negative. It has not come to zero. And India has always maintained that it will decide, whether to buy Russian oil or not based on its own economics. The details are still coming on this bit, and there is still no clarity from the Indian side on what exactly has been agreed upon, but we for sure know that the position of the government has always been that it will decide where it wants to buy oil from and from which country.
Shruti Srivastava from Bloomberg Economics in New Delhi, thank you for bringing us the latest and some of the details around the U.S.-India deal. Well, coming up, U.S. and Iranian officials are expected to meet for talks in the coming days over a new nuclear deal. We'll bring you the details next. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
take a look at how we're faring when it comes to Asian markets.
Welcome back. Now to some of the other top stories we're following this morning. U.S. President Donald Trump says he expects talks with Iran over a new nuclear deal in the coming days. It comes amid a flurry of diplomatic activity aimed at averting war between the two countries. Iran's president saying overnight he has instructed the country's foreign minister to, quote, pursue fair and equitable negotiations with the United States. Oil falling again this morning on easing geopolitical risks after its biggest drop since June yesterday. President Trump is pushing House Republicans to accept a deal he struck with Democrats to end the partial government shutdown. In a post on Truth Social, Trump told lawmakers to swiftly pass the measure with no changes. The bill would fund most agencies through to September and the Department of Homeland Security until February the 13th, preserving funding for immigration raids while both parties negotiate changes to enforcement policies. President Trump says U.S. Attorney for D.C. Jeanine Pirro will take her probe of the Federal Reserve and Jerome Powell, quote, to the end. Such a move could complicate the confirmation process for Trump's nominee for Fed Chair Kevin Warsh. At least one GOP lawmaker has vowed to block all Fed appointments until the probe is resolved. And the UK's Metropolitan Police say they are to review reports of alleged misconduct in a public office after new Epstein files were released. Documents from the US Department of Justice appear to show that former UK politician Peter Mandelson leaked sensitive government information to disgraced financier Jeffrey Epstein while serving as a minister. Mandelson has denied wrongdoing. Meanwhile, in the U.S., former President Bill Clinton and his wife, former Secretary of State Hillary Clinton, are to appear before a congressional committee investigating Epstein. And a quick look at markets. A pretty positive handover from Asia Pacific today. As setup is positive as we head into the U.S. session and European session. But coming up, we're going to be talking about where is next for UK interest rates. We'll dive into that conversation ahead of the Bank of England's decision on Thursday. And that is with Bank of America's chief economist, Shonali Punani. That is coming up next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Jumana Bersecci with your top stories today. Asian stocks bounced back from their worst sell-off in more than 2 months. A rebound in gold and silver helping calm markets after Monday's volatility. Musk's mega merger. SpaceX and XAI are set to combine in a $1.25 trillion deal as the world's richest man fuels his increasingly costly ambitions in AI and space exploration. Plus, a nifty deal. Indian stocks surge after President Trump slashes U.S. tariffs to 18% following agreement by Prime Minister Modi to stop buying Russian oil. And let's get you a check on markets. Things are quite robust this morning. The S&P futures are up 0.3%, a better end to Wall Street yesterday. A strong handover from Asian markets as well. We'll talk more about that shortly. But in general, what we are seeing is stabilization today. Take a look at Euro also gaining a bit of a ground versus the USD, which is slipping. So again, bucking the recent strength the last couple of days. We saw money pour into the greenback. Today, that's being reversed a little bit. 118.15 as we head into that ECB meeting on Thursday. And then, of course, gold stabilization this morning is the theme, up 4.5%. Silver also up almost 8% today. So we are seeing a rebound in precious metals, and that's providing some calm to the market. But let me bring you some breaking news that's just coming through. Nintendo earnings crossing. The headline here, the third quarter operating profit for Nintendo has come at 155.21 billion yen. That is below the estimates of 180.75 billion yen. To give you some more detail around it, we have the 9-month original Switch sales came in at 3.25 million units. That's down 66% year on year. Giving some guidance, they see the Switch 2 sales at 19 million units. And software sales at 48 million units. But the takeaway here is that the third quarter operating income is actually a miss versus expectations. Time now for your front page news. The Guardian is leading with the Metropolitan Police assessing reports of, quote, alleged misconduct in public office after former UK politician Peter Mandelson was accused of leaking market-sensitive information to Jeffrey Epstein at the height of the financial crisis. The Wall Street Journal reports that U.S. manufacturing is in retreat and Trump's tariffs are not helping. Levies on imports were supposed to bring back a golden age of U.S. manufacturing, and they haven't worked so far, says the paper. This coming just one day after U.S. manufacturing activity unexpectedly expanded in January at the fastest pace since 2022. And finally, the Financial Times is leading on Elon Musk merging SpaceX with XAI in an all-stock deal, valuing the new company at $1.25 trillion. And as ever, you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go. That is on the terminal with some of the top stories that we've covered today. All right, let's take a closer look at the markets with Christine Aquino, Bloomberg Markets Live Managing Editor. Really good day to be chatting to you, Christine. We are seeing some stabilization coming through from markets, and perhaps that does tell you that the shakeout and the positioning unwind in precious metals did actually have a knock-on effect on broader markets. And today, because precious metals are stabilizing, everything else seems to be trading up as well.
Yeah, absolutely, Jumana. Really today, it feels like is a bit of a reset after such a turbulent January. We had a lot of risk events, a lot of major catalysts that upended markets. Of course, a lot of attention being paid to this rally in precious metals. It looked really unstoppable over December and January in particular. But I think toward the tail end of last month, there was some worry that suddenly precious metals, which are typically seen as haven assets, they are seen as safe havens that investors flock to during times of turbulence, are suddenly maybe acting a little bit more like risk assets, right? That is precisely because of the speculative trading that we've seen piling into the space. And so took a bit of a breather toward the end of January, and now we're seeing a bit of a reset. And, you know, that's really just kind of rippling across risk sentiment across the board, particularly in equity markets, as we're seeing now kind of some of those concerns around this particular sector calming down a little bit.
Yeah. Let's move on and talk about the U.S., the outlook from here. I know Fed's Bostic is speaking later today, but we did have some surprisingly strong manufacturing numbers come through yesterday. ISM manufacturing, the strongest level since 2022. Given the resilience of the backdrop for the U.S. economy, isn't it going to be more complicated for the Fed and the new Fed chair, potentially Kevin Warsh, to signal that an aggressive round of easing is forthcoming this year?
Yeah, that's absolutely right, Jumana. And that is what makes the Fed chair job very difficult. If Kevin Warsh does indeed get confirmed and takes the helm of the Fed, he really will have that challenge. As you mentioned, right, we are seeing pockets of strength in the U.S. economy, but then on the other hand, signs of softness in the labor economy. And so, again, also a divergence between the survey data, which is the ISM manufacturing figure that you mentioned, versus the hard data. And so all of these kind of things hanging in the balance when it comes to a read on the U.S. economy. And that's why I think we did get a sense from Fed Chair Jerome Powell at his January press conference that policymakers seem to be wanting a little bit more optionality moving forward, right? They're not locking themselves in to automatic rate cuts moving forward, but they're not also necessarily saying that they're going to be tighter in monetary policy. And, you know, that is the balancing act that the next Fed chair, if Kevin Warsh does indeed get confirmed, will have to partake in.
Christina Aquino, always good to be chatting to you, Bloomberg Markets Live managing editor on our show today. Well, from one central bank to another, in the UK, the Bank of England will deliver its rate decision on Thursday. The benchmark rate is expected to remain at 3.75% as signs of stabilization in a cooling job market and scant progress on underlying inflation leaves the Bank of England in no rush to cut interest rates. But our next guest says they don't agree with the market's quite hawkish read of recent data and expect a cut in March. Shanali Punhani, UK economist at the Bank of America, joins me right now. So maybe let's just talk about the here and now, the upcoming meeting on Thursday. Nobody's anticipating a rate cut coming out of this meeting. But I guess then the question becomes, what is the ultimate neutral rate for the UK economy right now? Where do you think that number is going to sit? Is we closer to 3% or around 3.5%?
Sure. Thank you very much for having me. As you said, this particular decision is going to be fairly non-controversial with them keeping rates unchanged. But again, the key question is going to be the guidance that they give on future cuts. And I still think that, the Bank of England still has more easing to go. I mean, if we see in the December minutes, they kept the easing bias intact, and we expect them to keep doing that, i.e. saying that, there are more rate cuts that are likely to come. Obviously, there are lots of questions about the speed. They might want to be a bit, more careful in reaching the kind of neutral rate because, we feel that they are, somewhat close to it. But our view is still that there are more rate cuts to go. Our sense of neutral is about 3.25%. So we think that there are risks that the Bank of England, and our base case is based on the Bank of England cutting 2 more times, once in March and the other one in June. But if I look at, where risks are tilted, I would think that risks are towards maybe potentially a higher terminal rate, i.e. 1 cut instead of 2 versus, say 3. So if I had to pick the sort of balance of risk, I would say it's more tilted in a more hawkish direction rather than, them taking rates closer to 3%.
Okay, interesting. And let's talk about the recent batch of data that's come through. The market's interpretation was that it's been coming in better than expectations, and also some of the uncertainty around the budget is behind us now, which should, in theory, provide perhaps a bit of a tailwind, at least for businesses. There's more clarity on the backdrop. Why are you skeptical about the path for the UK economy this year?
Yeah, sure. Look, I think, we've obviously got some good batch of data with the sentiment data. I'd just be a bit careful in over-interpreting something like the PMI data. We've seen in the past that the PMI data has not been a very good indicator of where GDP really ends up being. And, whenever we get changes in sentiment, like, for example, as you said, the budget was a big event. It was a big clearing event. And, that's when uncertainty has reduced. But when we do see that, it seems like sometimes the PMIs tend to over-exaggerate or under-exaggerate the kind of shifts in sentiment. So we really need to wait for the hard data to really see if this kind of recovery that we are seeing in sentiment, if that's sustained, if that's something that's a Q1 story, or is it something that can sustain for the rest of the year?
Yeah.
And I think the jury is not yet out on that, and we really need to see that. The other important thing in the PMIs was that the employment expectations still look fairly subdued. And so I think we are facing this dichotomy where we are seeing potentially a stronger GDP data, but the labor market still remains quite weak. And that's something that's obviously that's important for the Bank of England's decision making.
Shonali, thank you so much for coming on our show today. Shonali Punhani, Bank of America's UK economist, a preview into Thursday. Coming up, the world's largest EV maker, BYD, says it wants to boost international deliveries by 25% this year. We will be speaking to Stella Lee, the company's executive vice president, live from the World Government Summit in Dubai. That's next. This is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Chinese electric vehicle stocks, including BYD, are falling after the nation bans concealed door handles on EVs. It is a new safety rule expected to drive up redesign costs for some models. We're joined by Stella Lee, Executive Vice President of BYD, to talk about this and more. Stella, really good to be talking to you. Very timely. I'm going to start with the news of the day because I walked in and I saw that news, the authorities in China banning the head and door handles. What impact is that going to have on BYD?
There's no impact. Actually, BYD is a global leader for technology. So we always design our car very safe. Even our car with the hiding handle, then it's anything happen, will automatically punch out. So very reliable. But now with new regulation, we're already ready to change any handle the government wish. So, but as a technology company, BYD is always put the customer safety is number one. So every single details, design for every details in our car is really focus on customer safety and the performance.
Yeah. Let me ask you about sales as well. And again, the latest figures have shown that BYD sales actually fell 30% from a year earlier for EV sales in China. What exactly is going on there? And can you give us visibility on when you expect those numbers to pick up?
Yeah, this is very normal because the whole EV market is dropped due to the government incentive program is like a walk away very rapidly. So this make the maybe January all the ICE car sales is continue strong, but the NEV sales is dropping. But the BYD is still in very strong position for this NEV business. But normally our expectation in next 2 months will quickly pick up too. And another figure you can see, BYD overseas sales is continue performing very strong.
Let me ask you about your international expansion plans, because again, I mentioned that in your introduction, there are plans to increase deliveries outside of China by 25%. And the latest figures, the car registration numbers in Europe, showed that 1 in 10 of the cars sold were actually sold by Chinese EV makers. How much of an opportunity are you seeing there, specifically in Europe? And then we'll also talk about the Middle East and the UAE as well.
Yeah, so I think for BYD, we focus on what the customer needs. When we bring this very high performance, high quality car, and with wonderful technology in the car, then we are very competitive. The people in Europe, and they just love BYD car. And when we are landing in the UAE, I was here for the past 2 days, talking to all the local people, organizer, a lot of staff, they just come to say, hey Stella, I love your car, because you're like a Denza B5, B8, I can play in desert very well. And it's cool. So I think there will be some challenge in there or there. But if you focus on the customer, they love the car. They really emotionally love BYD technology. This will make it like in any place. Then it's very easy.
Yeah, let's talk about pricing as well, because the EU has also issued guidelines on minimum pricing as a means of averting tariffs. Do you welcome that? I mean, what types of discussions have you been having with the European Union about minimum pricing?
We don't have a clue what they're going to do, because in the end, it's a consumer market. It's a consumer choose what kind of car fit for them, and then I don't even know how they can structure the minimum price. But the BYD, we come to overseas, we go to every place. We are focused on deliver the value on the car, not to focus on the low price sales. We are focused on deliver the best technology, total solution to our customer, make consumers enjoy the technology, enjoy the performance, not to really position BYD to focus on price. So, but at the same time, BYD offer is a wide range of the car. So, for example, this year in UAE GCC region, we introduced light model. But by end of this year, we're going to introduce in BYD total 13 model. In the same thing happen in Europe, and then when you introduce a wide range model, you have the car to cover A, B sector on the SUV and also sedan, but you also have a car is premium luxury. So then the customer will choose the car based on their needs.
Yeah. Let me ask you about the UAE, since you're speaking to us from Dubai. What makes the United Arab Emirates a good place for BYD to bring in some of these models? Because we're not talking about huge scale here. We're not talking about a population as large as you would get in the EU. So what is the appeal for BYD?
Yeah, it's my first trip to Dubai. And then it's really the amazing country. The UAE, we have the national cooperation with UAE for the battery storage. And now, remember, BYD is not just a car company. We are the leading player for battery storage, and also we're leading player for all the technology here. So we cooperate with different divisions on different technology here. So we view this market here will be really the home line for us to bring all the R&D and the innovation here to pushing the next generation robotic and also autonomous driving technology here in the region.
So speaking about innovation, can you give us some more color on what customers can expect in terms of upgrades to software, to hardware, any timeline for that throughout the course of this year?
Yes. So we introduced some model here. Then you have a Google Glass and the Apple Play, all the like a high-tech technology integrate into our car. And then when we introduce the Denza brand here, then we have a hardware ready for autonomous driving. So now the next step, we're gonna to put an R&D engineer in the GCC area, and then to work on the autonomous driving is our next big step here. So it means even our car not only be able to autonomous parking and then in the highway autonomous driving, but then we can achieve the point-to-point autonomous driving capability.
Stella, thank you so much for your time today. We really appreciate chatting to you, Executive Vice President of BYD. Thank you. And later, I'll be speaking with the IBM Chairman and CEO Arvind Krishna about AI and enterprise following their very strong results last week. He'll be joining me from Dubai's World Government Summit. I'll be heading down there in just a short while. That conversation is starting at 8:45 a.m. UK, so in a couple of hours. And in the meantime, just to tell you that it's been a really strong day for markets. The MSCI's Asia Stock Index is now risen above 3%, set for the best day since April. So what goes down definitely goes back up again. Very strong performance and handover from a lot of these Asia-Pacific indices, including the Nikkei and the Kospi. Now to some corporate news. A U.S. judge has ruled that a wind farm being developed by Ørsted off New York's Long Island can resume work after being halted by the federal government. It is the fifth such court win for an industry President Trump has sought to cripple. The judge ruled that the project would be irreparably harmed, calling the administration's decision likely arbitrary and capricious. And Europe's largest asset manager, Mundi, reported fourth quarter pre-tax profit that beat expectations, saying it benefited from investors seeking to diversify away from U.S. dollar assets. The firm also unveiled a 500 million euro share buyback that will begin tomorrow and be spread over a period of about a year. And plenty more coming up on the show. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I didn't have any. I think maybe one or two cuts would put us at neutral for my outlook, and that would make it very unlikely if we did that for us to get our inflation back down to our target, or even get it on trajectory to that. So I think this is a time to be patient.
That was the Atlanta Fed President Raphael Bostic there. Interesting to hear his comments vis-a-vis not predicting any rate cuts for the rest of this year. So we'll see how this all plays out. About 2 rate cuts are priced in. But I will say that a lot of the conversation now is also around the size of the Fed's balance sheet, because Kevin Warsh has historically advocated for a smaller and less interventionist Fed. And you can see from here, over the last couple of years, there's been a small trimming of the Fed's balance sheet, but not without quite significant impact on some of these short-term repo markets, as we were speaking about with Van earlier in the show. The question is whether he is going to be intent in bringing down the size of the balance sheet even further. That could have a knock-on effect on some of these markets. So something to bear in mind. This is a subject of conversation for many in the space. Switching over, let's talk about the U.S. equity rally. I thought this was quite interesting because other sectors are beginning to participate, including industrials and small cap stocks. It's not just Magnificent Seven. It's not just AI. You are seeing the rally beginning to broaden a little bit. Remember, yesterday we did have that stronger ISM manufacturing data. Cyclically, that's good for the small caps. So something to bear in mind there. And then let's take a look as well at metals. It's all been about gold and silver, hasn't it? And this is quite interesting because it tells you that the 50-day moving average did actually hold. We bounced off for both of them, for both gold and silver. And today we are seeing a bit of a bounce in both of those areas. So again, the technicals have actually provided some good support. Let's see if it holds up. As for the rest of today, a couple of risk events to watch out for. 7:45 a.m. UK in about an hour's time. We got French CPI. These are preliminary figures for January. And obviously will be key and parsed ahead of that ECB meeting on Thursday. 1 p.m. we get the Fed's Barkin. He will be speaking later on today. More hints perhaps about the U.S. economy. And later, it's earnings season. Don't forget, AMD will be releasing their earnings. Let's see how they are doing in terms of competing with NVIDIA on some of their AI accelerator chips. But that is it for Daybreak Europe. The opening trade is coming up next. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's Tuesday the 3rd. Good morning. How are you doing? This is what we're talking about. Gold and tech have bounced. Australia has hiked. And Elon Musk has plans to take the AI trade into orbit, Tom.
A big session over in Asia, particularly the strength coming through on the Kospi in South Korea. That trade is back, up 3% across the regional benchmark. You're seeing the ripple effects then. European futures pointed to gains of 0.5% after record highs for European stocks yesterday with upside of more than 1%. Gold on weaker dollar, that is lifting the yellow metal. Possibly other factors as well. Gold up 4.6% so far in the session. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. Welcome to the opening trade. It is Tuesday, the 3rd of February. It's just gone 7 o'clock here in London. Now, we've spent 2 working days thinking about thinking about the dollar, thinking about what Kevin Walsh might mean for the dollar. The dollar's gone higher as a result. That's caused a lot of question asking and answer seeking around various assets and some risk-off moves. Today, does it look a little normalised? I mean, when you've got such substantial moves still in markets, doesn't feel anything but normal. But maybe there is room for other themes to cut through. We don't have answers on what Kevin Walsh means, but maybe we have a little space for other themes to be in the spotlight. We are still talking about gold and silver, though. Is that to do with Kevin Walsh, or is that something else? The dollar is weaker once again. So we've seen silver volumes actually getting back down towards normal, which is maybe what I mean when I say something is at least looking a little bit normal. But nothing is normal about the Asia rally. We've got the MSCI Asia Pacific looking at hitting levels we haven't seen, making gains we haven't seen since Liberation Day, since April.
Gold has bounced, silver's bounced. Is this a dead cat bounce? I don't know. The tech trade looks amazing. Samsung's absolutely rocketing higher. Yeah. We'll talk about rockets in just a moment. But this is the gold and silver trade. I think it was always going to bounce. You can't get that kind of a move on that kind of a scale without some sort of a bounce coming through. There are going to be people sitting on the sidelines going, I want some of that. And they've had some of that. The question is, are there more people going to be making that trade? The tech trade's sensational.
Yeah, what we saw over the last 2 days, trading days, a healthy shakeout. And now we're back to the similar themes. Yep. Hardware is playing for you very well today, given the SK Hynix and Samsung, to your point. And precious metals are back. Of course, we have to make up for the gains that we've made and lost since Friday and the sell-off. Really interesting in terms of the data out of the US. I just want to reflect on what happens in terms of manufacturing and the factory gauge out of the US, because there was strength there. And so you saw this divergence between the Russell 2000 and the gains that came through for the S&P and the NASDAQ. And that suggests maybe some looked at the data yesterday, that ISMI manufacturing survey suggested there's a bit of a broadening in terms of the economic strength of the US, and some of the bets around the Fed started to fade a little bit. So you're not expecting a full 25 basis points until July from the Fed. Marginally, but there was some adjustment on the back of that stronger manufacturing data.
And we were just showing some of the real gainers from that hardware story that you were talking about and the tech strength coming through. The Kospi up by more than 5%. The Indian market responding to other factors, not just this, but also there is this. There is the risk on mood in markets, but there's also the fact we've seen a big cut in the tariffs.
The trade deal. We'll come on to that. Trade deal between India and the United States. In all of this, inflation, you could argue, could be back. And the Australians think it might be. The RBA has hiked. You've got the governor sounding kind of cautious, not giving too much forward guidance, but still the indications are looking ahead. The Australians are going to have to hike again, and even that will not bring inflation back to target. Then you extrapolate that out and think, are other central banks going to face the same problem? To your point about the ISM, is the Fed going to face the same problem? Are we really going to see cuts in the United States this year? Are other central banks, the ECB, potentially I'm looking at you, but I'm not quite convinced about that. Are you going to have to hike as well? The first major central bank has hiked rates. Is the cycle changing? Is the rate-cutting cycle coming to an end? How close to the bottom are we? What does it mean for risk assets? Don't know. But the reality is we've just seen the first major central bank.
Is this an Australia-specific story, or is this a broader global story? They're seeing a resilient labour market. The inflation is above target. They target between 2 to 3%. It is above target. It's closer to 3%. There's strength in housing. There's strength in services. And markets are now fully pricing in another hike this year and potentially an additional one.
Could be 3 this year. Could be 3 this year. But even then, inflation will not be back down to targets. Why do we think inflation's coming down in America? Do we really think inflation's coming down in America? The commodity market's not saying that.
No, apart from gas prices last night, for weather reasons, which we know about. Short-end yields, then, responding to this story, 7 basis points higher. And to your point, we saw higher yields in the United States on the back of that ISM data yesterday. So it does seem as if at the coalface of things, there is a higher yield story building. We'll see how that rubs up at the start of the European trading day with the French story, where we've got a little less stress, perhaps, in the French dynamic.
Yeah, and French CPI then crossing later, and we will be breaking that for you. The other key dynamic, we touched on this in the fast part of our conversation, was what's happening with technology. Some key stories coming out of the US then overnight. There was Palantir, there was Oracle, a debt sale there, relatively well received. But let's start with the SpaceX and XAI.
Yes.
So we've been reporting around this. Ed Ludlow and the team have done some great reporting in terms of breaking the news around SpaceX. So we have confirmation that SpaceX and XAI will be combining, still heading for that IPO later this year, which could be a mega IPO.
Yeah.
This seems to be pretty good news if you're an investor in XAI. They are, of course, the home to Grok. All sorts of controversies around that chatbot. Very prominent controversies in recent weeks. And also, this is a company that's burning $1 billion a month. SpaceX is a proper business, making a lot of money, supplying the International Space Station, supplying the Ministry, the Defense Department, or the Department of War in the US, and NASA as well. SpaceX is a significant business with significant revenues and significant forward upside, particularly when it comes to Starlink. XA, if you're an investor in XI, this seems like a good deal.
Why is he doing it? What is the benefit to Musk for putting these two businesses together? You can argue that there is this whole narrative around taking kind of AI into space, that you can deliver on that. I've heard that same story from Blue Origin. But what's the objective here?
Solar-powered data centres.
In space.
Yes, absolutely. He wants to send 1 million satellites into space. They filled in this application on Friday to send 1 million satellites into space. That's their plan here. And on day one, this seems to be something... I'm leaning here on Matt Levine's excellent piece on this subject. On day one, this is something quite prosaic, perhaps. It is about providing the capacity for our data centres here on Earth. Yeah. Maybe in the future it'll be about new frontiers and exploring space, but actually it's about right here on Earth. It's about providing solar-powered, which doesn't sound very Trump administration, data centres.
How are we feeling about this? Is this peak AI? Is this kind of... The IPO could be absolutely massiuld at this point.
Could be out of this world, couldn't it?
Quite literally, into orbit. This is kind of where the AI trade is going to be taken. Will investors... would it have been an easier thing to get SpaceX onto the market than putting these two together and trying to get it onto the market as well? It strikes me as being the answer to that is yes. So why is he doing it? Is it because, as you say, there are concerns around XAI and the issues that it faces? I don't know. Let's fold in Tesla as well. Why not?
Maybe it's for humanity and the planet and not just for Grok.
Why don't we just fold the whole thing into Tesla? Tesla becomes a SPAC, effectively. Like, what is Tesla now anyway? So might as well turn it into a SPAC and get it effectively to acquire these two businesses and take them onto the market that way. I don't know. There's various...
Tesla has a play in renewable energy, in clean energy storage.
You want me to talk about Ørsted, don't you? Trump, another court case actually lost in the United States regarding offshore wind, which is going to be a good thing for Ørsted at the open. But we've also got other news on Ørsted this morning. The wind provider is going to sell its European onshore business, which I think I've heard about being talked about before, to CIP, $1.44 billion. So basically, this is another way that they can shore up their balance sheet, which has been stretched and stressed of late as a result of some of the difficulties it has faced in the United States. So that is the latest on that. But I think probably the latest court win in the United States will also be a beneficiary. So we'll watch that stock at the open.
We have lots to watch at the open. We'll also watch shares of AkzoNobel. That's one of the conversations we're going to be having this morning. Greg Pouguillaume is the AkzoNobel CEO. Of course, he joins us. We will talk about supply chains, as we often do, but all the other themes that add up to his earnings story this morning. Not such a positive outlook being painted by them this morning. Darren Marr will be with us, HSBC Digital Assets Research Head of Senior FX Strategist. So a great opportunity to either pick up on the dollar trend or perhaps focus in on what's been going on with some of those alternative assets, with Bitcoin, with stable coins. Karen Shedid joins us, BlackRock Head of EMEA Investment Strategy. So we will continue the conversation about markets with Karen.
And on the US economy, after the manufacturing data of yesterday, 1 p.m. UK time, the Fed's Barkin will be speaking on the US economy. We'll bring that to you, of course, those comments and lines. 2:40 p.m. UK time, meanwhile, we'll also be hearing from the Fed's Michelle Bowman, get commentary from her. And at 3 p.m. UK time, it is the US job openings. On the news, of course, that non-farm payrolls will not be released on Friday. We'll get more details on that, given the shutdown in the US that continues. And later, it is the World Government Summit that begins in the Middle East. And AMD, that is a big one, of course, the competitor to NVIDIA coming through with earnings. And Merck Pfizer as well. My focus certainly will be on AMD and whether or not they set a positive tone in terms of the demand picture.
OK, no data again. Does this confuse the picture? Does it change the narrative around these markets? Are we going to end up in a situation once again we don't have clean reads on what is happening in the labour market in the United States? Which piece of data do I rely on? All these questions are coming back to me.
I'm sure transparency is the holy grail and what we all want. But we saw last time how people could find whatever argument they wanted in an opaque situation where the data wasn't available. They could make whatever case.
And a shutdown is not about the economic impact. It's very minimal, particularly if this is expected to last just for a few days. We know that President Trump, the White House, has been reaching out, of course, to Democrats and the senators to get this across the line. But the lack of detail, the lack of clarity in terms of the jobs picture. And where is the focus for the Fed right now? Is it on inflation? Is it more on the labour market? Because, of course, they've pivoted between those two mandates. And now, with the expectation, of course, that we do get a new Fed chair come May, and what Walsh makes of that dynamic in terms of inflation.
Powell downplayed the employment story. Thought it was much more balanced. That was definitely the commentary coming out of the last meeting and certainly out of the last press conference. So is the data going to support that? The whisper number's 53k, the survey number's 70k going into this data, but we don't know when the data's going to come. But then we move beyond that. How data dependent does Walsh feel at the moment? Is he going to be a data dependent Fed chair?
Or more of an ideologue? And that seems to be a debate we still don't have an answer to.
No, and I agree. That's what we need guidance on. But is he going to keep his mouth shut until we start to get into the confirmation hearing process? What else do you need to know this Tuesday morning? Let's walk you through the details. President Trump says he's seeking $1 billion in damages from Harvard University after the New York Times reported that his administration had backed off demands for $200 million to satisfy accusations of wrongdoing by the Ivy League institution. On his Truth Social platform, Trump said that Harvard had been, quote, feeding a lot of nonsense to the failing New York Times. He did not specify under which authority he'd seek the compensation. Harvard did not immediately respond to a request for comment on this story. The French Parliament has adopted a budget for 2026 after Prime Minister Sébastien Lecornu survived not one, but two no-confidence votes. The new plan reduces spending cuts and tax increases, resulting in a larger deficit for France. The budget is expected to bring a period, though, of relative political calm, with few trigger points for lawmakers to demand a no-confidence vote going forward from here. But remember, 2027 presidential elections. And Indian stocks are surging today, and the rupee is gaining after the US reduced tariffs on the country's goods. President Trump said the US will reduce tariffs on India from 25% to 18%. He is also reportedly removing an extra punitive 25% duty applied in response to India's purchase of crude from Russia, while indicating that the Indian Prime Minister Narendra Modi has also agreed to potentially buy more oil from Venezuela, which implies less coming from Russia.
We don't know what the Indians are giving up for this yet. We don't know the details of this deal. Have they really committed, and what does that mean for the refiners of India? Have they really? Because the refiners have continued to buy that cheap Russian crude. That would be a pretty significant. If they have structurally changed that view on Russian oil, that'd be pretty significant in terms of the geopolitics of the relationship between Moscow.
They also don't buy much from the United States, actually, in terms of goods. And the number there that Trump's expecting they will buy going forward is kind of huge compared with what they currently buy. So are we really going to see that ramp up in purchases of American goods? Many feel doubtful.
Yes, I mean, fast-growing economy, but still a huge income gap with the US, obviously. Interesting that the Sensex is up by more than 2%, but to your point, we don't have all the details on what's been given up here. And tariffs coming down, sometimes it makes sense to think about it from 25 to 18, but from 50 to 18, it is quite a big reduction, isn't it? And quite a surprise, actually, that President Trump seems to have had this about face. So being well received in the Asian session. let's tell you what else is coming up on the programme. We'll head to the World Government Summit in Dubai and hear from IBM CEO Arvind Krishna. That conversation coming up in the next hour of programming. Plus, Amundi plans a €500 million share buyback. We'll check on the wealth manager's stock at the market open. Up next, AXA Nobel CEO joins the show to discuss the latest earnings and outlook for 2026, which may be a little softer than expected. That's certainly the guidance coming through this morning. If you have any questions for our guest, then please do get in touch. IB plus BBTV Go this morning and every morning on the Bloomberg terminal. That's where you'll find us. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Season is here.
Europe's most valuable companies kick off earnings season.
Bloomberg is first to break the numbers.
Some breaking news from First Abu Dhabi Bank.
So Shell, SAP, Total's in the mix there.
You're bringing all the fun today, Guy Johnson.
With the smartest insights.
How are you feeling going into earnings season?
We are still confident that we can deliver to that acceleration of total revenue growth.
Give me a sense of what you're most optimistic about.
I really expect a very strong Q4.
Continuing coverage on Bloomberg.
Welcome back. This is the opening trade, 7:19 in London. The Asian markets, of course, firmly into their trading day and looking set for the best gains since the post-Liberation Day recovery for global stocks. So that's setting the tone, pretty positive over in Asia. Could some of that, it looks as if a lot of that will creep into many of these markets. Perhaps, Guy, X the FTSE, where we could have some impact, other sectors in focus, I suppose.
Can I pour some cold paint on your optimism and just kind of...
Sure. I'm just reflecting 6 tenths higher on the stock 600.
Cold paint. It's going to hit a record this morning, another fresh record high. One stock which I think is going to be interesting to watch this morning is going to be AkzoNobel. Does coatings, paints. That's the kind of thing that this company does. It's been in a tight range for quite a while, as you can see in terms of its stock price. The Q4 numbers are out this morning. Slight miss. It's the outlook, though, that I think is really interesting, really muted, pointing to a difficult first half. Second half gets a little bit better, but that's only because of good comparisons that are likely to come through. Gregory Poux-Guillaume is the company's CEO and joins us now. Good morning, sir.
Good morning.
It's a tough environment you're in right now. The auto sector, we see that in the chip space, is finding life very, very tough. The coatings business, the paint business is very, very tough. You're going to close the Axalta acquisition, which you announced in November, back end of this year into next year. Gregory, is there anything we can do to kind of speed things up a little bit, to get the turnaround going a little bit faster? Because you're painting quite a muted outlook in terms of what you are seeing for this business, to excuse the pun.
Yeah, I'm actually a lot more positive than you are. I think the economic backdrop hasn't been very helpful, but overall, organic sales for us are flat for 2025. So it's not a great year in terms of commercial momentum, but it's linked to the soft macro backdrop. But if you look at our business for Q4 and for the full year, we're price up, we're profits up, we're cash up. So we're within 1% of the guidance that we announced at the beginning of the year, pre-Liberation Day. So it's not great commercial momentum because of macro events, but in a market like this, what you focus on is self-help, and we've done very well on that, and we will continue to do well in 26.
Okay, let's talk about the self-help. Is the self-help internal, i.e. we deliver cost cuts, you've delivered a lot of that? Is it external, i.e. an acquisition of a smaller rival? Or is it actually the end consumer? Can you raise prices? Where does, kind of give us a sense of the balance of the mix of things that you can do to continue to help the business move along?
I'll hit these points one by one. We raised prices in 2025. Prices were up roughly 1% for the year. It'll be the same in 2026. There is pricing power to these products, and we have technical differentiation, and therefore we will be able to capitalize on that. From a demand perspective, if people on the Deco side don't feel confident about the future, they'll be less likely to repaint their home, and there's a little bit of softness on that side, but overall consumer confidence is stable. From a B2B perspective, which is more the coating side, it's very much linked to GDP growth worldwide, and therefore we are hit by the same impacts as everybody else. But the self-help measures, it's about cost efficiency. We're taking out €500 million of cost, 200 million functional costs. The plan's already finished. We're still getting the benefit of that in 2026, an additional 50 million euros. That's a carryover from last year. And industrially, we're making our footprint more efficient and more with better capital returns. And as we are 2 years, we've just finished 2 years of a 3-year program. 26 is last year. We'll have 90 million of benefit from that in 2026. So it's very much internally focused. That's self-help. The Axalta merger is a completely different game. It's about creating a global leader in coatings.
Gregor, on that, good morning, it's Tom. On the Axalta merger, 2027 is the time frame, early 2027. This is potentially a $25 billion merger. What are the synergies that you're looking at, and are there any potential headwinds to getting that merger across the line? What are the biggest challenges in terms of making that merger happen efficiently?
I keep talking you up. So you said early 27. Our target is late 26. We'd like to close this thing in late 2026. The main hurdle between us and closing are regulatory hurdles. As you know, in a large merger like this, you have to file for regulatory approval, and the two most significant geographies are Europe and the US. And by the end of next week, we'll have completed all our filings, all the material filings. So we're progressing really well, working really well with Axalta. And we believe there's a lot of value for customers, for employees, and for the market in general, and that this merger should find support. But we'll put our best foot forward and aim to close by the end of 26.
Okay, end 2026. Okay, we'll make a note of that. Artisan Partners, a major shareholder, of course, in Axalta, is opposed to to the takeover? How much concern is there around what they may try to do?
Look, I can't speculate for Artisan. This is really a question that you'd have to ask them. But what I would point out is that when they wrote this letter that said in November that they were opposed to the merger, they were not a shareholder in AkzoNobel. And in the weeks that have followed, and I've met with them directly in the U.S. in December, and it turns out that they are now AkzoNobel's fourth largest shareholder. They announced that they crossed the 5% threshold a couple of weeks ago. So essentially, since they wrote that letter, they've deployed $500 million of capital into AkzoNobel to become our fourth largest shareholder. I'm not going to speak on their behalf, but I think they're voting with their money.
Good morning to Greg. Can I ask you about global manufacturing? Do you see any green shoots in the global manufacturing story? We saw that in data out of the US yesterday, but that's just one data set. Some German data has come in better than expected, but still not showing growth. Are you seeing any reasons to be cheerful on that front?
We're seeing, we're forecasting a slight pickup in the second half of 2026. We believe the first half of the year is going to be very similar to 2025. We believe that vehicle refinish, the paint that people use to repair their cars, that market is going to pick up in the second half of 26 because insurance premiums are adjusting to a new market reality. Last year, the premiums were really expensive compared to people's disposable income, and essentially people were no longer repairing their cars. That, we believe, is going to normalize in the second half of 26. We see the deco market in China rebounding in 27 as construction starts picking up again. We see a lot of positive markets. Aerospace order books are full. We are the market leader. It's really about keeping up with demand. It's a mixed bag. Mostly it's subdued. Not going to change in early 26. Hopefully some signs of pick up in the second half of 26.
Okay, Greg, it's a fast-moving geopolitical situation. Politics in the States changes a lot. Are you assuming 2026 is a little quieter, or is it far too difficult to make that kind of prediction as it impacts your business, I mean?
I wish I could predict that, but, things change all the time. I think India had 50% tariffs to the U.S. when I went to bed last night. When I woke up this morning, I think it's 18%. So it's things are moving. If I take Q4 for us, the weakness came from North America. A lot of the weakness actually came in North America came from Mexico, and it's because of the tariff environment and some of our customers slowing down their investments. But for Akzo, we're multi-local. We are wherever our customers are. So it's not so much about a direct impact for us. It's an impact on our customers.
Thank you. Thank you very much. Thanks for your time, the AkzoNobel CEO, Greg Pouguillaume. We thank you very much for joining us. Coming up, Bitcoin bounces from yesterday's lows, but the cryptocurrency remains under pressure. We'll talk to HSBC's head of digital assets research. That's next. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Morning, how you doing? Tuesday morning, half an hour to go until the cash equity trades here in Europe starts. Futures look pretty positive. They look pretty positive over in the States. Asia's had an absolutely cracking session. Technology really roaring ahead. If you back out Chinese tech, that is. The Korean market definitely bouncing back quite strongly. Gold's back up. FTSE 100 is going to be the underperformer today, though, which is interesting. But oil's trading quite a lot softer at the moment as well. So, yeah, positive picture. Are we back? Is the bond market exciting this morning?
Let's have a look, see how exciting the bond market is. And the reason it could be is because, of course, we've had some news out of France. I say could be. We're not seeing a huge amount of movement, are we? But we have had some news out of France overnight. The Prime Minister surviving 2 no confidence votes and the budget being voted through. So that means that the French that we were primed to watch the French 10-year yield. We're not seeing a huge amount of movement in it, as I think we'd already got to this point, hadn't we? We're already assumed that we were through the worst on the French political narrative. Where we are seeing a lot of risk on trading and some really interesting dynamics is over in the Asian markets. Let's get there. The Asian market's faring pretty well. Winnie Su has an update from Hong Kong for us. A different picture today then, Winnie.
Yeah, morning, Anna. Indeed, because we are enjoying our best days since April, while yesterday was actually the worst day since April, so lots of volatility here. But for now, we are seeing that the MSCI Asia up some 3%. And as you mentioned earlier, it's really been driven by the gains in the tech shares. And in fact, that top contributor to our gauge today is Samsung Electronics, jumping 10% and having its best day since 2008. And that's really lifting the Kospi up here about 7% to another record close. When it comes to the HS Tech, a bit of weakness, down 1%. So it is an outlier because of some concerns around how authorities are thinking of raising tax for the internet companies. Now flip the board and take a look cross asset, because yes, we talked about RBA raising rates, and it is the first major central bank to do that this year, and that's lifting the currency and also the bond yields here higher. However, it did pair a bit of gains just earlier because of that cautious tone from the presser. When it comes to the Japanese 10-year yield, also here ticking slightly higher. The demand was quite weak when it comes to the auction earlier today, signaling a bit of nervousness when it comes to investors' mood ahead of that election this weekend. Now, also take a quick look at Indian assets, because that big news in our region today is President Trump cutting the tariff rates to 18% from essentially 50% for Indian goods, and you can see that's lifting overall stock benchmarks, especially exporters, and also helping currencies. And it's very significant for the Indian market because the U.S. is the biggest export market for India. Back to you, Anna.
Winnie, I'll pick it up from here. Thank you very much indeed, Winnie Su, on a big day, of course, in terms of the Asian equity trade. Amazing moves in Samsung, as Winnie was saying, as the focus returns to some of the hardware and memory chips from SK Hynix and that company as well. Let's turn to Bitcoin now, though. The cryptocurrency still under pressure today. It's marginally in today's session, but that's after a brief rebound from a 10-month low. Guests on Bloomberg TV have weighed in on the recent performance.
cycles for Bitcoin were preceded by the gold price increasing first. This so-called debasement trade, if I can just back up a little bit, I think is misplaced.
A lot of these different gauges of risk all kind of broke down at the same time in October and early November. And we often can see that when Bitcoin breaks down, or just, it can be not necessarily a leader of a decline in the equity market, but at least a sideways kind of move.
If we're right about our previous discussion, dollar weakness and Bitcoin being an alternative store of value, I think for the real diehard believers there, this could be one of those buy the dips moments.
Bitcoin's a great example, down 12% in the past week. It's really struggled, and it's predominantly a liquidity proxy. Certainly some of the commodities have been these liquidity proxies as well. So I think you stay away from those and you stay to more the tried and true. We still like large cap US, mid cap US.
Let's get another view on the Bitcoin and crypto story and bring in Dara Meher now, Head of Digital Assets Research and Senior FX Strategist at HSBC. Dara, good morning. Morning. So, the ETF story seems to be crumbling for Bitcoin. Geopolitics hasn't helped it. It's down about 20% over the last 12 months, down a little over 30% since its peak in 2025. What is going on, and does the story for Bitcoin turn around in 2025?
I think you captured it, right, in that 30-second little video vignette of people's logic for what should drive this price are so varied. Is it an inflation hedge? Is it a risk asset? Is it an anti-dollar debasement? They're all out there. All the theories are out there. And I think the price action we've seen in cryptocurrencies more broadly is just reflective of this real struggle for investors to understand what to do when all your correlations, your reliable links, your relationships are just not reliable.
Because it seems to play no function at this point.
Well, there you go.
Does it play any role? Does Bitcoin play any role?
Bitcoin. Oh, come on, look this morning. You just shouted Asian equities higher. Oh, and gold higher too. And you're like, seriously? So, look, I think at the moment we have to kind of go, you're relying on these beautiful historic relationships. Dollar's the safe haven. No, it's not. Well, at least not this week, but maybe next week. We got all these relationships. And I guess the Bitcoin maximalists would have all been, this is the inflation hedge, or this is the anti-dollar. Yeah. And they're just not working, right? And so you basically can come up with any number you want, but I think the core issue here is just a breakdown in standard financial market relationships.
Yes, and so maybe I'll ask more about one of those relationships, and that's Bitcoin and gold. What should we be seeing there? Because does that explain some of the weakness that we've seen in Bitcoin? We've just been so distracted by this huge rally in gold, and maybe it attracts a similarly motivated investor, at least in part?
It does, right. So that's one of the strands for Bitcoin, is that it's kind of crypto gold, right? Gold on blockchain. And you've had Jim Steele on this show a few times, our metals analyst, and he's been very bullish gold. But I think, even he's been surprised by how amplified the rise was. But again, you see the volatility, you see that breakdown over the last week or so. Just a very small Kevin Walsh-induced nudge, and suddenly, gold is on the retreat even more and more. So I think there's a sense that positioning here has been squared up. That's what's creating volatility. But I'm not sure that people are making that great parallel, a very, if you like, reliable parallel between gold and Bitcoin.
Are we at one of those phases? We seem to go through phases with Bitcoin. Sometimes we talk about Bitcoin and that's the exciting thing, and other times Bitcoin's fading and we're talking all about blockchain and maybe about stable coins. Are the latter in the driving seat now in terms of where the narrative goes?
We looked at corporate earnings announcements, right, through last year, and what was curious about that was stable coins were talked about all the time, and Bitcoins were like nothing, radio silence. And I think that continues. We saw it again in the third quarter earnings season. I think we'll see it as we're moving through Q4 earnings season now. Corporates are talking about stable coins because this operates broadly within kind of the guardrails of regulatory crypto, right? And therefore, if you're thinking about institutional adoption as being the next big leg up for digital assets in general, stable coins are that vehicle of the moment, and that hence why they're the talking point. And actually, many more transactions are done through stable coins on chain than are done through Bitcoin and other, if you like, more volatile crypto.
Is crypto's biggest problem that Chinese investors can't buy it, and they can buy gold? So they buy gold and they can't buy crypto.
It's part of it. I'm not sure it's necessarily the biggest problem.
So what is the biggest problem?
Well, I don't think there is a problem. I think there's a constituency that will use cryptocurrencies that are fully flexed against the dollar, whether it's a speculative asset or whatever it might be. I think for institutions, though, what they're looking at is the plumbing. They're not looking so much at kind of, hey, how much money can we make out of Bitcoin? What is the plumbing change to capital markets?
So we think crypto is a speculative asset, but in reality, it's a plumbing asset.
Well, I would say digital assets, it's all about the plumbing. That sounds like a terrible report title, doesn't it?
Yeah.
No, it doesn't sell. But really what it's about, look, why do institutional investors get excited about blockchain? Because they can move money quickly. Because it lays the prospect of T+0 atomic settlement. That's what's exciting.
That's the exciting bit.
You can guess whether Bitcoin's going to 200,000 or going to zero. That doesn't matter. For investors, I think for institutional investors, it's the plumbing that matters.
Back to the 200,000 versus zero. If Michael Saylor has to sell, and MicroStrategy has to sell, what do you like? Is that the next big catalyst you're watching out for?
Honestly, no. And I'll give you radio silence on that one. I would say the next big catalyst I'm looking for actually is away from Bitcoin and cryptocurrencies, and it's tokenized deposits at commercial banks. That is a massive lump of money. You think about what's the market cap of stablecoins? $300 billion US. What is the cumulative deposit base of the big 5 currency blocks? $100 trillion US. Right? Against 0.3.
Sounds like we're missing the point here.
Well, it is.
When we focus on crypto.
I know, but you don't get exciting headlines about tokenized deposits, do you? You can't say, oh, tokenized deposits is more. Right, so that's the reality.
Yeah, no, fair enough.
For people who want to move money, that's the way you're going to move it.
Okay, well, we'll unashamedly go back to the plumbing then, and we'll talk about that, Dara. But so this is where it gets, I think, a bit more interesting in that plumbing that you described
more
there.
Interesting than it's already been.
And that opportunity that you're watching. I mean, is there geopolitical concern there? Is there dollar dominance concern in stable coins in the same way that we've seen played out in the wider market around the fiat dollar?
I think that's fair. There's been different approaches depending on your jurisdiction. US is all in on stable coins and essentially banning a retail central bank digital currency. China, for example, is all in on a retail central bank digital currency and banning stable coins.
But there's just so much dollar stable coin and not so much something else. Is that worrying?
Yeah, but then I come back to the tokenized deposit view. Like, even allowing, it's true, basically 99% of stable coins are US dollar. That's $300 billion. You've got 100 trillion of deposits. Some of them are in dollars, some of them are in euros, some of them are in yen, and they're all there ready to be tokenized. So I think if you're trying to protect monetary sovereignty, if you're trying to protect against backdoor dollarization, what you do is you promote your tokenized deposit regimes. Now that's okay in G10, but I think to your point, Anna, where you're in EM and they want access to hard currency, then stablecoins still provide that route.
If what you're forecasting around stablecoins and tether and tokenized deposits, if that comes to the fore, is that?
गाइस यहाँ पर एक क्रूड ऑयल का बाइंग का ट्रेड है, इसमें ध्यान रखना है, इसमें एसएल ये फिक्स एसएल नहीं है, इसमें एसएल होगा कैंडल बेसिस पे, ठीक है। ये अगर एक कैंडल है, ये जो लेवल है यहाँ पर आपका 5558, इसके नीचे अगर एक के नीचे एक दो कैंडल क्लोज होती है तो ब्रेकडाउन माना जाएगा। अगर एक के नीचे एक दो कैंडल क्लोज नहीं होती है तो ये ब्रेकडाउन नहीं मानेंगे, ठीक है। तो कोई फिक्स एसएल नहीं है कि यहाँ पे मैंने फिक्स एसएल रखा हुआ है, इतना ही एसएल होगा। एक के नीचे अगर एक कैंडल क्लोज होती है तो ब्रेकडाउन कंफर्म है। एक के नीचे एक कंसेक्यूटिव कैंडल क्लोज नहीं होती है तो भले ही ये पॉइंट वाइज लेवल के नीचे क्यों ना आ जाए, दैट इज स्टिल वी कैन एक्सपेक्ट इट इज ऑन सपोर्ट। तो ये लेवल इंपॉर्टेंट रहेगा 5558, इसके नीचे 15 मिनट की दो कैंडल एक के नीचे एक क्लोज, तभी ब्रेकडाउन मानना। एक के नीचे एक कैंडल क्लोज नहीं होगी तो ब्रेकडाउन नहीं होगा, ठीक है। हाँ, एक के नीचे एक कैंडल क्लोज होती है तो फिर ये सपोर्ट ब्रेकडाउन में कन्वर्ट हो जाएगा, दैट एक्ट लाइक एज रेजिस्टेंस। नेक्स्ट सपोर्ट फिर नीचे वाला है 5438। पॉइंट बेस पे मत रखना एसएल को, कैंडल बेस पे देखेंगे। हो सकता है थोड़ा बड़ा हो जाए एसएल तो क्वांटिटी हिसाब से कम रखियो फिर, ठीक है, बिकॉज यहाँ पर एग्जैक्टली लेवल पे नहीं रख सकते एसएल। इंडियन मार्केट को भी देखोगे प्रॉफिट बुकिंग में ज़्यादा ही आ गया है ओवरऑल मॉर्निंग से जितना गैप अप हुआ था ठीक ठाक प्रॉफिट बुकिंग मॉर्निंग पे करी उसके बाद साइडवेज ही होना है 15 मिनट में स्पेशली निफ्टी फ्यूचर बैंक निफ्टी फ्यूचर भी वही प्रॉफिट बुकिंग साइडवेज कोई ट्रिगर पॉइंट नहीं था दैट इज द ओनली वन ट्रिगर पॉइंट इंडिया यूएस ट्रेड डील एंड देन मार्केट साइडवेज कंप्लीटली ठीक है ऊपर निफ्टी में अभी भी रेजिस्टेंस बना हुआ है 26,400 450 बट नीचे अब सपोर्ट है 25,600 टू 550 उसके नीचे जब तक ब्रेक डाउन नहीं होता क्योंकि स्ट्रक्चर ब्रेक किया है दैट एक्ट लाइक सपोर्ट मुझे लग रहा था थोड़ा सा और नीचे आता तो बेटर रहता बट ठीक है कल गैप डाउन हो जाए बेटर है या अभी सेलिंग आ जाए क्लोज होते होते 25,550 600 के आसपास हम बात कर रहे थे यूएस डॉलर इंडेक्स की मैंने बताया था 97.50 डॉलर के आसपास तक प्राइस के पास है एक रिट्रेसमेंट लेवल उसके ऊपर सस्टेन नहीं होना चाहिए 97.448 के अराउंड से रिजेक्शन मिला है देखते हैं 97.50 के ऊपर जाता है नहीं जाता है गोल्ड और सिल्वर ऑलमोस्ट लोअर एंड से 12% रिट्रेस कर चुके हैं गोल्ड भी फॉरेक्स में एंड सिल्वर भी $78 स्टिल होल्डिंग 4 आवर टाइम फ्रेम प्राइस काफ़ी ट्राई कर रहा है उसके नीचे जाने का बट मुझे लगता है अब जाएगा वो जो एक 4 आवर की कैंडल थी प्राइस के ऊपर भी निकल गया है विच इज़ वेरी गुड इन फॉरेक्स चार्ट सिल्वर को देखोगे 78 डॉलर का लेवल था ये कैंडल जो ब्रेक हुई थी वापस रिकवर करी है इसके ऊपर भी अब मुझे लग रहा है कैंडल क्लोज होने वाली है 1 घंटा रह गया तो इट इज़ परफेक्टली होल्डिंग दिस $78 सपोर्ट टाइम फ्रेम पे देखोगे तो 111 112 के आसपास तक का टारगेट मिल सकता है इसमें बट वो डायरेक्टली तो जाएगा नहीं वहाँ तक 15 मिनट टाइम फ्रेम पे प्राइस के पास पहले भी रेजिस्टेंस है तो देयर इज अ वेरी हाई चांसेस प्राइस विल होल्ड दिस लेवल अराउंड 95 to 96 $97 क्योंकि इसने प्रीवियस मैं सिल्वर की बात कर रहा हूँ लो लेवल पे 70 के आसपास लो बनाया है तो आप मान के चलो अब ये 70 तक पूरा सपोर्ट जोन ही बन गया है अब प्राइस 4 आवर टाइम फ्रेम पे एटलीस्ट जब तक $70 के नीचे 4 आवर टाइम फ्रेम पे ब्रेकडाउन रीटेस्ट नहीं करता इन द सेंस अब एक के नीचे एक कैंडल क्लोज नहीं करता तब तक ये सपोर्ट ठीक ही है अब बाय द वे यहाँ पर ये थर्ड टाइम आया है सपोर्ट लेने ध्यान रखना ये सिल्वर 4 आवर टाइम फ्रेम पे फॉरेक्स में पहली बार आया था एक हाई बनाया था दूसरे बार मार्केट ने हायर हाई बनाया है जो लास्ट ऑल टाइम हाई है ये थर्ड टाइम बाइंग है इन केस यहाँ से अब थोड़ी बड़ी बाइंग नहीं आती है ठीक है फर्स्ट टाइम एक हाई बनाया था दूसरे बार ये हायर हाई ये थर्ड टाइम बाइंग आ रही है अगर ये प्रीवियस स्विंग के ऊपर नहीं निकलता है और यहाँ से कहीं पुल बैक आता है then this level $70 will act like a very strong support and अगर ये ब्रेक हुआ तो फिर जितना ये यहाँ से यहाँ मोमेंटम आया है ना ऑलमोस्ट 40% ठीक है 40 से भी नहीं उससे भी ज़्यादा है लगभग 56% कितना है 45% है या 41% उतना ही नीचे और जा सकता है तो अभी के लिए आप कह सकते हो लास्ट सपोर्ट जोन 70 प्राइस को अगर जाना है हायर हाई टाइम फ्रेम पे और नई रैली दिखाने के लिए तो ऑल टाइम हाई के ऊपर सस्टेन करना चाहिए। ये बहुत मुश्किल भी नहीं है सिल्वर के लिए वैसे, ओवरऑल तो सिल्वर बुलिश ट्रेंड में ही है, थोड़ा सा कुछ ट्रिगर वगैरह मिल जाता है मार्केट को तो हो सकता है जाता रहे। % का रिटर्न है। ओह, ओपन इक्वल टू हाई है कैंडल, देखो लास्ट कैंडल नीचे क्लोज तो नहीं हुई है, बढ़िया ही है, नॉर्मल कैंडल थी वो तो एंट्री वाली। बट याद रखना इसमें एसएल जो रहेगा वो कैंडल वाइज रहेगा क्रूड ऑयल में, ना कि पॉइंट वाइज, ठीक है। 5858 ये येलो कलर का बॉक्स बना है, इसके नीचे दो कैंडल एक के नीचे एक अगर क्लोज हो गई तो ब्रेकडाउन है, ऐसे काम नहीं चलेगा। Okay, this current candle is open equal to high, इसका ओपन और हाई सेम ही है। 5567 ओपन, 5567 हाई। ध्यान रखना इसमें, ठीक है, क्रूड ऑयल में ओपन इक्वल टू हाई कैंडल है, सपोर्ट पे ओपन इक्वल टू हाई बन रही है, या तो ट्रैप करने के लिए या फिर प्रॉपर ब्रेकडाउन होगा। क्रूड ऑयल में नीचे एक कैंडल क्लोज हो गई है, ओपन इक्वल टू हाई बनी थी. दिस कैंडल इज इंपॉर्टेंट, अगेन ओपन इक्वल टू हाई. ये कैंडल इसके नीचे क्लोज हुई तो ये ब्रेक डाउन हो गया समझो इसका. ये लेवल फिर होल्ड नहीं करने वाला. हाँ, फिर से ओपन इक्वल टू हाई, वही सेम ओपन इक्वल टू हाई बना रखा है. अब इधर पर ये 5440 दोनों कैंडल ही ओपन इक्वल टू हाई बना रखी हैं एग्जैक्टली. 215 की कैंडल ने थोड़ा होल्ड करने की कोशिश जरूर करी थी बट डजंट होल्ड नाउ. इस होल्ड कर रहा है अभी भी क्रूड ऑयल में. ध्यान रखना कैंडल वाइज ही है इसमें एसएल, एग्जैक्ट लेवल पॉइंट पे एसएल नहीं है. ये कैंडल क्लोज नहीं होनी चाहिए 15 मिनट टाइम फ्रेम पर प्रीवियस कैंडल के नीचे. लास्ट दो कैंडल ओपन इक्वल टू हाई बनी है, ये भी ओपन इक्वल टू हाई ही है. देखते हैं रिकवर करता है या नहीं करता है. ये रिकवर है, रिकवर कर गया है, ओपन इक्वल टू हाई प्रीवियस कैंडल का निकाल दिया है। ग्रेट, मतलब ये है सपोर्ट जोन ही है, दैट इज अ होल एरिया इज अ सपोर्ट एरिया। ठीक है, दोनों सपोर्ट पास पास ही हैं, ये भी सपोर्ट है, नीचे भी सपोर्ट है, तो दोनों जगह से मुझे लग रहा है मिक्स लिक्विडिटी लेने की कोशिश में। नॉर्मली होता है ऐसा कई बार, सपोर्ट और रेजिस्टेंस अगर बहुत पास में है तो प्राइस कई बार लिक्विडिटी लेता है इस तरह से। स्टिल होल्डिंग सपोर्ट, यह है सपोर्ट पर ही है क्रूड, प्रीवियस कैंडल के ऊपर निकल गया, प्रीवियस कैंडल के लो के ऊपर ही है, एंड ये कैंडल भी ओपन इक्वल टू हाई थी तो निकाल दिया, तो या दिस होल एरिया इज अ सपोर्ट नाउ। ठीक है, इतना बड़ा हिस्सा तो ले नहीं सकते, बिकॉज हो सकता है एग्जैक्टली इस टिप को सपोर्ट लेके चला जाए, हो सकता है नीचे वाले लेवल पे आ जाए या फिर इसके बीच में कहीं सपोर्ट ले। किया हुआ है स्टिल इंटरनल लिक्विडिटी पर, एक्सटर्नल लिक्विडिटी पर। तो अभी ये सपोर्ट जोन है पूरा, याद रखना, इवन तो इसके नीचे भी सपोर्ट है, मुझे नहीं लग रहा उस लेवल पे जाएगा, क्योंकि अब मोस्ट प्रॉब्ली उसके नीचे जो लिक्विडिटी होगी प्राइस वहाँ ही जाएगा ट्राई करने वापस। That is called external liquidity. ये रुके हुए हैं बाइंग में, रुके रह सकते हो, फिर से री एंट्री करनी है तो फिर से कर सकते हो, बट याद रखना बेसल इस लेवल के नीचे कंसिडर होगा, 5500 के नीचे। हाँ ठीक, 5490 के नीचे। ठीक है, 3 मिनट और हैं। कैंडल मोस्ट प्रॉब्ली मुझे लग रहा है क्लोज प्रीवियस कैंडल के लो के ऊपर ही होगी, ऐसा होता है तो दिस लेवल इज अगेन सपोर्ट जोन, बस थोड़ा सा नीचे इंटरनल लिक्विडिटी तक चला जाएगा, हल्का सा पुल बैक में वापस ले सकते हैं। ध्यान रखना इसमें ऐसे अब शिफ्ट होके 5490 होगा, 5490 के नीचे। फाइव 5490 होल्ड कर देगा, देन 430 के अराउंड है। श्योर, ठीक है, होल्ड कर गया लेवल। ठीक है, तो ये थोड़ा सा ऐसे शिफ्ट हुआ है, नथिंग एल्स। ठीक है, ये नया सपोर्ट जोन है, ऊपर रेजिस्टेंस भी थोड़ा सा शिफ्ट हो चुका है ना, जो पॉइंट ऑफ इंटरेस्ट था वो मुझे नहीं लग रहा वहां पर आएगा अनटिल अनलेस प्राइस वापस 5680 के ऊपर क्लोज नहीं करता, दैट विल एक्ट लाइक एज फर्स्ट मेजर रेजिस्टेंस। अभी भी नीचे वाला सपोर्ट अप्रॉक्सीमेटली 80 पॉइंट डिस्टेंस पर है, तो हम एक्सपेक्टिंग कि थोड़ा पुल बैक आए। अपर लेवल से अगर सेलिंग आनी है, थोड़ा अपर लेवल से सेलिंग करके फिर गिरे तो बेटर है। ठीक है, यहाँ पर भी देख लो, याद रखना ये नीचे वाला सपोर्ट थोड़ा सा फिक्स स्ट्रेच हुआ है, नथिंग एल्स। 4 आवर टाइम फ्रेम पे देखोगे थोड़ा सा लिक्विडिटी और नीचे आ रही है टाइम फ्रेम के अकॉर्डिंग, तो ये अभी भी होल्ड करके बैठा हुआ है। प्रीवियस लेवल दोबारा री एंट्री कर सकते हैं, अगर प्रीवियस ट्रेड में है तो वहां पर भी रुका जा सकता है, बट याद रखना एसएल थोड़ा सा बड़ा हो जाएगा। वहां पर अगर एक काम कर सकते हैं, अगर उस लेवल पे भी एंट्री पर हो, विच इज 5,550 के अराउंड, तो वहां पर आने पे कॉस्ट टू कॉस्ट पे निकल जाओ, फिर से नीचे आएगा पुल बैक, फिर से री एंट्री कर लेना। ठीक है, वो सेम ही लेवल है, थोड़ा सा एसएल स्ट्रेच हुआ है, तो ऐसा ना हो कि हम यहाँ पर एंट्री करें और फिर इतना बड़ा एसएल ज़्यादा बड़ा हो जाएगा, इतना टारगेट भी नहीं है। तो इस लेवल के आसपास जहाँ पुराना सब बाइंग जोन था, ठीक है, वहाँ पे एंट्री हुई है, ध्यान रखना, ऐसा नहीं वहाँ पे एंट्री नहीं हुई है, बिकॉज ये ओपन इक्वल टू हाई वाली कैंडल थी, वो बाद में बनी है। जो लेवल पे कैंडल आई थी दैट इज नॉर्मल कैंडल, दैट इज नॉट ओपन इक्वल टू हाई, सो लॉजिकली दैट वाज अ एंट्री। ठीक है, वो नॉर्मल एंट्री है वहाँ पे, तो अगर वहाँ पे एंट्री कर रखी है थोड़ा सा अपर लेवल पे, वहाँ पर निकल सकते हैं, कॉस्ट टू कॉस्ट पे पुल बैक देगा तो दोबारा री एंट्री कर लेना, सो दैट एसएल नॉर्मल ही रहे, अदरवाइज एसएल काफ़ी बड़ा हो जाएगा। 80 पॉइंट नॉट वर्थ इट। ठीक है, एसएल स्ट्रेच हुआ है तो उसमें हम भी कुछ कर नहीं सकते। नहीं हुआ है, ध्यान रखना, ब्रेकडाउन मत कंसिडर करना अभी इसको, दैट इज स्टिल ऑन सपोर्ट। कौन से लेवल पे है? 5656। नीचे भी है एक सपोर्ट, दिस वन, दैट इज आल्सो सेम स्ट्रॉन्ग, ये भी स्ट्रॉन्ग ही है। इस लेवल पे भी दूसरी बार आ रहा है, यहाँ पर भी प्राइस 2 बार आ चुका है नीचे वाले लेवल पे। हाँ, 2 बार आ चुका है नीचे वाले लेवल पे, इस लेवल पे भी दिस इज सेकंड टाइम नीचे वाले पे आएगा, दैट इज अ थर्ड टाइम 5440। ठीक है, इस वाले लेवल पे, लेकिन करंट जो लेवल है इस पे इससे बड़ा ऐसा नहीं लेंगे, बिकॉज ये इसके नीचे गया तो फिर नेक्स्ट लेवल तक आ ही जाएगा, बिकॉज इसके नीचे इंटरनल लिक्विडिटी नहीं है, दैट इज एक्सटर्नल लिक्विडिटी, वो कौन लेवल ही अलग हो जाएगा। ये जरूर इंटरनल लिक्विडिटी का जोन है। एक्चुअल सपोर्ट इसका 5550 के अराउंड है, बट स्ट्रेच करके ये 5530 तक गया है, 20 पॉइंट, 20 टू 30 पॉइंट और एक्सटेंड है। ऊपर देखोगे तो ऊपर 5650 टू 680 एज अ रेजिस्टेंस। कॉस्ट टू कॉस्ट पे आ गया है क्रूड ऑयल, जिन लोगों ने ऊपर वाले लेवल से लिया था, अगर उस लेवल पे निकलना चाह रहे हैं तो निकल जाओ, या फिर एसएल कॉस्ट पे रख लो, दो चीज़ कर सकते हो, क्योंकि याद रखना यहाँ पर से अगर एसएल लगा के बैठोगे, ओरिजिनल एसएल वही है, शिफ्ट हो गया, तो थोड़ा सा एसएल काफ़ी बड़ा है, वो 80 पॉइंट इज़ वेरी बिग, इतना टारगेट नहीं है, ध्यान रखना कंपैरिजन में। तो इस लेवल पे जिन लोगों ने एंट्री करी थी वो या तो कॉस्ट पे रख लो या फिर निकल जाओ, ठीक है। पुल बैक आएगा, वापस री एंट्री कर सकते हैं। ठीक ठीक है, मैं इस लेवल को रिमूव कर रहा हूँ, 5552 वाला, ये दैट इज़ ओरिजिनल बाइंग लेवल। फुल लेवल लिक्विडिटी में है ना, वहाँ पर सारी लिक्विडिटी एक साथ ग्रैब हो जाती है। Like this level in natural gas, hold it. मंथली टाइम फ्रेम पर ठीक है उसमें लेवल। में जिन लोगों ने लिया था उस लेवल से निकल जाना, ठीक है, या तो कॉस्ट टू कॉस्ट पे एसएल रख लेना, वो काफ़ी बड़ा एसएल हो जाएगा, वापस नीचे आएगा, वहाँ नीचे वाले लेवल पे एंट्री कर लेना, एसएल छोटा है वहाँ पर अब। मिनट है, अगर वो क्लोज हो जाती है लेवल बेस पे तो आ जाएगा। expected crude oil jump after taking the external liquidity, ठीक है, इसलिए मैं कह रहा था यहाँ पर लाइक ये जोन काफ़ी अच्छा है सपोर्ट का। प्राइस इस तरह से मोमेंटम करता ही है जब प्राइस को लिक्विडिटी लेनी है। ओपन इक्वल टू हाई कैंडल नॉर्मली या तो ब्रेक डाउन के लिए बनती है या फिर ट्रैप करने के लिए बनती है, एंड इन दिस टाइम इट इज़ जस्ट फॉर ट्रैपिंग। थोड़ा सा अगर ये नेचुरल गैस भी नीचे आ जाए इसमें भी एक बाइंग अच्छी बनेगी। वैसे ये भी वॉलेटाइल ही हो रहा है अभी भी। मॉर्निंग ओपन के बाद देखोगे कल डेली टाइम फ्रेम पे काफ़ी फॉल किया था। नहीं तो अगर ऊपर आता है तो वापस सेल कर देंगे इसको, नेचुरल गैस को। लेट्स होप कोई न्यूज़ ना आए। ऊपर से क्रूड ऑयल में देखो वापस सेलिंग का प्लान करेंगे, डिपेंड अपॉन द कैंडल कैसी बन रही है। थोड़ा सा अपर लेवल पे आता है, एक सेलिंग अच्छी बनेगी वापस से। almost 100 point की complete recovery in crude as expected. डायरेक्टली सेल मत करना, ऊपर थोड़ा वेट करेंगे कैंडल कैसे क्लोज हो रही है। ये भी कैंडल देखोगे ओपन इक्वल टू लो बन रही है, तो डायरेक्टली सेल मत कर नहीं करेंगे क्रूड में।
It's hard to overstate how big and fast of a drop this is for the US dollar. The value of the dollar affects everything from the price of an iPhone when sold overseas to how much you're going to have to pay for that summer trip to Europe.
This story is about the global community losing its confidence in the US dollar and quietly quitting US assets, but this administration doesn't seem to mind it.
The dollar had its biggest drop since US President Donald Trump unveiled his universal tariffs last April.
Donald Trump imposes the steepest US import levies in a century, with China facing a tariff of more than 50%. The dollar is also weaker.
The dollar fell in a really big way against major peers: the yen, the euro, the pound, the Swiss franc. This chart over the past month shows just how stark the dollar's drop has been so far this year. The vast majority of days, the moves are very slightly up or very slightly down. But on January 27th, the dollar fell 1.1%. That large of a move accounts for about 1% of all days.
To understand the current dollar decline, we need to broaden the lens here a little bit because it is coming off very strong levels. Even at the start of 2025, the Bloomberg Dollar Index was hovering at near the highest in at least 20 years.
The foreign exchange market, or FX market, is where investors buy, sell, and speculate on currency movements. The scale of the currency markets is massive. On average each day,
shadow over the U.S. economy at the time when growth is still fragile. If you look at the past 6 months or so, there has been little to no job growth in America, and that's largely believed to be the result of the trade war and the immigration crackdown.
The dollar's weakness has come despite a rise in Treasury yields and the Federal Reserve's reluctance to cut interest rates further.
For global investors who want to participate in U.S. stocks or play the AI theme, they may now be emboldened to hedge more of their U.S. dollar exposure given the dollar declines.
A prolonged and sharp weakening of the U.S. dollar brings with it a number of dangers for the U.S. economy. Trump in the past has made no secret of his desire for a softer dollar. A weaker dollar will boost American exports and promote American manufacturing. On the flip side, it makes imports more expensive for American consumers. It also comes at a time when there's sustained pressure on inflation from Trump's tariff policies. The U.S. has about $38 trillion worth of debt, many of which is owed to foreign countries, and a weaker dollar makes it all the harder to pay off that debt. The best case scenario is that a gradually weaker dollar ultimately does help promote American growth and exports. The worst case scenario is that a sharply weaker dollar ultimately leads investors to question the merit of investing in the U.S. That could lead to capital flight.
Despite U.S. stocks hitting record highs here recently, they've actually steeply underperformed global peers. And that suggests that investors don't have to sell America in order to hurt the dollar. They just have to buy less of it.
Trump's combative policymaking shows no signs of letting up. Still, not everyone's convinced that Trump's comments will lead to a long-term sell-off in the dollar. Major banks are telling investors to pull out and take profit on trades that wager on a weaker dollar.
We're already seeing the dollar rebound here a little bit, and that's likely to continue in the short run. After all, President Trump has already walked back some of those tariff threats, and the U.S. economy appears to be improving. However, uncertainty will linger just because you never know when policy risks flare up again, and global investors will want to be protected against that. So we may be headed in this very unusual situation where the U.S. economy does okay, the stock market is okay, the dollar not so much.
Bloomberg's reporting shows a real fear of de-dollarization among U.S. and international investors. And while there's a lot of reasons behind that fear, it's also been proven it will take time to play out.
Another redhead actually crossing the Bloomberg terminal right now, saying that SpaceX and XAI together would be valued at $1.25 trillion. Again, this is coming from the company memo that Bloomberg reporters have seen, although we should point out this information is not yet public. Let's bring Ed Ludlow into the conversation. And Ed, I do want to start off with that $1.25 trillion valuation. And I guess my question to you is, how much of that valuation is SpaceX and how much of that is XAI?
The vast majority, and just to clarify something you guys were discussing a minute ago, there's two separate memos. The valuation comes from a memo that's been sent out by SpaceX's CFO, Brett Johnson. So, you know, it's based on the terms of the combination, $1.25 trillion valuation, but a share price at $526. You know, you can do the math on the value add. SpaceX's last valuation was $800 billion in the tender we reported, and XAI is just north of $200 billion. But, you know, Ryan did a good job on summarizing the kind of how we got to this point. There were a lot of SpaceX investors that were not in favor of this combination because of the debt component on XAI. So that debt's going to get factored into this, right? And they'll have to do some interesting financial mechanics, just like they did when X, the social platform, and XAI combined into a single entity as well.
Yeah, and I'm wondering why it's important to these companies, to Elon Musk, to have this merger happen before SpaceX potentially goes public later this year. Because you think about SpaceX, obviously it has a viable product. It has a very impressive valuation. You think about potentially building data centers in space, that I could see that, but it just feels much further off and maybe not as relevant to this specific public offering.
Yeah, I mean, another point of clarification is that our understanding is that this IPO of the combined entity is going to go ahead. You know, when we reported that there were two scenarios under consideration, the merger of private SpaceX with public Tesla and the merger of the two private companies, XAI and SpaceX, a lot of people were asking quite rightly, well, what about this great big IPO that you guys have been reporting on? And our understanding from sources is that proceeds. Just to build a little bit on what Ryan was talking about, it's literally about inference, running AI models. And, you know, the point of having data centers, which are literally satellite form factor in space, you know, SpaceX builds them, has the capital to buy the GPUs, which it intends to raise from the IPO. And XAI makes use of that compute capacity because it is energy efficient and there is minimal latency in getting the results of running that model back down to Earth. That is the rationale. But you have two very different companies now combining that were in different financial health.
Right.
You know, SpaceX has rude revenues, but also seem to be quite profitable. XAI burns through cash like it's going out of fashion.
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Stephen Carroll.
Elon Musk is combining SpaceX and XAI in a deal that values the enlarged entity at $1.25 trillion. In a statement on SpaceX's website signed by Musk, the rocket firm said that it acquired XAI to innovate in areas including AI, rockets and space-based internet. The deal brings together two of the largest closely held companies in the world. Bloomberg's M&A reporter Ryan Gould says it's possible that Musk could also be eyeing a tie-up with Tesla in the future.
Elon's view is that we're going to have data centers in space, and part of this is about putting compute and the idea of space exploration and sort of exploration of the universe together. This is clearly part of his vision. There is a very good quote that kind of encapsulates a lot of this, which is what he wrote, I think, late last year, which is that in some ways his three companies, Tesla, SpaceX, and XAI, are going to come together. They're going to convert, and maybe this is kind of the first leg of the stool that we're now seeing.
Ryan Gould speaking there. The combined SpaceX firm is still expected to go public later this year as the world's richest man looks to fund his costly bets on artificial intelligence and space exploration.
US President Donald Trump and India's Prime Minister Narendra Modi have agreed a surprise deal to slash American tariffs. US levies on Indian goods are being cut from 25% to 18%, while an additional 25% punitive duty tied to purchases of Russian oil is being scrapped. Writing on social media, Trump said India had agreed to buy $500 billion of US goods and halt crude purchases from Russia as part of the deal. Speaking to Bloomberg, India's chief economic advisor, Ananta Nageswaram, hailed the boost to Indian markets and the economy.
This was something that was one big stumbling block to sentiment in the capital market and also for the Indian rupee, as you pointed out. So I'm not surprised that the reaction is very positive in both these markets. And I mean, at the end of the day, it is the world's biggest consumption market, $21 trillion of GDP. And therefore, to be able to have access to it is important.
India's chief economic advisor Ananta Nageswaran there. At 18%, India's tariff is now lower than most of Southeast Asia.
Precious metals are recovering some of their losses today after plunging from record highs over the past few days. Spot gold has climbed as much as 4.2% after falling by close to 5% yesterday. Silver rising as much as 8.1%, erasing the previous day's losses before pairing gains. Bloomberg's Brendan Fagan says the worst of the sell-off appears to be over.
The constructive thing is holding those key moving averages. It may suggest that systematic traders are stepping in to start nibbling after quite the washout we had. But like I said, you never really want to catch a falling knife here. So there could be more to come, but it seems like the worst is behind us, and where we held is relatively constructive.
Bloomberg's Brendan Fagan was speaking after investors had been piling into gold and silver over recent weeks, driven by renewed concerns about geopolitical upheaval, currency debasement and threats to the Federal Reserve's independence.
The UK's Metropolitan Police says it's reviewing reports that Peter Mandelson committed misconduct in public office following the latest release of Epstein files. Documents appear to show that the former UK ambassador to the US leaked sensitive government information to the convicted sex offender while serving as a minister in Gordon Brown's Labour government. With more, here's Bloomberg's Chris Pitt.
The files suggest Mandelson emailed Epstein about the European Union's rescue facility for struggling member states, telling him the deal should be announced tonight. The emails are dated May 9th, 2010. The following day, European policymakers announced a €500 billion loan plan, which prompted the euro's biggest rally in 2 years. The documents also show that in 2009, Mandelson forwarded internal Downing Street emails about tax policy proposals to Epstein. Mandelson has not responded to the latest allegations. However, in an interview with The Times carried out last week but published on Monday, he referred to a, quote, handful of misguided historical emails which he deeply regrets sending. In London, Chris Pitt, Bloomberg Radio.
France's inflation rate has dropped to its lowest level in 5 years. Consumer prices rose by 0.4% in January compared to a year ago, below the average estimate. It comes as France's parliament adopted a budget for 2026 after the Prime Minister survived 2 no-confidence votes. The new legislation has smaller spending cuts and tax increases than earlier proposals, meaning that the deficit for the year will be larger than initially planned. But the concessions mean that Prime Minister Sébastien Lecornu has avoided the fate of his predecessors, who were both forced to resign because of disagreements over austerity measures.
The British government is becoming concerned that a protectionist push being discussed by the European Union could exclude UK companies. London's lobbying the EU against restricting market access and encouraging cooperation. Bloomberg's Tiwa Adebayo has the story.
Made in Europe, an initiative designed to transform the EU's manufacturing sector, but one that could be costing British firms billions of pounds. The Prime Minister and his government are stepping in over fears possible industrial policy changes could damage firms with sites in both Britain and Europe. Bloomberg understands car makers Stellantis, BMW and Volkswagen could all be affected. It's thought the fresh concerns have driven Keir Starmer's recent bid to take the UK closer to the EU's single market. The fears are likely to have been at the top of the agenda when the European Commission's trade and economy chiefs visited London yesterday for meetings. In London, Tiwa Adebayo, Bloomberg Radio.
And those are your top stories on the markets this morning. Eurostoxx 50 index is up by 0.9%, passing its last closing record high in trading today. The Stock 600 up by 0.7%. The FTSE's up 0.2. Basic resources are the best performing sector in Europe today, as we're seeing a rebound in gold and silver prices. Gold's up 5.3%, silver up 9.3% in trading today. Thinking about Wall Street later, S&P E-minis are up by 0.3%. Nasdaq futures are up by
जो व्यू ऑन नेचुरल गैस एंड क्रूड ऑयल मैं व्यू नहीं रखता हूँ, मैंने बार बार बताया आपको, ऐसा कोई पर्टिकुलर व्यू नहीं रखता हूँ। कल भी पूछा था आपने, मैंने कल ही बताया था, परसों भी पूछा था आपने, सेम मैंने परसों ही बताया था। देयर इज नो व्यू इन इंट्राडे। सपोर्ट दिखेगा तो बाई करेंगे, रेजिस्टेंस दिखेगा तो सेल करेंगे, वेरी सिंपल। लेके चलेंगे तो फिर पता नहीं कितने ट्रेड मिलेंगे, उसमें से आधे में ऐसे वैसे ही निकल जाएगा। बिकॉज इंट्राडे का कोई भरोसा नहीं, इंट्राडे में कोई भी ट्रेंड काम कर सकता है। हायर टाइम फ्रेम पे देख रहे हो तब ट्रेंड के लिए है, अदरवाइज इंट्राडे में ट्रेंड मत देखा करो। मैं बार बार रिपीट करता हूँ, सपोर्ट दिख रहा है तो करो बाई, रेजिस्टेंस दिख रहा है तो सेल करो डिस्पाइट ऑफ द ट्रेंड।
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with efforts to reopen the government 4 days into a partial shutdown. President Trump is urging House Republicans to pass the measure that would fund the Homeland Security Department for 2 weeks. That's to allow for more time to negotiate on limits to immigration enforcement. The president says even Democrats want to see this resolved.
I spoke with Senator Schumer numerous times, and I don't think they want to see a shutdown either.
President Trump spoke from the Oval Office. A couple of Republican holdouts, Anna Paulina Luna of Florida and Tennessee's Tim Burchett, dropped their opposition to the bill after speaking with the White House. That clears the way for a vote today. House Minority Leader Hakeem Jeffries says Democrats are pushing for dramatic changes.
The American people want to see the mask come off. The American people want to see body cameras turned on.
House Democratic leader Hakeem Jeffries. Now, Homeland Security Secretary Kristi Noem says ICE agents will start wearing body cameras in Minneapolis after the outcry over 2 American deaths there last month. But as the shutdown continues, its effects are being felt. The Labor Department says the January jobs report that was due this Friday will be delayed because the agency is closed.
Nathan, President Trump says he's seeking $1 billion in damages from Harvard University after the New York Times reported that his administration had backed off demands for $200 million to satisfy accusations of wrongdoing by the Ivy League institution. Trump called the Times article completely wrong. The administration has waged an aggressive campaign against Harvard and other universities over accusations of anti-Semitism linked to campus protests against Israel's military campaign in the Gaza Strip.
Karen, there are new developments in the Jeffrey Epstein case. Former President Bill Clinton and his wife, former Secretary of State Hillary Clinton, are now agreeing to testify in the House Oversight Committee's investigation into the late sex offender. The full House had planned to vote this week to hold the Clintons in criminal contempt if they continued to defy subpoenas. Now, Republican Congresswoman Virginia Foxx says that vote is on hold.
However, should there not be substantial compliance and agreement overnight, the committee will return to continue the hearing on the contempt.
Republican Virginia Foxx spoke at a committee hearing on the contempt vote.
In another development, Nathan, the NFL says it will review emails that have surfaced between Jeffrey Epstein and New York Giants co-owner Steve Tisch. Dozens of them were released in the Justice Department's latest batch of millions of Epstein files. Commissioner Roger Goodell says it's too soon to say whether Tisch will face punishment.
We are going to look at all the facts. We're going to look at the context of those. We're going to try to understand that. And we'll look at how that falls under the policy. But I think we take one step at a time. Let's get the facts first.
NFL Commissioner Roger Goodell spoke at the league's annual pre-Super Bowl news conference. Tisch released a statement saying he had a brief association with Epstein, but never took up any of his invitations and never visited his island.
Now, Karen, let's turn to the latest on geopolitics. President Trump says he anticipates talks with Iran over a new nuclear deal in the coming days. The president spoke with reporters at the White House.
Right now, we're talking to them. We're talking to Iran, and if we can work something out, that'd be great. And if we can't, probably bad things would happen.
The president spoke after Iran's supreme leader Ayatollah Ali Khamenei warned over the weekend of a regional war if his country is attacked.
Nathan, President Trump and India's Prime Minister Narendra Modi have agreed to a surprise deal to slash American tariffs. U.S. levies on Indian goods are being cut from 25% to 18%, while an additional 25% punitive duty tied to purchases of Russian oil is being scrapped. Writing on social media, the president said India had agreed to buy $500 billion of U.S. goods and halt crude purchases from Russia as part of the deal.
Turning to the markets now, Karen, futures are higher following yesterday's gains on Wall Street. Dip buyers are back in precious metals. Gold is up 5.5% after dropping 13% the last 2 days. And silver is surging more than 12.5% this morning. That precious metal plunged more than 30% since last week. James Steele is chief precious metals analyst at HSBC.
Any commodity that has this parabolic rally that gold and silver had, and the new entrants into the market, which they were flooding in and have been for many, many months now, it really does invite A, volatility, and B, profit-taking stroke liquidation on any news or developments that run counter to gold.
HSBC Chief Precious Metals Analyst James Steele thinks gold may reach $5,500 an ounce this year. Right now, it's trading at $49.19. Karen, the world's richest man is looking to fuel his increasingly costly ambitions in artificial intelligence and space exploration. Bloomberg's John Tucker is here with more. John, what is Elon Musk up to?
Well, Nate, Musk combining SpaceX and XAI. This is a deal that values the enlarged entity at $1.25 trillion. The deal brings together two of the largest closely held companies in the world. It all sounds a little Buck Rogers. SpaceX said it acquired XAI to form the most ambitious vertically integrated innovation engine on and off Earth with AI, rockets, space-based internet, direct-to-mobile device communications, and the world's foremost real-time information and free speech platform. That's free speech as defined by Elon Musk. In explaining the rationale for the deal, Musk says in the statement that the least expensive way to do AI computations within 2 to 3 years will be in space. SpaceX also requesting permission to launch as many as 1 million satellites into Earth orbit for this plan. The company is still expected to hold an initial public offering later this year, according to our sources. In New York, I'm John Tucker, Bloomberg Radio.
Time now for the Bloomberg Sports Update, and we bring in John Stash Hour. John.
Thanks, Karen. College basketball doubleheader in the ACC. North Carolina beat Syracuse 87-77 to the Big 12. Kansas won 64-61 at Texas Tech. NBA trade deadline Thursday, 3 o'clock. Does Milwaukee trade Giannis Antetokounmpo? The team said to be most interested: the Knicks, Miami, Golden State, and Minnesota. At the Super Bowl, NFL Commissioner Roger Goodell says work needs to be done on improving diversity. 10 coaches were just hired, none of them African American. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg.
Being increasingly deployed in Germany, some signs of stabilization in China. We are seeing, probably a bit more challenging growth in Japan, but certainly more constructive outlook than we have seen in recent years. All of those factors suggest that we are going to see investors increasingly look for that diversification away from U.S. assets at the margin. And if we look at fixed income in particular, we are seeing pockets of quite attractive opportunities in the rate space. But I think key for investors, and certainly the client conversations that I'm having, is looking to emerging market debt. We saw 3 consecutive years of quite sizable outflows, and so we are starting to see that sentiment pick up once again. Already year to date, we've seen more than $6 billion of inflows, and so we think that's a shift in sentiment. It's being supported by attractive carry. Overall, this global growth backdrop being quite constructive, and I think that's where we're going to see investors increasingly look for opportunities this year.
Moving back to the United States, how are you preparing for a potential Warsh-led Fed?
Well, I think certainly markets saw some reprieve with the appointment of Kevin Warsh last week. I mean, certainly that did assuage some fears around institutional credibility, the independence of the Fed. But I think that there's still some risks at the margin. If we think about his hawkish historical tilt versus his more recent dovish alignment with the U.S. administration, there is still some ambiguity ahead. And so we're leaning more into the potential curve steepening on the back of that. If we do see some restraining of the balance sheet, that does tend to lead to longer or higher long end yields. But we also would suspect that would come in terms of shorter front end yields with more rate cuts. So again, more ambiguity on what the yield space looks like, but having more conviction in terms of that curve steepener that I think will be further abetted by the fiscal dynamics coming through in the U.S. as well.
All right, Laura, thank you so much. Laura Cooper is still calling for 2 rate cuts this year. Laura Cooper of Nuveen joining us there. Now, 2 other top stories trending on the terminal this morning. The public commission that's building the $16 billion Gateway rail tunnel between New York and New Jersey is suing the Trump administration over a federal funding freeze. Project officials say they'll stop construction February 6th unless funding is restored. The Gateway project would provide a new route under the Hudson River for Amtrak and New Jersey Transit. Homeland Security Secretary Christine Noem says every officer in the field in Minneapolis will now wear a body camera. The directive is effective immediately and comes after a national outcry over the killings of 2 U.S. citizens in Minneapolis. Santander and NatWest are looking to offload billions of pounds in UK pension assets to an insurer. According to sources, the deliberations are at an early stage. The UK's pension buyout market, where firms pay insurers to take on their financial obligations to retirees, has been booming in recent years as higher interest rates reduce the value of promised payouts. Coming up, Republicans who threatened to block the shutdown deal are starting to stand down. More on that. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. The partial government shutdown continues. Republican opposition to the deal has led talks to crumble. President Trump urging his party then to pass the legislation, posting on Truth Social, quote, immediately. And there can be no changes at this time. This led to 2 conservative holdouts to clear the way for a vote today. Joining us now is Mika Solner of Bloomberg Government. So, Mika, what exactly is the threat here? Why is the opposition crumbling at this point?
Yeah, I think this just goes to show how much of a hold President Trump continues to have on House Republicans in general, but also, Senate Republicans at large, too. But, there was a group of House Republicans in the Freedom Caucus conservative group that really wanted to attach the SAVE Act in particular, some election laws to the funding package and try and get some wins for their section of the party on this. But Trump quickly, told them to stand down, and I think that now everything's falling in line here. So it just goes to show how strong the president is on that aspect.
Let's move to Iran because things continue to look to be improving there, at least. President Trump speaking to reporters in the Oval Office and saying he anticipated talks with Iran over a new nuclear deal.
Yeah, this is one step towards diplomacy that the White House is really moving when it comes to Iran. I know that the president had put out previous posts on social media saying that they will use potential military action if possible because of some of the unrest on the ground and the way that the Iranian government has been handling peaceful protesters and the killings that we have allegedly seen. And so I think that the president is taking steps to try and de-escalate some of that tension, and so we're going to see what happens here. I'm going to be asking officials today about that.
Yeah, absolutely. Now, there's this Harvard University continued push from President Trump. First of all, he seems to be backing off the $200 million he was looking for, and then suddenly now he's looking for $1 billion from Harvard University. What's the story here, Mika?
Yeah, I mean, this is part of an ongoing feud that the president has had with Harvard and other universities. And I think that, we're seeing that Trump is not afraid to use some of the legal authority he has and challenge anybody that he thinks that is being unfair or causing damage to his reputation and saying things that he believes that are untrue. So I think that, we're going to see more from this lawsuit, and he's going to continue to try and push legal action where he can.
All right, with the DC update, Mika, thank you so much. That is Mika Solner of Bloomberg Government. Turning to deals, Elon Musk has officially merged SpaceX and xAI, valuing the combination at $1.25 trillion. SpaceX saying in a statement that the acquisition was to, quote, form the most ambitious vertically integrated innovation engine on and off Earth, with AI, rockets, and the world's foremost real-time information and free speech platform. Joining us now is Matt Bloxham of Bloomberg Intelligence. I guess in some ways, Matt, this simplifies things for Elon Musk, but what is the rationale behind these two companies coming together? Does it make sense?
Yeah, it simplifies things maybe for Elon Musk, but certainly makes things, I think, a lot more complicated for would-be investors in SpaceX. I think people have been anticipating a SpaceX IPO for some time, and it was becoming a lot clearer it's going to happen this year. That was a fairly clean, kind of rocket launch and satellite venture. Now you kind of roll into that, the Grok AI platform and X, and suddenly it becomes a lot more complex. And I think one of the issues that have been talked about with xAI is the $1 billion a month cash burn that it's kind of eating through. And so, I think this is going to change, I think, the way in which investors need to look at that IPO, assuming it does still come down the line. And I think that's kind of really the motivation behind this is Elon Musk looking to kind of pool assets together to kind of solidify the funding opportunities he can get for all these different aspects of what's quite a complex business now.
Yeah, well, we're still looking at an IPO potentially later in the year, and the valuation would put each share at more than $550, according to people who are familiar with the details of, I guess, what would be a prospectus. I mean, is that a reasonable valuation, Matt? It sounds pretty, rich.
Yeah, it's like a $1.25 trillion is the valuation that is implied in this deal, which is pretty rich. Looking at a $50 billion IPO. Numbers are still pretty thin on the ground, so it's kind of hard to kind of figure out what the multiples would be. But I think it's fair to assume that they'd be pretty rich and based on quite spectacular mid to long term growth for the business as a whole, both across the traditional space launch ventures, putting this million plus satellite data center into space and everything beyond. So I think it will be really a kind of a moonshot valuation.
Palantir, obviously, it's a volatile stock, right? But we've seen a massive jump. It gave a stronger than expected sales outlook. It seems to continue to do this, Matt. How are analysts and Palantir watchers missing the custom that it seems to be getting every quarter?
Yeah, I mean, as you say, that the 2026 sales outlook, something like 15% ahead of where the market was expecting in the Q4. They reported also strongly ahead. They are still seeing very strong demand from their existing customers with a retention rate over 140%, or around 140%. Obviously a lot of that business is with the US government. we're seeing a lot of, I guess, geopolitical tension around the world, which is kind of increasing demand for a lot of the systems and AI support they deliver. And obviously the immigration crackdown in the US is something that they support strongly too. And I think that to some degree reflects some of the volatility we see. Obviously that those ICE tactics in the US have come under a lot of scrutiny recently, but there's clearly a strong immigration story in the US, and they are an important support for that. So I think obviously the other thing is just like the broader AI picture. Every month or so the AI picture goes through a bubble, not a bubble, and I think they're kind of exposed to that too. But the best thing they can do is expand their revenues, beat expectations, and that's what they're doing, and that's what their investors will be pleased about.
Well, big jump pre-market, even though the stock had been tanking pretty much this year, tanking relatively speaking, right? Matt Bloxham, thank you so much. Matt Bloxham of Bloomberg Intelligence. More earnings on deck this morning then, with pharma giants Merck and Pfizer both set to report before the bell. Joining us now is Bloomberg's Sonia Wind. Pfizer, Sonia, has already guided to little or no sales growth this year. So what will investors be watching for?
Yeah, so it's certainly going to be a challenging year for Pfizer. As you said, little to no sales growth expected for 2026. And that comes amid patent expiries for some of its blockbuster drugs. And also the COVID-related revenues are expected to become increasingly less meaningful. So the key question is, can the new wave of drugs deliver and help Pfizer to boost performance again? And that's also what the main focus is on. So any timings on important study readouts will be closely watched. That includes a lung cancer drug and also the 2 obesity assets that Pfizer inherited with the acquisition of Metsera. And specifically, the latter one could really change the narrative for Pfizer if the drugs are successful. So that's what will be watched. And one upside could be more cost savings if management manages to cut costs more aggressively. But other than that, it looks like a bumpy year.
Yeah, and speaking of patents, Merck is also reporting today, and it's also preparing to deal with patent expiries. What should we expect here?
Yeah, so it's a huge challenge for Merck. Keytruda is its most important drug. It makes up almost half of its sales. So dealing with that patent cliff is really essential. And also its second most important drug is the HPV vaccine Gardasil, and that is also facing headwinds already. So similar to Pfizer, the question is, how does it manage to deal with that rather than the near-term earnings? What is the long-term strategy? And that will be closely watched by the investors. And Merck has already presented some new drugs and how they could potentially fill the gap. But the problem is that these still face significant regulatory and clinical hurdles. So there is a need for more positive catalysts. And some analysts have also said maybe there's more wood to chop in terms of M&A. One other interesting aspect, both for Pfizer and Merck, will be any impact, any details on the deal that the company struck with US President Donald Trump under the most favored nation policy. So those are the main themes.
Amazing. Sonia, thank you. Well, the Pfizer call at 9 and the Merck call at 10, or vice versa, in fact, so we'll be listening out for those. That is Sonia Wind there for us, and we thank her. Coming up, we're going to get you set up for your day ahead. Fed Speak and earnings on deck. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead today. Earnings continue. We have Merck, Pfizer, PayPal and Pepsi all before the opening bell. No JOLTS data, but we do get Fed speak from Richmond Fed President Tom Barkin. That's at 8 a.m. Eastern. And then after the market close, we get AMD, Supermicro, Clorox and Chipotle. Huge week for earnings. Let's take a look at some micro movers now before the bell. Obviously, Palantir is roaring today. Gains after that robust revenue forecast. It's up 11%. Now, it had dropped quite substantially this year. Teradyne also reaping the rewards on its strong sales report and outlook. That stock had also been lagging. It's up nearly 25% of the pre-market. And DaVita Healthcare, another huge mover, up 14%. Its adjusted earnings per share beat. This is your macro picture today, particularly the metals. We have gold rebounding another 5%, almost at $5,000 an ounce. Silver rebounding as well. A little weight to the dollar index, perhaps a bit of stabilization there. That's it for Bloomberg Brief.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world. And we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We were seeing AI jitters coming back into the market.
The risk atmosphere is elevated.
If I broke tech down, the dispersion between the haves and the have-nots are almost unbelievable.
People should not be so concerned about the absolute increase in overall market capitalization. The concern should be the concentration.
Earnings growth is the last engine of return. And look, it's still on. That engine's still going.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, bouncing back, precious metals rallying, equities heading back towards all-time highs as SpaceX and XAI are combining with a $1.25 trillion valuation. And the BLS is cancelling payrolls Friday as the gridlock in Washington keeps the government shut down.
You're trying to trigger me. I mean, honestly, we're all Bill Murray, just living in Groundhog's Day. Every other week, it feels like we get this government shutdown, and now it's delaying the gold standard when it comes to labor market data that would have come out on Friday. It delays the JOLTS data that we should be getting at 10 a.m. today. It gives us sort of more noise that we have to grapple with. And ultimately, the good news is we'll probably get some sort of resolution at least today. The bad news is in 10 days, we probably are going to have to do this all over again with that much more aggression before some sort of leave that people are going to be taking because they always go on vacation.
So you're super excited to cover the story, just like me, as the quote none of us wanted to read from the BLS yesterday. Due to the partial federal government shutdown, the Bureau of Labor Statistics will suspend data collection, processing, and dissemination.
So the problem is, this is the week that they would release it on Friday. And on Wednesday, the commissioner, that's tomorrow, would get the report from the individuals that are tasked with working on the BLS report. Well, they're not at work today, and they weren't at work yesterday. So the commissioner can't get the report. The commissioner then can't go to the White House, which would be on Thursday, give the CEA the report, tell them, tell the president what's going on, and then Friday release it. That's the plumbing behind the BLS that now we all know too much about because we continuously see this government shutdown. Trump was able to strike a deal with these holdouts yesterday. So all of the funding will go through, except for Lisa says DHS, and that's going to be another fight.
So do you want some good news? Manufacturing data was pretty good. India and the United States taking down the temperature just a little bit. Then go to corporate America. Palantir earnings solid. Decent debt sale from Oracle yesterday as well, $25 billion worth, and that was taken down pretty well.
This is a reason why you saw record highs. This is a reason why you broke the snap in some of the gains, in some of the losses that we had seen over the past week. There's a real question here. How long can markets continue to ignore the increasingly mounting noise that we get from Washington, D.C., from geopolitics, from all sorts of other headlines that change from day to day? Well, the earnings kind of march in a steady beat, and that ultimately is what a lot of investors are trying to focus on.
Just take the story to outer space. Get away from planet Earth. This quote, the most futuristic statement I've ever heard from SpaceX. From the most ambitious vertically integrated innovation engine on and off Earth with AI rockets, space-based internet, direct-to-mobile device communications, and the world's foremost real-time information and free speech platform.
You're, of course, talking about the $1.25 trillion tie-up between SpaceX and XAI, with Elon Musk saying that the reasoning behind this is because ultimately it's going to be cheaper to do the computing in space than here on Earth, kind of combining his efforts and focusing far, far away from the car industry.
Also, the fact that they have this electricity demand and energy demand, he says basically you could do that with outer space solutions, and it's even better for the environment down here on Earth. So he's looking to outer space to expand the AI data centers and everything else that AI trade needs.
We've got a lot to cover this morning. Coming up, we'll catch up with Julian Emanuel of Evercore with stocks on the brink of all-time highs. Angelo Zeno of CFRA on the rift between OpenAI and NVIDIA. And Steve Englander of Standard Chartered as the government shutdown delays the payrolls report. We begin this hour with stocks bouncing back as big tech regains some momentum. Julian Emanuel of Evercore writing, macro disturbances are creating more stock market volatility, but a capital market cycle only beginning to accelerate means the bull market has further to run. Julian joins us now for more. Julian, good morning.
Good morning.
You published just moments ago. You called it Groundhog Day, all noise, no signal. Is that the last 24 hours or the last month?
I think it goes back to January 20th of last year, doesn't it, really? It is an environment where we are in a state of unprecedented flux and change, geopolitical makeovers, but the abiding concept, when you look as an equity investor, is that earnings are really going strong. Fourth quarter is set to look at, maybe 14% earnings growth, really extraordinary. And it sets the table for a very good 2026.
It's a very, very volatile backdrop at the moment, though. Take South Korea. South Korea down 5% Monday, up 6-7% on Tuesday. What does copper, gold and South Korean equities have in common right now?
It's the momentum concept. It's the speculation concept. What's interesting is the bifurcation in the technology sector. So Korea is doing what it's doing because you've got two heavyweight stocks that are chip makers that are, really have been powered forward. Whereas software, on the other hand, is in the doghouse like, nobody's business at all. And at the end of the day, the sum total in our mind is that people are cautious with regard to technology and think about that. That's actually the kind of wall of worry that keeps markets moving forward.
Can you have a market that moves forward without the leadership of big tech, without momentum returning to some of these big tech names that still are below some of their all-time highs that we saw late last year?
In our mind, it would be very difficult. It's a problem of mathematics, whether it's the top 10 at north of 40% in the S&P 500 or the three tech-focused, AI-focused sectors accounting for 55% of the weight of the index. You need them. Fortunately, in our mind, if you look at the NASDAQ 100, you've basically been going sideways since October. And in the past, over the course of this bull market, you've had those times where you've just gone sideways and the resolution of the price pattern is higher. And we think earnings are going to drive that once again. Have the earnings momentum really shifted to the other 493? And I hate using this because it's really a myriad group of different stocks. And some of them, Pepsi just reporting earnings and saying that they're planning to cut prices. And part of this is because of AI efficiency gains. I mean, how much are you starting to see that trickle out in what people were hoping for, at least last year? Well, it is part of the narrative that, again, in our mind, by the time that this year is over, is going to sort of tear down that wall of worry around AI and around the potential for productivity to be on a secular uptrend because of the benefits of AI. And at this point, when you see these anecdotes, what it does is that it puts pressure on the competition to show how they are driving revenues and cutting costs using AI. And in our mind, when you look at it on a stock-by-stock basis, sector-by-sector basis, if you can't show a coherent strategy as to how you're capitalizing on AI, by the end of this year, you are going to be judged to be at a competitive disadvantage, and you're already seeing that differentiation in the market.
When it comes to what's going on in gold, does it give you pause, or is it uncomfortable that gold is basically trading like a meme stock?
Well, so there is precedent for it. And interestingly enough, silver actually during the meme stock phase in early 2021 had a volume spike that was similar to the volume spike we saw in the SLV last week, that essentially the same thing. Prices ramped and then it fell back. Look, the thing about the precious metals is it's been a source of angst for over a year. A year ago, it was like, okay, precious metals are rising and the S&P is rising. there's got to be a systemic issue. And then it was gold and silver going parabolic. There's got to be a systemic issue. And now it's gold and silver, and I think the word is appropriate. Silver crashed in the last week. That is a crash. And there's got to be something systemic. No, there doesn't have to be something systemic, because like the meme stocks in 2021, those areas as a percentage of market cap are not big enough to disturb the S&P 500 or the global stock market.
Begs the question,
itself.
what is? Because we've had these explosions across different asset classes now, in JGBs, in precious metals. What is big enough to disrupt this equity market?
In our mind, the one thing we continue to focus on is the 10-year yield in the U.S. Okay, we know at the short end that there is going to be what we would call cooperation in the guise of, perhaps 2, maybe even 3 interest rate cuts this year. But the long end at some point is probably going to become pressurized, and that will be the test for equity markets.
What do you mean by cooperation?
Rate cuts. Rate cuts in an economy that's growing.
In cooperation with who?
When the worst Fed starts, I would expect that there are going to be rate cuts.
When you say things like that, it makes me wonder what's going to happen to the gold trade by the time we get to year end. It makes me wonder what's going to happen with the dollar trade. There was a thought, I think, on a lot of desks over the last few days, and this is from Morgan Stanley, that the Kevin Warsh nomination had a stabilization effect on some of those trades. Diplomatically speaking, it upset them. Now, I'm wondering how you're thinking about that into year end.
So when we look at the metals, think about the range of the last week and a half, absolutely breathtaking. Essentially 55.50 on the high in gold and, 4,000 and change on the low. It would not surprise us at all if we had a digestive phase, and that happens typically after a crash of that kind of magnitude, that both bulls and bears get frustrated. And frankly, in this kind of environment, you want to see volatility come in other asset classes. And if you look at it, the fact that Treasury market volatility has been as well behaved as it has been a huge tailwind for the equity market.
$500 range on gold in the last 24 hours alone.
Okay, I know where you're trying to lead him to. Is the Fed's independence being jeopardized?
He was taking us there. What do you mean lead? He was pulling me in that direction.
Absolutely, just
Let's
reeling
call
you
it
in.
Cooperation.
Look, this to me is interesting, because if you did believe this, you would price in more rate cuts into the market. And right now, actually, you've seen the number of rate cuts priced into the market go down after yesterday's ISM manufacturing report. So right now, the market might not be drawn to the same watering hole as Julian Emmanuel.
The RBA also reminding us that central banks can hike as well, and we'll talk about that story a little bit later. Julian, you're going to stick with us. Julian Emmanuel of Evercore. Equity futures just about positive by 0.1% on the S&P, with an update on stories worldwide this morning. With your Bloomberg brief, here's Vonnie Quinn. Hey, Vonnie.
Hey, John, good morning. President Donald Trump is pushing House Republicans to accept a deal he struck with Democrats to end the partial government shutdown. In a post on Truth Social, Trump telling lawmakers to swiftly pass the measure with no changes. The bill would fund most agencies through September and the Department of Homeland Security through February 13th. PepsiCo shares falling in the pre-market after reporting fourth quarter earnings that topped expectations. The company announcing plans to buy back up to $10 billion worth of shares through 2030. The Wall Street Journal reporting the beverage and snack company is looking to cut prices by as much as 15% on products. Elon Musk is combining SpaceX and xAI at a $1.25 trillion valuation. Musk says the company will work on AI, rockets, space-based internet, and other technologies. Sources telling us here at Bloomberg the company is still planning an IPO later this year. The offering could raise as much as $50 billion in what would be the biggest initial share sale to date. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie Quinn later this hour. Up next on the programme, Gridlock in Washington.
I spoke with Speaker Johnson, I spoke with Leader Thune, and I think they're pretty close to a resolution. I spoke with Senator Schumer numerous times, and I don't think they want to see a shutdown either.
Team coverage up next with Bloomberg's Tyler Kendall and Mike McKee from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Equity futures on the S&P positive by 0.1% on the S&P 500. On the Nasdaq up by 0.4. This from Pepsi this morning, out with earnings moments ago. But it's this story from the Journal that is going to get a ton of attention. PepsiCo is looking to cut prices by as much as 15% on its products. This direct from the Journal. The beverage and snack company is making the cuts after receiving a flood of emails and voicemail messages from shoppers complaining that high prices were making it hard to buy the company's snacks.
So it's a price cut of about 10 to 15% across a number of different products. For example, Lay's Classics potato chips would fall in price to $4.29 from $4.99. And the idea here is that if there is a certain price point, people will be more willing to just put it in their basket and not necessarily get worried about the price that it adds to it. It highlights, though, where is that money coming from? Some of the cost cuts that they've made pretty much across the board, and some of this comes from new technologies, including artificial intelligence. They are reinvesting it back in price. I find this fascinating. Is this the beginning of the same in some of the companies that are in a similar industry?
Look, it's one data point, but it's one important data point, and that's the kind of data that you don't hike rates in. That's the kind of data you cut rates in.
This is the elixir of productivity that people are talking about, that you can increase efficiency and then lower prices. This is disinflationary. And this is the reason why the likes of Fed Chair Jay Powell are saying this isn't necessarily a super inflationary environment. That said, this is one company, as you said. How much do we see this across the board, especially with the prices of the materials popping, which really feeds into the Australian issue of why they're hiking rates? Because guess what? They're on the other end of those price increases for some of the commodities. So it's a really difficult story.
So which side of the debate are you on right now? Andrew Honhorst of Citi still looking for 75 basis points of rate cuts for the year ahead. Andrew was looking ahead to the payrolls data on Friday. He's not going to get it. Under surveillance this morning, gridlock in Washington.
I spoke with Speaker Johnson, I spoke with Leader Thune, and I think they're pretty close to a resolution. You know, we were at 5.6% GDP, and we lost 1.5 points because of the 42-day shutdown. Think of that. We would have been at 7. Nobody ever saw a number like 7. It's very bad for our country. But despite that, we have the highest numbers we've ever had. I spoke with Senator Schumer numerous times, and I don't think they want to see a shutdown either.
So here's the latest this morning. The president urging holdouts in the House to strike a deal to end the shutdown. The shutdown's impacts beginning to build, with Friday's payrolls report now delayed. Our team coverage starts right now with Bloomberg's Tyler Kendall in Washington, Mike McKee in New York City. Tyler, first of all to you, are we close to a breakthrough?
Looking likely. House Republicans have teed up a vote for today on the $1.2 trillion package that would end the partial government shutdown. As you mentioned, President Trump made it pretty clear yesterday in a post that he wants House Republicans to get on board with this compromise that was struck between the White House and Senate Democrats as it stands. In fact, 2 holdouts had confirmed that they had direct calls with the White House yesterday, and in exchange for that call, they are dropping their demands to tack on some separate legislation related to tightening voter restrictions during elections in exchange for their vote on government funding. Now, while it is looking likely, we should say it's not quite a done deal yet. House Speaker Mike Johnson is probably going to need some moderate Democrats to get on board to get this bill over the finish line. But the package, as it stands, would fund most agencies through September 30th, but then separates out that Department of Homeland Security funding and only funds it through February 13th, which is setting up the real, more precarious issue at hand, which is that lawmakers are only going to have 10 days to reach a compromise on full fiscal year funding for DHS and also new curbs on immigration and customs enforcement. And that is proving a lot more difficult than it sounds already, as some Republicans are balking at top demands from Democrats, including new warrant requirements and also an end to federal agents wearing masks. John, I will say we saw some bipartisan agreement yesterday. Democrats applauding the DHS Secretary Kristi Noem announcing that federal agents on the ground in Minneapolis will all wear body cameras. But at this point, Democrats are saying that is not going to be enough. They need to see some of these changes codified into law.
So, Mike McKee, let's talk about the disruption to the economic data. Go through the data for this week. What aren't we getting? What are we getting?
Well, we're getting a lot of private sector information, John. Like tomorrow, we'll get the ISM Services Index. We got the ISM Manufacturing yesterday. What we won't get are the JOLTS report today, which is not a terrible loss in terms of trying to figure out where the economy is, but it is a clue. And we don't get the payrolls report on Friday. But if you had to have a shutdown, this is probably about the best time to have those kind of numbers delayed. Fed doesn't meet again until March 18th, and so there's no immediate pressure on policymakers to decide whether there's anything wrong with the economy and they have to take action. We are expecting a slightly better jobs report than we had in December. So that even keeps some of the pressure off here. You could move it to next week. Now, if the vote fails and we keep the shutdown going, next week we lose CPI and we lose import-export prices. And so you would lose both ends of the Fed's mandate, but there's still time to get those back.
Mike McKee with the latest on the ground alongside Tyler Kendall. Mike, Tyler, thank you. Julian Emanuel of Evercore still with us around the table. Julian, how many people build a successful equity portfolio based on payrolls in the last 12 months? As we all sit here and say, I miss payrolls, I want to see payrolls, I'm right there with you. But how instructive has the payrolls report been for an equity strategist?
I think maybe destructive instead of constructive. It's just, look, the conundrum of the morphing policy on immigration versus what the break-even monthly payroll number is versus the fact that the weekly jobless claims are incredibly subdued at this very low level causes a sense of confusion in general. And we were asked yesterday whether we thought it was a big deal that the payrolls number was going to be delayed. And frankly, it's just another piece of noise right now. And actually, in a way, and I agree with what Mike McKee just said, this is probably a good time to not have this report for the next couple of weeks, particularly since at some point we're going to have to evaluate whether the weather of the last several weeks has any effect, transitory or not, and probably transitory. But, you know, it reminds us of the first quarter of 2014, where you had the introduction of that phrase, polar vortex, and the economy actually contracted and then had a couple of 5+% GDP quarters in a row. And again, you're looking at that same type of growth.
Some of my favorite topics, government shutdown and weather-disrupted jobs reports. I mean, this is really exciting. I've got to say, you do have to wonder at what point, though, it does start to matter. And that's where sentiment surveys come into the fore. And that's where things like Pepsi's 10 to 15% price cut comes into fore. Why are people demanding these price cuts if they didn't feel somewhat not great about the economy, about their labor market prospects? And that will eventually, should have some kind of effect, no?
Well, if you look at it again, one of the remarkable things about this entire bull market cycle is how bad consumer sentiment measurements have been the entire time. And it's really driven by this affordability issue. It's real. There's no, masking it. And frankly, I was shopping this past weekend, and it was shocking, some of the prices. Absolutely shocking. You're not necessarily anchoring anymore to what the pre-pandemic number was. But, when you see things that you talked about, a bag of potato chips that was 3-something at 4-something, that's the kind of thing that really grates on psyche. And that's why consumer sentiment remains as depressed as it is, even though the spending is strong.
I'm dating myself, but it was 99 cents on my way home from school when I got it for a snack. Just saying. I am curious, though, at what point this starts to eat into the strong economy narrative. We were speaking yesterday with Matt Miskin of John Hancock, and he was saying, look, I reject this idea that we're heading towards some sort of reacceleration, and I also reject the idea that we're heading into some sort of downturn. This is sort of the pre-pandemic norm, and we're going to kind of slow down and get to a new place, a new normal that's lower. Do you agree with that, or do you think that this sort of productivity elixir is going to create this sort of hot, but strong but not hot kind of growth?
The kind of numbers that we're seeing right now are not likely sustainable. I mean, we're calling for 2.5% GDP growth in 2026. But to your question, it all comes back to the one thing it always comes back to: jobs. Okay, if the job market is strong and people's income, and they feel, regardless of how they feel about what grocery prices are, if you have a job, the economy moves forward. And more importantly, if you have a job as a retail investor, you do not have to sell your stocks.
Julian, it's good to see you. It always is. Thank you, sir. Julian Emmanuel of Evercore on the many contradictions coming into 2026. Let's take the earnings from MasterCard or a Visa in the last 12 months. Those numbers have been great. Then you look at consumer confidence, rock bottom at the conference board. Which data point are you going to trade on? Because one has been a decent indicator of things and the other has been not so helpful.
Look, it's a cliche, but it's the K-shaped economy. If you look at averages, the average spending looks good. If you look at the actual granular medians, not so much, because on the lower end, people are not spending. It all comes down to jobs, but the jobs report hasn't mattered. So it just is a conundrum wrapped in an enigma, wrapped in a riddle.
But for the White House, this is really challenging. To Julian's point, it's about jobs. In those consumer sentiment, you actually see people not just anymore talking about higher prices. They're worried about going out and finding new jobs.
I saw Julian smiling then. It's about jobs, but it's not about jobs.
Well, I mean, that's essentially what we're talking about.
But it's about jobs.
I mean, it's sort of, ignore it. It's absolute noise, weather, but it's really important.
What do they say? When your neighbor loses their job, it's a recession. You lose your own, it's a depression.
Yeah, well.
Something like that, right?
Especially at these prices.
Coming up on the program, we'll catch up with Angelo Zeno of CFRA on reports OpenAI is looking beyond NVIDIA to supply its chips. Plus, Yohara has your morning movers. Check out Palantir this morning. The stock is up by 11%. From New York City, you're watching Bloomberg TV.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield back on those deposits So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Snapped a three-day slide on the S&P 500 in yesterday's session, this far away from all-time highs. Futures up by another 1/10% on the S&P, on the Nasdaq up by 0.4. In the bond market, ISM Manufacturing, solid print yesterday. Details and some of the industry feedback a little bit murky, and we can talk about that later, but we traded off that headline print, and that headline print was hot. Yields are up in the last 24 hours, up another single basis point on 10s to 428.95. And this move in gold, an update on precious metals for you. Gold in early trading higher by 5% after a really volatile 24 hours. SocGen fantastic just yesterday. Gold prices didn't correct, they deleveraged. The extreme moves speak to positioning and not fundamentals. Central bank buying was not driving this leg of the explosive rally we've seen over the last 12 months. It was being driven by ETF flows. Priced a heavy political risk and debasement premium. This is what SocGen say. The Walsh appointment signaled low institutional chaos that undid some of these moves.
Well, this is a reason why people saw that huge swoon, not just in gold, but also in silver. People attributed it to the Kevin Warsh effect. Essentially, Fed independence wasn't going to be challenged as much. Suddenly, there doesn't need to be this rush into havens outside of the dollar. The fact that it's up more than 5% this morning, the why behind it, yes, it's technical. You can't give any other reason. You can't give a sense of now people are worried about it again, or now gold miners are, reducing supply, or now Chinese investors are coming back in. This is entirely a technical move, and this is going to be the increased level of volatility that many people are expecting in this space.
Can it stay in this space, or does it bleed out into other asset classes? Gold up by 5%, silver up by about 8%. As we count you down to the open, about 3 hours away, let's get you some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We start with Palantir. Shares are soaring 11% in the pre-market after a big top-line beat and strong guidance fueled by soaring demand for Palantir's AI tools by both business and the U.S. government, of course. But this stock move we're seeing is a sharp reversal from a recent trend. Shares had been down 30% since a recent high a few months ago. A lot of that having to do with valuation, a top concern, an ongoing concern for this company, as it's one of the most expensive on the S&P 500. Meanwhile, moving on to AES, those shares up 6% on our scoop that BlackRock Global Infrastructure Partners and EQT are teaming up for a potential takeover. This is a power company based in Arlington, Virginia, and it supplies renewable energy to the likes of Microsoft. These power names have drawn strong investor interest due to their role in the AI build-out as demand for electricity continues to soar. And we end on SanDisk, continuing its hot streak, up nearly 3% in the pre-market after being up nearly 16% yesterday. The stock has now been up for 5 straight sessions and is up nearly 180% just this year. All of this having to do with soaring demand for its memory chips. It says demand is far outstripping supply, and that is giving them major pricing power. John.
Yahira, thank you. More from Yahira in the next hour. On our radar this morning, Elon Musk consolidating his empire, combining SpaceX and XAI, the deal giving the new entity a valuation of more than $1 trillion. The company aiming for an IPO expected later this year. Elsewhere, Samsung Electronics shares soaring, recording their biggest one-day jump since 2008. The benchmark Kospi extending gains as a recent rush to secure memory chips for AI powers the record run in South Korean equities. And finally, we're all tracking this spat. OpenAI reportedly frustrated with NVIDIA's chip performance. Reuters reporting that ChatGPT maker is discussing working with rival chip producers. OpenAI CEO Sam Altman praising NVIDIA, saying, quote, "They make the best AI chips in the world."
Oh, I love how catty this space is getting. I mean, ultimately, there's a question about whether NVIDIA is challenging some of the legitimacy or the efficiency of processes coming from OpenAI. OpenAI, of course, may be raising questions about who they're going to partner with. The idea, though, that these two are interchangeable, that they basically are intertwined, not interchangeable, but intertwined, just highlights how this ecosystem really relies on each other. And it's very hard to extricate yourself from one or the other.
It was circular financing, and now the drama seems very circular as well. Jensen Huang questioning Sam Altman coming out questioning, at least according to Reuters, the chips that NVIDIA is selling it. This is what Reuters had to say. OpenAI is not satisfied with some of its latest AI chips and is seeking alternatives. That is almost a shot across the bow for Jensen Huang, who says we have the best in the world.
It's Wall Street Journal reporting versus Reuters reporting right now on this issue. Behind the scenes, they seem to be being pretty blunt about what they think about each other. It feels like OpenAI is kind of being catty and snapping back because the Journal story was scathing. Basically, Jensen Huang is questioning the business approach of OpenAI right now and the way they're deploying capital.
And whether it's irresponsible and whether they really want to be behind it. And to come out and say that it was an invitation to invest $100 billion, and they're not sure whether they're going to really go with that $100 billion figure. It was just a suggestion. It wasn't necessarily a commitment. Highlights they could be pulling back real dollars. If OpenAI IPOs this year, how much does this become a sticking point for both their valuations and, frankly, for the whole industry?
Let's stick with technology stocks. AMD rising ahead of earnings on reports OpenAI is casting a wider net for chips. Angelo Zeno covers NVIDIA and AMD for CFRA, rating both stocks a strong buy. Angelo joins us now for more. Angelo, please weigh in on this spat. What's behind it? What's driving it? And where do you think the chips will fall?
Yeah, so John, I think this makes for great drama to kind of what you guys alluded to. But when we start thinking about this, I mean, listen, NVIDIA continues to have the best ecosystem out there, whether it be the hardware they produce or whether it be their software ecosystem. When you kind of think about where Jensen sits here right now and what he sees, I mean, essentially, you've got OpenAI making commitments with everybody here over the last 6 to 9 months. And in reality, it doesn't matter necessarily to NVIDIA who wins this game at the customer level, but they want to be involved, I think, across the board. And I think the fact that they're going to be part of this funding round for OpenAI tells you that, but it also says something in the sense that, hey, listen, we're not going to kind of, dish out everything that, from an investment perspective, just given the fact that, hey, listen, maybe OpenAI isn't going to be, the natural winner out there. Maybe it's somebody else. So, the fact that you've seen investments from NVIDIA and the likes of Anthropic and others of the world, I think is really telling as well.
Is there a larger message here, Angelo, if you just take a step back and you start to look at the fact that big tech hasn't reprised some of the record highs that we saw last October, that you see a lot of skepticism around some of these funding rounds or additional investments in OpenAI on behalf of the likes of Oracle? I mean, is there a tell here in terms of where we are in the cycle and how behavior has to be reined in going forward after a couple years of pretty profligate spending?
I think there is. I mean, I think when you kind of look at 26 right now, 2026, it's really a year of execution. It's a year where I think investors are, in some respect, trying to de-risk some of the uncertainties that are out there. Less so about what's going to happen here in 2026 and maybe even into 2027. There's some great earnings power across the tech sector. But when you start thinking about, I'd say, the out-year estimates, right, the tail risk for a lot of these tech-related companies, across the AI ecosystem, there's some real concern out there, right? Whether it be the cloud providers like a Microsoft, whether it be the other software SaaS-oriented companies, or even at some point, I know semis have been the heart of the trade here over the last 3 years, but probably going to see some, concerns about the sustainability of semi spending at some point in time. So you're seeing those multiples really compress here over the last couple of months, and that's really weighed on the tech trade. I don't know if that necessarily changes or not. I think you'll see points of better sentiment as the year progresses, maybe as OpenAI gets some of the funding that they're looking for. But nonetheless, I mean, I do think this is a year where multiples really are coming in a little bit to account for some of those risks as we look ahead.
At the same time, Angelo, how much do you see the spigots of financing completely open after yesterday's $25 billion Oracle sale that I believe had something like $129 billion worth of bids, and it came in much oversubscribed with yields coming in significantly? I mean, how much is this sort of the all clear sign in terms of the ongoing funding pipes?
Yeah, I'd say for some of the bigger companies out there, there's still high demand in terms of kind of the demand for liquidity in terms of receiving the capital for these companies. I wouldn't necessarily say it's all clear for any company out there looking for funding, but yeah, I mean, right now it's an attractive environment in terms of companies looking to get that funding. I think there might be to some extent a rush to get some of that funding locked up here. I think it was a very smart move for Oracle to kind of look at that here early into 2026 and look at that 50 billion or so. But it'll be interesting to kind of see how things progress here over the next couple of years or so. But right now, I mean, it's absolutely a healthy environment.
Well, do you think they're over-leveraged, that wall? Because they say that developing these data centers means they're going to be negative free cash flow at least until 2030.
I mean, for Oracle, we'd stay away from the name. I mean, it's a name that we did downgrade a couple of months ago, and in our view, it is a name that just carries way too much risk. I mean, you alluded to the fact that, hey, listen, they're going to be negative free cash flow here over the next couple of years. They're raising more debt. They may need to potentially tap the markets again at some point in the future. It won't be 2026, but maybe 27 or thereafter. Again, we have to wait and see what the trajectory of that build is going to be. But when you start looking at the risk reward opportunities out there, you can really kind of benefit and see some of the upside potential from these AI trade just from better capitalized names. Whereas if we were to see a hiccup in terms of the AI trade, let's say we see supply demand come in balance here over the next couple of quarters or years, companies like the NeoClouds and the Oracles of the world are probably going to get hit a lot harder than a company like a Microsoft or an Alphabet or an Amazon, which is obviously better financially positioned.
Angelo, it's good to see you. It always is. Thank you, sir. Angelo Zena there of CFRA. I'm pleased you brought up that question because I think it's the ultimate question right now. How speculative is the CapEx build over at Oracle? Now, if you go through the Fitch note yesterday, they assigned a BBB rating to the debt that was issued in the last 24 hours. And there's this quote that sits in their statement. Fitch believes that Oracle's risk exposure is manageable in the near term because its CapEx is tied to typical multi-year revenue contracts with major AI customers that have strong financial backings, including a range of companies, but this is one of the companies they name, OpenAI. If that multi-year contract is tied to OpenAI, just how speculative is that build?
Especially if some of the financing letters of intent are not commitments, but simply invitations to finance the company. I mean, it starts to be dependent on OpenAI, which is dependent on NVIDIA and Microsoft and Amazon. So it raises this issue of, is there some sort of blind spot? And yesterday we did not see it. And I think that that's notable, that still bond investors are clamoring to buy this debt, seeing it as high quality. Will that change? It isn't changing yet.
Sitting right on top of that line between junk and investment grade, just right there at BBB.
Yeah, and will it get downgraded right now? Again, the fact that you saw spreads on those bonds come in so significantly during this bidding process highlights people are kind of shrugging some of that off right now.
A better 24 hours for that name, that company, for Oracle. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. President Donald Trump and India's Prime Minister Narendra Modi agreeing on a trade deal. U.S. levies on Indian goods are being cut from 25% to 18%, and that 25% punitive duty tied to purchases of Russian oil, well, that's being scrapped. President Trump writing on Truth Social, India agreed to buy $500 billion of U.S. goods and halt crude purchases from Russia as part of the deal. Australia is the first major economy to hike rates in 2026. In a unanimous decision, the RBA raising its key interest rate after determining inflation pressures were persistent enough to warrant renewed restraint. Governor Michelle Bullock avoiding any hints that further tightening is possible, though, saying, quote, "It's not clear one way or the other." Merck shares are falling in pre-market trading. The pharma giant missing its 2026 forecast as Chinese demand for its HPV vaccine continues to drop. The drug maker is also facing new challenges in the United States, where health officials are now recommending fewer doses of the vaccine. And that is your Bloomberg Brief. John.
Hey, Vonnie. Thanks for the update. More from Vonnie in the next hour. Up next on the programme, data delays.
Some data is better than no data, and even late data is better than holes in the data. But I think there's still questions in terms of how robust this data is.
Steve Englander of Standard Chartered has plenty of questions. He says it's not the gold standard, it's fool's gold. That conversation up next.
Crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Within striking distance of all-time highs, futures positive this morning by about 0.1% on the S&P after snapping a 3-day slide in yesterday's session. On the Nasdaq, we're up by 0.4. On the Russell, up by 0.1. Under surveillance this morning, data delays.
Some data is better than no data, and even late data is better than holes in the data. So I think it's helpful in that regard. But I think there's still questions in terms of how robust this data is, just given sampling periods shifted, survey response rates potentially obstructed by just the interruption of the normal course of procedure.
So here's the latest this morning. Friday's payrolls report postponed as the government shutdown drags on. Steve Englander of Standard Chartered writing the US data quality has become, quote, more fool's gold than the gold standard. We expect the uncertain quality of the data to become the bigger issue than statistical agencies and the Fed have so far acknowledged. Steve joins us now for more. Steve, good morning.
Hey, good morning.
Tell us what you really think. What's going on here?
Look, it's become so common to say that the U.S. data are the gold standard, and they may be compared to everything else. But there's so many holes in the data that haven't been addressed. And I'd say that, BLS, is not political in the sense that Trump accused them of being, but they've been kind of intellectually lazy over the last decade.
What's making them intellectually lazy? You're suggesting it's not just response rates. What is it?
Well, you look at the birth-death adjustment, which is basically more than half the employment growth we've been getting. And it doesn't reflect anything that's happening in real time. It's basically an autoregressive model that says what's going to happen January of this year is what happened January of last year. Now they're going to try and fix it. As a consequence, there will be not just the usual benchmark revisions, but big revisions from April through January, or April through December, as well as a big weak number, we think, in January.
So, Steve, put the data through in England a filter. What do you look at? What would you point to that says, you know what, I can rely on that. That makes sense. That's where the economy is.
I've used the image of being in Plato's cave. You sort of see a lot of images on the wall, and you try and sort of put them together to make a coherent story. But even the unemployment rate, which everybody lives and dies by, if the labor force is constant, all it takes is 70 or 80 people reporting that they're unemployed more than last month to push it up by 0.1%. Given how much stress we put on that, that's not a big number.
Okay, so I'll take your Plato's cave analogy. And it seems like we've been living there for about 6 years now with the data being called into question and, frankly, a lot of fluctuation since the pandemic. I just raise a question of what's your sense then, taking a look at all the images on the wall? Do you see a labor market that's stronger than people think or weaker?
I see a labor market that's pretty mediocre. It's not a disaster. There's no sign that it's falling apart quickly. On the other hand, it really is the case that if you don't have a job, it's, good luck and God bless. I mean, it's just not, the odds that you're going to find a job are relatively low. On top of that, the AI thing, the productivity thing, we think could matter in the short term. Although we're very optimistic in the longer term that jobs will be created. I mean, cavemen, the unemployment rate is no higher now than it was in the day of the cavemen.
Okay. We're really going back to caves and hieroglyphics. I'm just curious going forward about what you're watching to understand whether we're heating up and whether there is a degree of undermining the significance of this data on a permanent level as a result of the government shutdowns that makes some of this data optional depending on the week.
I mean, it can't be optional because the BLS is the only organization that has, a real sample, that they sit down and they try and sample the entire country. Everybody else has samples of opportunity, who's posting on LinkedIn, whose payroll checks are you processing, and so on and so forth. They could combine all of this. I mean, there's so much more information out there than what the BLS is using, and information that's available in real time. They can do a much better job than they've been doing.
Trump has appointed someone new on Friday. I reported about it. He confirmed it on Truth. This is someone that people call a data nerd. I got messages from Biden-era people and Trump people saying this is a great pick for the BLS. Do you think a new commissioner could come in and maybe take some of this on board?
I think so. But, I mean, the question is whether he breaks out of the BLS mindset. That, all you do is use inside BLS and you tweak this and you tweak that and everything is fine. Look, in NFP, I mean, we don't use ride shares. We don't use gig workers. They're just as much they're not entrepreneurs. They're just as much employees as we are.
When it comes to this report, we're not going to get it. But you have a very downbeat suggestion for how many jobs are created, actually negative.
Yeah. I mean, I think we're the lowest in the street. So, at least as of yesterday. But look, the problem is that we've estimated that the bias in the birth-death adjustment, we estimated 70,000, Powell estimated 60,000. If they come up with a model that really takes current conditions into account and is consistent with other data sources we have that are better but lagged, all the numbers we've had for the last 18 months, just the birth-death stuff will go down by 60 or 70,000.
Steve, you're a foreign exchange guy
at
heart. What are you advocating for at the moment, given everything you've just said over the last 5 minutes?
Well, like I said, the labor market is soft, and softer. In fact, what it tells you is that productivity growth, when we get the numbers that are based on the revised data, are likely to be even stronger than what's been reported. We believe the productivity numbers. We're sort of in the Warsh camp where it's sort of, we think that there's something happening in productivity. Productivity normally does not pick up 4 years into the recovery, 5 years into the recovery. And that's usually a signal that's something structural. That's what we saw in the late 90s. It's what we saw in the mid 60s. So we think that's by far the most important thing that's happening in the economy right now. And, arguing about 25 basis points here or there is kind of a waste of time.
What do you think we should be arguing about?
We should be trying to estimate productivity growth better and understand the dynamics that's going to happen. For example, we're dollar bulls because we think the U.S. has the labor market flexibility. You don't need a Bloomberg journalist, you let them go, but you find something. Yeah, no, sorry, I didn't mean that. You don't need a foreign exchange economist. You let them go. But you find somebody who's going to, you find some, but you're making money somewhere else. And you look at the profits numbers that we're getting. Historically, U.S. firms hire when they're making money. They might not hire the same people they hired 2 years ago, but they'll say, okay, where are we making money? Let's pick up some people and see if it works. Elsewhere in the world, in France, you buy a truck, you don't like the truck. For business, you sell it in 6 months. You hire a worker, 7 months later, you decide you don't like the worker. He's more fixed capital than the truck.
This has been a secret sauce of the American economy for a long time. Deep capital markets, bankruptcy, and flexible labor markets. Are we losing any dynamism?
I mean, there's a risk that we are. Look, there's lots of stuff that, Trump is trying to do, or his people are trying to do. I think that's positive for the economy in terms of deregulation. But, the sort of willingness to sort of say, yeah, I see a problem, I'm going to fix it. Like some of the things they've talked about the housing market. To fix the housing market, you have to increase housing supply, not housing demand. You'll just get higher housing prices, but the same number of prices. I think they have to be careful about their willingness to interfere.
That's my concern, too, that we're not embracing the dynamism that traditionally has laid the foundation for the American success story. That if anything, we're questioning it in the last 12, in fact, never mind the last 12 months, the last 5 years. And maybe you can go further back than that.
Well, this is really the heart of the question, especially given the concerns around AI and the pushback that you're getting with people not wanting to lose their jobs. You see this in the likes of, say, UPS, right, where you saw that labor negotiation and some of the workers negotiate for higher wages, and then you saw thousands of cuts as they sort of look toward a leaner new reality. How do you pair both dynamism with a transition phase that's going to be very painful for a lot of families?
Steve, get back in the cave. Brutal. Steve Englander of Standard Chartered. It's good to see you, Steve.
Pleasure.
Thank you, sir.
Thank you.
Tell us what you really think, Steve Englander.
I feel like
about us, about the data.
Okay, I feel like between Steve and Neil Dutta, it's Festivus. It's airing of the grievances. I mean, it's sort of, this is the worst Fed chair. This is the worst data. Intellectually dishonest. Who's next? Come on down.
I've got 11 more months of this to go, Steve.
Look, everybody, look at Europe. It's a joke. I mean, no, but seriously, you got something called Eurostat, but they actually don't collect any statistics.
I wish we had more than 10 seconds left. I wish we did. Steve, it's good to see you. Up next, Victoria Fernandez of Crossmark.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. The reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
He's going to be coming into a Fed with some challenging things to navigate.
The FOMC, it's bigger than one person, and you can't just get in there and exert your will.
They are not like sheep, they're more like cats. You can't herd them.
Right now, the Fed is in a really tough spot.
We do expect the Fed to remain on the sideline now for an extended period of time.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P, building on yesterday's gains. Futures higher by about 0.1% on the Nasdaq 100, up by 0.4 after snapping a three-day slide on the S&P in Monday's session. This Tuesday, check out Pepsi. And check out this story from the Journal so far this morning. Pepsi lower by 1%. This direct from the Wall Street Journal about an hour ago. Pepsi is looking to cut prices by as much as 15% on its products. The beverage and snack company is making the cuts after receiving a flood of emails and messages from shoppers complaining that high prices were making it hard to buy the company's snacks.
Yeah, over the past couple of quarters, they've actually seen volumes come down, and they've increased their earnings as a result of price increases. This is taking some of that away, and part of this is because of the basket of groceries that people have in an affordability crisis. When the basket starts getting expensive, you start to look for the items that are contributing to it, and you don't put them in the basket. If the prices are lower, you are more willing to put it in your basket. Where is this coming from? Efficiencies, and they're using those cost cuts to lower prices.
And also, looks like PepsiCo is maybe just losing some market share. Consumers are going for cheaper, some of those brands, like a Walmart brand of potato chips, instead of going for the Lay's. This corporate speak, though, today, PepsiCo aims to boost growth by, quote, offering sharper value to address consumer affordability dynamics, a.k.a. we're losing some consumers right now. We're going to have to lower some prices.
That screams disinflation, but like 2025, 2026 is quickly becoming pick your poison. Do you look at that? Do you look at the conference board data? Do you look at the earnings coming from, say, a MasterCard, which says there's absolutely nothing wrong with this economy right now? Which data do you put more weight on?
Yeah, how do you understand, I hate using this because it feels cliche, but the K-shaped economy? Ultimately, who is putting that Lay's bag of potato chips in their basket and looking at the price? Well, it's not necessarily the person who's going out and eating dinner 4 times a week at pick your own restaurant in a big city. So how do you cater to all of these different customer baskets, if you will, and come up with an average? People say, well, the data is messy. Well, the data is trying to reflect a really motley picture, and you put it together, and right now people are just like, la, 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 I'm going to focus on the earnings because I've got nothing else to do, and we don't even have data coming out on Friday.
No payrolls Friday.
Yeah, exactly.
No data. You're going to have to overweight ADP and some other private indicators as well.
When you hear from Stephen Englander, though, it's like, who cares if we don't get that data, though, because he's basically saying it's not very good. But yeah, this is what happens when you have a government shutdown. BLS workers are at home. They can't prepare the report, and that means we're not going to get the report on Friday. No mention yet, though, of when that's going to be rescheduled. Because this is at the end of when we're supposed to get it, I imagine minimum next week. They got to come out with it.
Steve was brutal, wasn't he? If you missed the conversation, spent like 10 minutes going after US economic data, and then at the very end, took a jab at Europe, because why not?
Yeah, because ultimately they're even worse. And then he said, you know, you fire some Bloomberg News reporters. And we were like, whoa, hold on a second. The line has been crossed. Look, ultimately the data is not great. But not having it, people can whine about that too. And there's a real question here about, are we undermining the credibility, or are we just adding to the panoply of private data that we get? We're getting ISM. Yesterday we got ISM. Tomorrow we're getting ISM services. Very exciting. I'm very happy about that.
Looking forward to that as well. Equities right now on the S&P, positive by 1/10%. Coming up this hour, Victoria Fernandez across markets. Investors shake off the noise. Terry Haynes of Pangea Policy as the US and India seal a trade deal. And Vishal Kandudra of Morgan Stanley following Oracle's $25 billion bond sale. Elsewhere, we begin this hour with stocks holding near record highs following a choppy start to the week. Victoria Fernandez across market writing rich equity valuations and lots of optimism set a high bar for positive surprises. Victoria joins us now for more. Victoria, welcome. Does that dampen returns this year?
I think it does, Jonathan. I mean, you walk into a year where you already have PEs above 22 times. You've got really strong earnings, really strong profit margins. You've priced in a lot of this positivity that people are expecting to see later this year, things from the One Big Beautiful Bill as it relates to productivity, as it relates to CapEx. All of this is kind of priced into the market. So if we, continue along this path, what is it that's going to make us go higher? Is it continued good earnings? Okay, well, we've priced that in. Is there going to be some kind of a black swan event that changes things? It makes it difficult, I think, to see a ton of upside, although I want to bring some optimism to the show this morning. So I'm trying to be a little upbeat here. We want to be in this market. We want to be invested because we think we will have positive returns. But in our opinion, you're looking at much lower returns than what you've seen over the last couple of years.
Victoria, I think you framed the challenge for investors coming into 26 quite nicely. Is it too early to fade the benefits from fiscal monetary policy and massive CapEx over the last 12 months and over the next 12 months? Is it too early to do that before we've even seen some of the benefits from those three pillars?
There are certain places where I think you can go ahead and trim some of your positions, and those are going to be your really high momentum names. So not necessarily trimming the things that we think are going to benefit from those elements we just talked about, but we came in the year with that broad-based momentum. You look at small and mid caps, we've seen software come back. Now the small mid caps have come back. We've seen parts of financials come back when you look at private credit and insurance. So when you've got this kind of divergence between performance on high momentum and low momentum names, start trimming some of those high momentum names. That's where I would generate some cash and have ready to implement. On some of the other names where you're having higher trends, you're seeing things start to develop. We still like big banks. We like regional banks. You're seeing energy now. Jonathan, 100% of the names in the S&P energy sector are above their 200-day moving average. So I think there's some other places you can put money to work. Trim the high momentum names that have already had that run.
Victoria, is this the strategy for the rest of the year? Essentially just follow the sort of rolling balls of money into one area and then another area and figure out when it's gotten over its skis and then just fade a little bit. And ultimately it's a churn to nowhere. It's a churn to sort of a pretty exhausting small gain.
I hope it's not like that. I hope really, and what we do for our investors that are longer term investors, you have to build that foundation in your portfolio. Those names that can weather some of this. It is a midterm election year. We know it's going to be high volatility. You typically have around a 19% pullback in a midterm election year around the middle of the year. So you have to have a defensive component to your portfolio. You have to be willing to be tactical in the things that you do, but that doesn't mean you're constantly trading and having churn in your portfolio. You have that core component, and you know me, I'm always going to tell you have a little bit of fixed income in there. Well, I think you're going to see a steepening of this yield curve. There's different elements of whether it'll be a bull steepening or a bear steepening, but I think it's going to steepen regardless. So I think you have an opportunity to add some cash flow from fixed income as well.
This really goes to the core of what a safety trade is. I mean, is safety found in precious metals? Is that the ballast of stability after what we've seen over the past couple of weeks? Is it in fixed income where you see long-term bond yields? As you're saying, you're expecting that steepening in the yield curve. I mean, how much of the safety is challenged in addition to some of what momentum is on any given day?
Yeah, I think the definition of safety definitely changes. Lisa, I mean, if you had looked a couple of years ago, safety were these big tech names. It's the Mag 7 names, right? That's where people were looking for safety. And we see what's kind of happened there and concern around some of the CapEx and how that money is going to be raised. And I don't think you can look at Staples. Staples have had a horrible turn over the last 12, 18 months, although they are starting to build a little bit. There hasn't been a positive trend turn there yet, but there's some positivity there. I think you're looking at companies that have high quality factors. They have decent momentum factors. You're looking at things like big banks, which you know we like. You are looking at some things like fixed income. And I think you can have some materials and things in there as well with the anticipation that we're going to see manufacturing pick up.
Victoria, when you say you're getting defensive because it's a midterm election year, what is it about the midterm elections that make you want to be defensive? Because a lot of what we're hearing out of Washington is noise and might not actually come to fruition.
It's more kind of looking, Anne-Marie, at the fact that as you come into a midterm election year, you typically have a lot of policies that have been put in place in order to generate positivity for the country so that they go out and they vote and they keep the administration in place, right? But the problem is that's already priced into the market. It's what we talked about in the very beginning of our conversation. And so as we go through a midterm election year, you have to say, well, what's the next thing that's going to help this market do well? And there's volatility back and forth on that. So you've already priced in the things that you haven't quite received yet, and you're not sure what's coming down the pike, and you get lots of talk, lots of headlines in midterm election years. You get shutdowns like we're seeing right now, and you get data that's missing. So there's lots of that volatility. The VIX tells us that. And when you have a short positioning on the VIX like we saw last week, that puts your equity market and, you know, in a place where even more volatility can happen when there's bad news. So it's a combination of those factors that typically gives you a pull down, but you start to do better at the end of the year.
Is there a tell in bank stocks? Given everything just mentioned, Anne-Marie's point about a midterm year and some of the proposals, is there a tell in bank stocks? JP Morgan, Bank of America, Citi, all negative for the year so far.
Yeah, they are. But we like these companies and their balance sheets. And to us, when you're going to have a year with a lot of ups and downs, lots of obstacles to overcome, then I think you want a company that can stand that test of time and can stand that volatility. Their balance sheets are top notch. And even regional banks, we've seen them really shore up those balance sheets. So we think from terms of cash flow, from terms of the management of those banks, those are the areas where you can put money to work when you see pullbacks like you do right now. And it's never going to be just always, you know, straight up. You're going to have these moments where these pullbacks happen, but we think longer term, this is a great place to be.
It begs the question, though, why isn't the stock working? Why isn't the story working now? What's leading the pullback, and why does that go away anytime soon?
Yeah, I think right now some of the issues that you're seeing are in terms of the Fed. Are we going to see a policy mistake come out of the Fed? Obviously, Warsh now being named as the potential new head, and there's a lot of concern around there. I'm not as concerned as the market is on these names. I think when you look at Warsh and you look at the Fed, look, either way, if he goes in and says we need to cut rates and he convinces the rest of the FOMC to go along with that, okay, then you get your bear steepening in the yield curve. That's positive for banks and for financials. If he stays with his more hawkish rhetoric that he's had in the past and wants to reduce the balance sheet even quicker, then you have the longer end move up, that term premium higher again, a steepening of the yield curve, which is good for banks. So I think the outlook for banks looks good. And I think there's just a lot of noise right now as to why we're seeing the stocks behave the way they are, because earnings were pretty solid.
Victoria, it's good to see you. Victoria Fernandez across Smart Global Investments. Thank you. Is it Kevin Warsh or is it credit cards? Because Goldman Sachs and Morgan Stanley, those stocks don't have that problem this year.
Yeah, so this ultimately is really a question for a lot of people. How much is the overhang of possible crackdown on huge profits amid concerns about affordability in a midterm election year going to weigh on some of these stocks, especially given how far they've come, right? So this is already coming from a pretty significant place of a rally. It is notable, the divergence between the Bank of America, JP Morgan's, and the likes of Morgan Stanley and Goldman Sachs.
But John nailed it. It's a proposal. It comes from the president's truth. And this has been a proposal in Congress for a lot of senators for years. And guess what? It's not law. So it's interesting they haven't yet made up that space.
The businesses are okay. The companies are doing fine. Victoria talked about the balance sheets. Cool, got that. The stock story is different, and there's just a dark cloud hanging over the stock story because of the proposals of the last month.
There was speculation that some of these big banks could become growth stocks again, that they would be able to have bigger balance sheets, be able to take on more risk, and engage in a way that would allow them to generate profits in the pre-financial crisis era. There is a question about whether that will be hampered by some of the social pressure, and I think that that's what some people are trying to evaluate.
The futures this morning positive by about 0.1%, call it 0.2% higher on the S&P 500. With an update on stories worldwide with your Bloomberg brief is Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. President Donald Trump is calling on Republicans to nationalize voting in the United States ahead of this year's midterm elections. In a podcast interview with former FBI Director Dan Bongino, the president saying non-citizen voting is improperly influencing election outcomes. Pfizer shares are sliding in the pre-market after it reported fourth quarter earnings. The pharma giant beat sales estimates boosted by its older drugs as it races to fill gaps from its declining COVID vaccine and pill franchises. But the company scaled back its full-year guidance, seeing tariffs having an impact of around $1.5 billion. PayPal shares trading lower in the pre-market after it reported fourth quarter results that missed Wall Street estimates. The company posting a miss on both the top and bottom lines. PayPal also announcing its CEO, Alex Chriss, will be replaced by HP CEO Enrique Lores. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Vonnie Quinn there with the latest. Up next on the programme, a trade truce with India.
You know, we're making a deal with India, a much different deal than we had in the past. So right now, the tariffs are very high on India because of the Russian oil, and they've stopped doing the Russian oil.
Up next, we'll catch up with Terry Haynes of Pangaea Policy, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the price action this morning. Here's the scores. Equity futures so far in this session, so far so good, spending the whole session in positive territory, up by 0.2% on the S&P, on the Nasdaq 100 higher by 0.4. Under surveillance this morning, a trade truce with India.
You know, we're making a deal with India, a much different deal than we had in the past. So right now they don't love me, but they'll love us again. We're getting a fair deal, just a fair trade deal. We had pretty unfair trade deals. They're very good negotiators, sir. Just you have to Take a look at that, if you would, please. But we're getting close. Well, right now, the tariffs are very high on India because of the Russian oil, and they've stopped doing the Russian oil.
So here's the latest this morning. President Donald Trump getting his deal. The US and India agreeing to mutual tariff reductions. New Delhi promising to halt Russian oil purchases and buy billions of dollars worth of American-made goods. Bloomberg's Tyler Kendall joins us now for the latest. Good morning, Tyler.
Hey, John, good morning. Well, this caps months of negotiations, but with a pretty sizable outcome, right? India is going to see U.S. tariffs on some of its products, in some cases, drop from a combined 50% down to 18%. India ships about a fifth of its total exports to the U.S., so our analysts at Bloomberg Economics say that this should help restore the country's competitiveness since it did notch a lower tariff rate compared to many of its regional peers. Yet we know India was really lobbying for an even lower rate. In fact, they were aiming for 15%, and the fact that this ended up higher might imply that Washington was pricing in some weaker concessions than originally expected, because as you well know, India was one of those first countries that came to the White House to negotiate. But we really saw the trade talks go off the rails over a number of sticking points, including but not limited to U.S. imports into India when it comes to agricultural products, and then, of course, Russian oil. And while President Trump has outlined the concessions India has made, all we have heard from the Indian Prime Minister Modi is a confirmation of a deal, but no further specifics beyond that. And there are some still big questions on the table, including the scale of reduction from Indian refiners when it comes to Russian energy supplies, because while the White House has curbed those flows into the country, they haven't halted them altogether. The president has also suggested that India could start to import Venezuelan crude, though we haven't gotten any details there and whether or not that is somehow linked to this deal. John, I will quickly point out the timing here. Of course, we saw India last month clinch a long-awaited trade deal with the European Union. That had been expected at that point for years. So interesting to see how the White House has now closed the deal here, as we've seen a lot of allies try to diversify away from the U.S.
A better week for India, that's for sure. Tyler, thank you. Tyler Kendall down in Washington, D.C. Terry Haynes of Pangea Policy writing, it's a strong signal that Trump is walking and chewing gum at the same time, not letting geopolitics distract from U.S. economic attention. Terry joins us now for more. Terry, that raises the question then, who's next?
That's a very good question, John. And, I'd look for, among other things, a strengthening of the US-EU deal, which has been kind of on, off, on for, Davos-related reasons. And, beyond that, I would look for probably we should go out and look at Asia a little bit more, where the trade deals can be strengthened even further.
Terry, Tyler mentioned it, but Prime Minister Modi was one of the first officials to come to the White House. It was almost a year ago, February 13th of last year. Yet basically a year later, we are getting a deal. Was damage done in pushing India towards, say, China or Russia because this deal took so long?
There's been a lot of, Modi's got his own politics, of course, but there's been a lot of back and forth and a lot of kind of raw elbows between the United States and India on all kinds of things, ranging from the geopolitical scrapes between India and Pakistan, and frankly, Trump's desire to take credit for the lessening of hostilities there, to the Russian oil, all kinds of other things, many of which Tyler mentioned, and that has made things more difficult than they appeared to be last year when Modi was talking about MAGA plus mega equals MEGA, or MEGA, whatever it was. And but they have had a desire to do a deal for quite a while. It's been obvious that things have been thawing, and I think there's still some prickliness there, but there's a desire to do a deal. The other thing I'd say is that there's a lot of hand-wringing in markets always for the lack of detail of these things, and that's entirely fair. But you look at the other way that this has been done in prior years, where deals have been negotiated. They're never finalized. Finally, they're finalized, like the EU with Mercosur, which took 25 years, and they're still not done. So markets prefer progress, so that's positive for markets.
Well, when you talk about the prickliness of this deal, the president made it clear they're not going to buy any more Russian oil. We didn't hear that from Modi.
Well, exactly. That's And, I made clear when I wrote that the details of this, many details of this, were not final. And I imagine, and I am, this is instinct on my part, I imagine that the timing of winding down Russian oil purchases is the major reason why Modi isn't talking about that. And I also imagine that there are a variety of other details that both the United States and the India want, also relating to timing, purchases of what, when, and how, all those sorts of things. And that's about, I think that's the reason why we have kind of a sliding deal here.
Is there a tell in this, Terry, that perhaps the U.S. is taking a harder approach with Russia as a result of some of the ongoing negotiations with European allies about the war with Ukraine and Russia? And I ask this because that's a key component of this deal. India agreeing not to buy Russian crude.
Yeah, I think so. I think it's a major signal from this deal. Trump likes to do what he can to butter up major adversaries, and that gets off-putting for domestic audiences sometimes. But I think there's no doubt that what the United States is doing right now is trying to push Russia and squeeze the lifeblood of its war machine. Then European allies are helping. A lot of the Ghost Fleet activity coming back into European waters has been harassed and more. And, so what you're seeing is a kind of a ramped up effort based on what not only the United States, but more importantly, the Europeans are willing to do. They were not willing to, for example, take frozen Russian assets and convert those for Ukrainian use, but they are willing to do that. So the policy is shifting to that, and that will have the usual effect on Russia's economy, but it also makes China's support and pumping up of the Russian client state even more obvious than it is today.
Terry Haynes of Pangaea Policy. Terry, appreciate the update. Terry, thank you very much. Rightly or wrongly, many market participants aren't focused on the details of any of this. They're focused on the direction of travel. Tariffs are coming down, they're not going up, and people are moving on.
People moved on even when there were more tariffs that were put on. When there was sort of the suggestion of it with Europe, it seems like people are expecting the temperature to come down, especially as affordability is increasingly an issue in 2026.
Temperature to come down and then potentially go back up. We have USMCA being renegotiated this year. And also, we still have not gotten the Supreme Court decision on IEEPA. Potentially, we're going to get that in a few weeks at the end of February. And does that just create a lot more chaos and a little bit of headaches and head scratching for corporate America?
Biggest surprise of the last 12 months, the tension with Canada. Just did not anticipate that at all.
If you look at Disney earnings, you can see that one of the reasons why they didn't have bigger growth in their parks and recreation business is because Canadians aren't coming. Canadian tourists down 25%. They're not coming to Florida. They're going straight to the Caribbean. People are angry. Didn't see that coming about how much that spat was going to continue.
You're seeing it in the numbers. Equity futures this morning positive by 0.2%. Coming up, Ishwar Prasad of the Brookings Institution on the doom loop, facing the global economy. Plus, Yahira has your morning movers. Shares of PayPal hammered, down 15%. From New York City, you're watching Bloomberg TV.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Snapping a three-day losing streak on the S&P 500. Equities up yesterday, up again this morning by 0.25% on the S&P. On the Nasdaq, up by 0.5. The numbers from Palantir, decent. The debt issue, $25 billion from Oracle just yesterday, well received. Lifted enthusiasm for that whole ecosystem in the last 24 hours. And moving on pretty quickly from that explosion in precious metals, gold, silver up nicely already this morning. In the bond market, 2s, 10s, 30s shaping up as follows. Going into the data, what data? No payrolls Friday, no JOLTS data, I believe, either. We're waiting for ADP and ISM services over the next few days.
Yeah, it's ADP and ISM services Wednesday, and I'm so excited for it. I'm going to be 100% there for it. It's the reason why you saw such a significant move yesterday on ISM manufacturing, because guess what? It's one of the few data points that we're actually getting, and it does suggest that we're getting a rebound in some of the key areas that President Trump has been pushing for. Let's see if we see something similar in services. Can we get excited about ADP and ISM services Wednesday? I'm going to try.
We'll try. We'll try to. The good news is you don't have to pretend, because ISM services comes out when we're not on air. But that is a data point I'll look to. ISM manufacturing was good. It was solid yesterday.
I don't pretend. I get genuinely enthusiastic.
Everything about it is authentic.
And I will be genuinely enthusiastic at 6 a.m. the next morning.
Nothing disingenuous about any of this at all. 10-year bond yields near the top end of the range for the year. 10-year bond yields this morning, 4.28. With an update on movers in the pre-market, your morning movers. Here's Yahara with more. Hey, Yahara.
Hi, John. We start with PepsiCo. Shares are falling 0.75%. The company did beat on earnings, but it was only a slight beat. And with the stock up about 8% year to date, investors may have been looking for more. We also have the Wall Street Journal report saying that the company plans to slash prices by as much as 15% on products like Lay's potato chips as they try to win over those price-conscious shoppers who the Wall Street Journal reports have been calling into PepsiCo to complain about the high prices. Meanwhile, we have PayPal shares plunging in the pre-market, down 15.5%. Let's start with the earnings, which seem to be the main catalyst because they were pretty rough. The payments company missing on both the top and bottom lines, and the growth picture doesn't look good either. So for that reason, they have chosen to make a shakeup at the top, appointing the CEO of HP, Enrique Lores, to lead the company as CEO. He will replace Alex Chris, with the board chair saying that the pace of change and execution by Alex was not in line with expectations. And we end on U.S. rare earth stocks. They are bucking the trend up in the pre-market. Critical metals up nearly 6% after President Trump yesterday announced a $12 billion strategic minerals stockpile, the first of its kind for the U.S. private sector. All of this part of an effort to reduce reliance on China, which dominates the market with an estimated 85% of global processing capacity. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, the BLS delaying the release of the January jobs report due to the partial government shutdown. High Speaker Mike Johnson saying he expects a continuing funding measure to reopen federal agencies will be passed later on today. Elsewhere, President Donald Trump saying the criminal investigation into Fed Chair Jay Powell will continue, quote, to the end. Republican Senator Tom Tillis declaring he'll oppose any new Fed nominee until the Powell probe is fully resolved. And finally, one to take note of, Australia becoming the first major economy to hike rates this year. The Reserve Bank of Australia expecting core inflation to peak at 3.7% in June. Many economists expected the central bank could deliver another hike in May.
Yeah, they raised their growth and inflation forecasts during this decision. They raised rates to 3.85% from 3.6%. What is different about Australia? This is what's interesting to me. They are at the epicenter of this whole sort of revenge of the real world. They produce some of the greatest volume of iron ore, of coal, even of silver and gold. They have all of these mines. And so ultimately, their economy has been bolstered by this. It is just Australia and Japan. Everybody else is in a holding pattern, but it does highlight how it does seem like these divergences are growing in a world that is incredibly multifaceted. I mean, really, the different kind of influences here are amazing.
It's a fascinating time in financial markets. One of the reasons, of course, that Australia and the Aussie dollar is the best performing currency in G10 over the last 12 months. They want inflation in a band of 2 to 3%. Inflation's closer to 4 than it is to 3. That's a problem. I'd throw this out there too. They've got a big problem domestically now with the politics of the mortgage market and housing. Housing in Australia is absolutely ridiculous, and rates are going up in the wrong direction for a lot of people who need to service some of those houses.
This is the reason why you look at the economics and it looks really good, and then you look at the politics of it and how this sort of plays into it. And I think that increasingly this is going to be the discussion. How do you get 6 months, 12 months down the line in terms of the policy response at a time where there is a dual mandate for all of these central banks? They're facing off with people who cannot afford their lifestyles at the same time that the overall economies seem to, at least in aggregate, be booming.
Governor Bullock calling the situation unacceptable down in Australia. Let's turn to trade. President Donald Trump striking a new deal, lifting tariffs on India. The world now 1 year into President Trump's push to remake global trade in his second term. Ishwar Prasad, senior fellow at the Brookings Institute, offering a clear-eyed account of the forces at play in his latest book titled The Doom Loop, Why the Economic Order is Spiraling into Disorder. Ishwar joins us now for more. Professor, it's good to see you.
It's good to see you as well,
We bumped into each other in the last few weeks, and I think it's fair to say this is not the book you wanted to write.
This is indeed not the book I plan to write. I plan to write a much cheerier book about how we are moving from a unipolar world after the collapse of the Soviet Union, where the U.S. became the dominant power in every respect, economic, military, financial, to one where economic power at least is more evenly distributed across countries. As an economist, who instinctively one thinks competition is good for efficiency, balance, and stability. But it turns out that the forces that I thought would lead us towards a stable equilibrium, and perhaps now we're just in a period of transitional volatility. As I thought about it, it occurred to me that each of these forces is in fact engendering more instability rather than stability, and therefore the doom loop.
When did you finish the first draft?
October of 2024. And at the time, it seemed like the book was a little too dark. So I said, let's wait for the November 2024 elections, maybe rethink the thesis. Because, you know, my heart was pulling in one direction, which was a positive direction. My head was pulling in the other direction. But then, of course, everything that has happened over the last 14 months has validated, if not turbocharged, the thesis of the book, sadly for the world.
The last 12 months is questioning a lot of what we were taught in international relations. In fact, if you go to the textbooks, they'll tell you that the era in which the British Empire and Britain maintained the global order followed onto the era that America led the global order. And a lot of that changed because Britain no longer had the economic means to maintain it. The situation here that I think is rather unique in economic history is that we have an unwilling hegemon. It's a hegemon that actually has the power to maintain it, but is unwilling to do so. How unique is that?
It is a very odd time in the world because there are two superpowers. One, as you said, is seeming to want to cede its role as the global hegemon, providing global leadership. The other superpower needs or is trying very hard to establish its position. But the problem is that the rest of the world, everybody is stuck in the middle powers, seem to view both of these as untrustworthy, unreliable allies. So they're sort of bouncing between each other. So that's where the instability comes from. Rather than these two forces basically stabilizing each other, with the middle powers adding some stability, each of the middle powers is actually creating even more instability because you're teetering from one side to the other.
Why are you not seeing this more in markets? We saw occasional flare-ups of sell America, of sell the dollar, of a weaker dollar. We did see that last year, but not necessarily a wholesale exodus. Why are we not seeing it in a more significant way if this really is coming to pass?
So the doom loop is about how economics, politics, and geopolitics are stuck in this negative feedback loop. But it turns out the doom loop is not inconsistent with things looking very good on the surface. In fact, it's when things look calm on the surface and there are tensions building up underneath that you have potentially worse outcomes. And we may be in a similar moment. And certainly the US is in some sense unique. It remains a very dynamic economy. Although the institutions are being frayed before our very eyes, it still has relatively strong institutions. And it's been able to generate one thing that no other major advanced or emerging market economy has been able to since the COVID period, which is enormous productivity growth. When productivity looks so good and we don't fully know why this is happening, that makes everything add up. It could be AI, it could be deregulation, but there is something fundamental about the dynamism of the US economy and the fact that no matter how weak it seems in terms of institutions, in relative terms, it still looks pretty good compared to other countries.
How do you see the doom loop manifesting itself down the line? I mean, we've heard the Ray Dalio line of thought of civil war and all sorts of revolutions as you get sort of one great behemoth getting passed to another hegemon to rule the world in a certain kind of way. How do you see it kind of evolving?
So I'm an economist, Lisa, and certainly I know that economics, domestic politics and geopolitics go on parallel tracks and occasionally they intersect with each other. But we are at a moment right now where these are intertwined in a way that is very difficult to separate, which is why as an economist I'm venturing into this broader territory. But there are times when this feedback loop is positive. During the 1990s, the 2000s, there was a sense that this feature of globalization, for instance, might work well for everybody. There would be a positive-sum game that would offset the intrinsically zero-sum game of geopolitics. But now even globalization, especially trade, is seen as a zero-sum or negative-sum game. And that means that there is no balancing force to geopolitics anymore. So this is why I fear that we are stuck in this loop where essentially each of these elements brings out the worst in each other rather than the best.
Are there not any positive outcomes, though? NATO is spending more. Europe is trying to do more in terms of the Trump administration pushing them. There might be a deal on Greenland. This administration is going after rare earths, where China absolutely dominates, not just owning them, but processing them. Isn't some of this also positive in terms of feedback loop?
Certainly, Anne-Marie, moments of crisis can sometimes bring out the best in countries. And for instance, in the case of Europe, when its territorial integrity is threatened, as was the case with Ukraine or with Greenland, Europe, stiffens its spine. The question is whether there is a political will to do what is necessary, to do the positive things that are necessary to improve productivity and growth in the economy. And there, the internal dissensions within the Eurozone seem to be holding things apart. So it is true that there are times when we might be able to pull these dynamics in a positive direction. But as I argue in my book, what it's going to take is very engaged citizens, business community, and national leaders who can help us see beyond our short-term prejudices and better institutions, domestic and international.
I feel like Prime Minister Mark Carney read your book because this feels part of what he was talking about in Davos with his speech. How are middle countries, in terms of what you're seeing, deciding on whether or not to get closer to Beijing or to stay with Washington?
They are stuck between these really unsavory alternatives because, the U.S., as we were just discussing, is receding from its role of providing leadership. China's not quite trusted anymore because of its institutional framework. So take India, it is using this approach of what they call issue-based alliances. When it comes to the matter of cheap oil, it sticks with Russia and China. But on the other hand, it sees its fundamental values as aligned more closely with the West. So India could be a balancing force, but it's not quite happening. And if you look at the middle powers, and unfortunately I put Europe in them because it could be a great power, but it's not ascending to it, they have a lot of dissimilarities. Rich, poor countries, small, large countries, they should be coming together. But as Mark Carney said, the pragmatic approach might be these issue-based alliances, but that doesn't build deep-rooted alliances that will stick through difficult and good times.
Professor, what do you think went wrong? What do you think went wrong? How did we get here?
That's exactly what the book is about. I think the reason the feedback loop turned negative is if you think about the benefits of something like globalization as we economists recognize and measure them, at the aggregate level they were very good. But there was a disgruntled class of people who felt that they were left out, not just in terms of losing jobs, but in terms of losing opportunity. And what they saw was that the benefits were going to the economic and political elites, and they didn't need to do anything illegal or illegitimate. They just captured the political process. So that infected domestic politics. And that in turn is now affecting geopolitics, as we can see in the context of the US-China relationship, but even the US relationship with traditional allies like Europe and Canada. So this is where the loop is going to be very difficult to get out of, again, unless we have the corrective mechanisms working well, and that's going to take better institutions.
Professor, it's good to see you. Book on sale today?
Today, indeed.
Best of luck with sales, sir. We appreciate your time. I've got a copy on my desk. I'm going to start reading it today. Ishwar Prasad of the Brookings Institution, author of The Doom Loop, Why the World Economic Order is Spiraling into Disorder, something you and I have discussed quite a few times. What globalization did to manufacturing. What will AI do to services?
Yeah, you start talking about the aggregate numbers that look okay and then people not feeling okay. It kind of is deja vu all over again when you take a look at what's going on right now. And it's the reason why you're getting a lot of political pushback to some of the AI initiatives that we're seeing.
That's the next book, isn't it? Maybe. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Secretary of Homeland Security Kristi Noem is requiring that all the department's officers on the ground in Minneapolis wear body cameras. The Secretary making the announcement yesterday on social media. President Donald Trump saying he thinks it's generally good for law enforcement to wear cameras. President Trump says he's seeking $1 billion in quote-unquote damages from Harvard University after the New York Times reported that his administration had backed off demands for $200 million to satisfy accusations of wrongdoing by the Ivy League institution. Trump called the Times article, quote, completely wrong. Today's show host Savannah Guthrie's mother is missing. Nancy Guthrie was last seen on Saturday near her home in Tucson, Arizona. Police in Pima County believe she was abducted from her home while she slept. Officials say the disappearance is being treated as a crime and are urging neighbours to check home surveillance footage. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate the update. Up next on the programme, big tech's debt binge.
This AI spending trade is getting an audit right now, and the audit is telling you if you have leverage on balance sheet and you're committing to spend, you better have a way to demonstrate to investors that there's some monetization.
That conversation up next with Vishal Kanduja of Morgan Stanley from New York City. You're watching Bloomberg Surveillance.
For us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Revenue, for example, and Nuvian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth we've started with by empowering our customers across all our segments?
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Stocks are up by a third of 1% on the S&P 500, up by 0.5 on the Nasdaq. The Russell small caps up by a third. Under surveillance this morning, big techs, debt binge.
There's a lot of stocks that are triple B or below that have committed to a lot of spending. This AI spending trade is getting an audit right now, and the audit is telling you if you have leverage on balance sheet and you're committing to spend, you better have a way to demonstrate to investors that there's some monetization or some return on that investment. If not, you're gonna kind of be punished in the credit market.
So here's the latest this morning. Oracle easing fears of an AI debt bubble by outlining fundraising plans split between equity and credit markets. Vishal Kandudra of Morgan Stanley writing, we view the spend from a cautious debt holder vantage point, negative overall, but have idiosyncrasies, overweight in certain issuers. Vishal joins us now for more. Vishal, good morning to you.
Morning.
This is my very amateur understanding of the last 24 hours. So there was an equity component to the capital raise. So debt holders were happy and equity holders were happy because debt holders were happy. Is that the way things played out in the last 24 hours?
A little bit, but there was commitment from the company about IG ratings. I think if you take a step back, they issued in September. Spreads widened probably about 100 basis points, almost pricing mid-double B levels. Lack of certainty about how much they want to issue. And then all the multi-layer contracts that we can question about as well. Then they come out, listen to the debt holders. Yes, you cannot do this without destroying your own capital structure. Bringing in equity issuance, even when the stock is down 50, 60% at these levels. So there is significant commitment to investment grade. And that's why spreads have snapped back. Now, again, spreads are not as tight as some of the AA hyperscalers out there, 70, 100 wider. I think BB spreads are on an index level 155. I think the 10-year here is probably about 140, 145. So still not out of the woods. So there is definitely risk being priced in there.
So we're sitting there straddling the dividing line between junk and investment grade. And typically when CapEx is assigned or tied to a multi-year contract, that's not speculative, particularly when the company has a strong balance sheet. Now, that's where there is a big question mark, because this CapEx is tied to multi-year contracts with a range of companies, but the one that's in the spotlight is OpenAI. How speculative is that story?
Definitely, but I think you're seeing quite a bit of earnings come out where cash flows are real at this point. Yes, I think when you extend out an NPV, some of these cash flows are still negative, and I think some of the equity raises will help on the other side to allay those fears. And that's why I think you're pricing in probably BB type of levels on the overall debt here. So you're not pricing in AA or single A type of levels. I think one more piece, if I could make, what is happening, and probably if you look back, probably last 5 to 10 years, or probably 15 years, going back to 2008, the financial crisis, the makeup of the indices matters a lot because there's quite a bit of passive money going in. Now, all this AI CapEx infrastructure with these long bonds, you're going to have 5-7 extra % market value and spread duration in equity, fixed income indices that passive buyers cannot just ignore.
Let's build on that. There was a Bank of America survey of credit investors recently that showed that the majority expect hyperscaler-related investment-grade debt to be somewhere between $100 and $300 billion so far this year. We're seeing the composition of what's considered investment-grade change as a greater proportion comes from some of these hyperscalers. Does that make investment-grade riskier?
Absolutely. I think you're going through a time period between 2003 to 2005 where you had basically balance sheets peaking out in credit quality. You're having the same issue right now because of the issuance. Now, again, the starting points are extremely, extremely solid, where you have companies who've gotten probably 7 to 10 years of extreme amount of cash flows in there. They're sitting at AA, AAA levels. I would say that if some of these hyperscalers came out yesterday, we saw one of them, the lower quality one, but if the higher quality comes out, they'll have more sort of debt book build up, more than 30-year treasuries at this point. So the starting points are extremely solid, but yes, you're in the deterioration of credit on some of these parts.
How do you explain the volatility that we've seen in the metals market, the volatility in headline risk, the volatility that we're seeing in sentiment, and then a global bond binge that is unprecedented so far to start 2026? We've already seen more than $1 trillion in total issuance coming from governments and the likes of financial companies and the likes of Oracle. How do you square those two ideas?
Quite a bit going on. So I think if you can take a step back and parse it out, we think that there's a Besant moment happening with Warsh's, at least the nomination. I think we still have to go through the clearing of that. I think there were 3 or 4 individuals who were in the running, more considered to be very close to the White House, and then you picked a person who supposedly, at least on paper, can build a lot of consensus that it needed in the divided Fed. That's why you saw a massive sort of move in the dollar, curve steepened out, because Warsh is going to be very dovish for the front end, very hawkish for the back end on that part. And then the dollar regains a little bit, at least momentarily, a little bit of credit back that it had lost over the last 2 months. I think also what is happening, if you can take a step back, you go back to 2008, 2005, where these Fed swap lines were given out to different central banks. I don't think that the global central bank sitting in Europe or somewhere other part of a developed world can confidently say that if they're going through a credit crisis, that they can put in a call to get extra dollars. That's why you're seeing a massive amount of flow into debasement trade, whether it's cyclical currencies, whether it's dollar, whether it's the gold, etc. And now the issue with volatility.
तो guys, ये क्रूड ऑयल के ट्रेड का ध्यान रखना है, काफी देर से रुका हुआ है रेजिस्टेंस पर। जितने देर रुका रहेगा, याद रखना ये यहाँ पर जितनी भी लिक्विडिटी है सेल साइड की सारी एब्जॉर्ब करते जा रहा है। इतना देर रुकना नहीं चाहिए, ठीक है। लिक्विडिटी प्राइस को मिलती है, प्राइस मूव करता है फास्ट, इतने देर नहीं लगाता है। थोड़ा सा ऐसा लिस्ट्रिक रखना, क्योंकि इतने देर से रुका हुआ है तो ऐसा ना हो कि ब्रेकआउट देके चला जाए ऊपर। अब 6:30 होने वाला है, न्यूयॉर्क सेशन ओपन होगा 6:30 पे, तो थोड़ी सी वॉलेटिलिटी एक्सपेक्ट कर सकते हैं, ठीक है। काफी देर से रुका हुआ है, रेजिस्टेंस पे देखोगे हिट किया था 345 की एक कैंडल ने, देयर इज अ रेजिस्टेंस हिट कैंडल रेजिस्टेंस जोन को, उसके बाद से उसी लेवल पे रुका हुआ है। इतना देर होल्ड नहीं करना चाहिए, प्राइस कंसोलिडेशन होगा, ब्रेकआउट के चांस बढ़ेंगे। 5679 के ऊपर अगर ब्रेकआउट होता है, ब्रेकआउट रिटेस्ट, तो फिर ये ब्रेकआउट ही माना जाएगा। सो तब तक है होल्ड, देखते हैं कितने देर और होल्ड करता है रेजिस्टेंस पे। सेलिंग वैसे आ जानी चाहिए, लग रहा है शायद 6:30 या फिर 8 PM के बाद, मार्केट ओपन के बाद ही शायद थोड़ा मार्केट मूव करे, तो अपना एसएल स्ट्रिक्ट रखना, ठीक है।
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Karen Moscow. 4 days into the partial government shutdown, and a vote could come today on a bill to reopen the government with 2 weeks of Homeland Security funding that would allow for more negotiations on immigration enforcement. 2 Republican holdouts, Anna Paulina Luna and Tim Burchett, dropped their opposition to the measure after speaking with the White House. President Trump says he thinks a deal is in sight.
I spoke with Speaker Johnson, I spoke with Leader Thune, and I think they're pretty close to a resolution.
President Trump spoke from the Oval Office. The short shutdown is already having an impact. The Labor Department said this Friday's January jobs report will be delayed due to the lapse in funds. There's no word on when the release will be scheduled. President Trump said he's seeking $1 billion in damages from Harvard University after the New York Times reported that his administration had backed off demands for $200 million to satisfy accusations of wrongdoing by the Ivy League institution. Trump called the Times article completely wrong. The administration has waged an aggressive campaign against Harvard and other universities over accusations of anti-Semitism linked to campus protests against Israel's military campaign in the Gaza Strip. President Trump is calling on Republicans to seize control of election processes from individual states. To begin more with Bloomberg's Amy Morris in Washington.
The move is a signal that President Trump is ready to push for drastic measures to change the dynamics of the midterms. Trump's powers to change election policies are limited. The Constitution gives state legislatures the power to set the time, place, and manner of holding elections. The White House pointed to the president's previous advocacy for voter ID requirements and sharing voter rolls with the federal government, in part, they say, to ensure that undocumented migrants aren't registered. Trump has said if Democrats regain the House, they'll likely impeach him. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thank you. There are new developments in the Jeffrey Epstein case. Former President Bill Clinton and former Secretary of State Hillary Clinton have dropped their opposition and agreed to testify in House Republicans' investigation into the disgraced financier. The House had planned a criminal contempt vote against the Clintons this week if they kept defying subpoenas. Now, House Republican Virginia Fox says that vote will be delayed.
Obviously, there's a lot of ongoing discussion and negotiations about the Clinton contempt report.
Republican Virginia Fox sits on the House Oversight Committee. In another development, the NFL says it will review dozens of emails from New York Giants co-owner Steve Tisch that have surfaced in the Justice Department's Epstein files. Tisch says he had a brief association with Epstein where they discussed adult women and other subjects, but he says he never accepted any of Epstein's invitations and never went to his private island. Ukrainian President Volodymyr Zelensky is saying that Russia has launched a major attack on Ukraine with around 450 drones and 70 missiles. The strikes reported today came as NATO Secretary General Mark Rutte visited Kyiv and a day before U.S. brokered talks between Russia and Ukraine in Abu Dhabi. Turkey plans to host high-level talks between the U.S. and Iran on Friday. They're aimed at de-escalating tensions between the two countries. Authorities believe the 84-year-old mother of Today's Show host Savannah Guthrie was kidnapped, abducted, or otherwise taken against her will. The Pima County Sheriff Chris Nanos says it's imperative Nancy Guthrie is found soon because she could die without her medication. He spoke to ABC News.
We really want to find her alive, safe and sound, but my goodness, the longer this goes, the tougher it's going to be.
Guthrie was last seen around 9:30 p.m. Saturday at her home in Tucson, Arizona, an area where she lived alone. We turn to the markets now, and futures are higher following yesterday's gains on Wall Street. Dip buyers are back into precious metals this morning. Gold, it is up more than 6% after dropping 13% the last 2 days. Silver is surging more than 9% after plunging more than 30% since last week. And Bloomberg's Brendan Fagan says the worst of the sell-off appears to be over.
The constructive thing is holding those key moving averages. It may suggest that systematic traders are stepping in to start nibbling after quite the washout we had. But like I said, you never really want to catch a falling knife here. So there could be more to come, but it seems like the worst is behind us, and where we held is relatively constructive.
And that's Bloomberg's Brendan Fagan. Deutsche Bank is standing by its forecast for gold to rally to $6,000 an ounce. Right now, COMEX gold is at $4,933 an ounce. Again, that's up more than 6%. Elon Musk is combining SpaceX and XAI in a deal that values the enlarged entity at $1.25 trillion. We get more this morning with Bloomberg's John Tucker. John.
Yeah, good morning, Karen. The world's richest man looking to fuel his increasingly costly ambitions in AI and space exploration. The acquisition of XAI was announced in a statement on SpaceX's website, signed by Elon Musk and confirming a Bloomberg report from yesterday. This deal brings together two of the largest closely held companies in the world. SpaceX is still expecting to hold an IPO later this year. In explaining the rationale for the deal, Musk said in the statement that the least expensive way to do AI computations within 2 to 3 years will be in space. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. Robust earnings from Palantir Technologies sparking a rally in tech stocks as precious metals bounce back from a 2-day rout. Palantir is surging 11% in early trading on a stronger than expected sales outlook. Snacks and beverage company PepsiCo said it was cutting prices by as much as 15% in some of its key brands. They include Lay's and Doritos. It's a bid to lift its sales by offering more affordable products. Pfizer beat fourth quarter sales estimates on strong sales of its older drugs as it races to fill gaps from its declining COVID shot and bill franchises. The drug maker also released data for a drug it acquired from obesity startup Metsera that showed that people on the drug lost up to 12.3% of their body weight compared to a placebo at 28 weeks. And PayPal Holdings is saying Chief Executive Alex Chriss will be replaced by HP CEO Enrique Lores. S&P futures, they're up 0.2% this morning, up 15 points. Dow futures are little changed. NASDAQ futures up 0.5% or 123 points. And the 10-year Treasury yield at 4.28%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Thank you. Let's get to tech, and we talked about that dispersion. Meta versus, say, Microsoft, and within Mag 7. Then you've got software versus hardware. How difficult is it to approach this sector this year?
It's obviously quite difficult. But I have a differentiated view on this.
Please do.
I think if someone in the control room could throw up a 5-year chart of Oracle, let's say, I don't think that's a bad-looking chart. Obviously, there's an issue going on right now, and the point I've made repeatedly for the last year or so is Oracle's very much its own thing and what's going on there, as is the case with Salesforce and Adobe, let's say. But the charts of Adobe and Salesforce, in terms of the software conversation, look way worse than a lot of other names in tech. And in the case of Oracle, which is getting lumped in a lot of respects with the carnage across tech. So here's the chart of Oracle. Yeah, it's 50% off its highs. Thank you, control room. Yeah, it's 50% off its highs, but I bet an investor over the last couple of years is perfectly happy with Oracle's performance annualized over that time frame. And listen, there's a lot going on. They're raising $50 billion yesterday, obviously. They've got to play catch up in terms of building out the hyperscalers to meet its contract with OpenAI. And there's a lot of worry about that and its higher leverage levels. But again, as a long-term investor in Oracle, you're probably not too upset.
So let's just take the last 12 months and park the last 5 years, because the last 12 months is far more interesting,
Sure.
particularly the last 6. The CapEx build-out, how speculative is that CapEx build-out? That's been the number one question throughout this morning. And I understand people are a little bit more comfortable with the capital raise of the last 24 hours or so, but where do you actually stand on the fundamentals of the company and the way it's priced at the moment?
I read through. I'm not a particularly large tech investor. We don't own any of these large tech names. That's pretty clear. But I read through all these earnings reports. They all look pretty good to me. I think a lot of the variation in terms of price movement on a daily basis is a function of expectations versus reality. But when you step away from that and look just on an absolute basis, all these companies are doing pretty well to varying degrees. In terms of the investment, we're getting hundreds of, I think now the hyperscalers are going to do about $640 billion worth of CapEx this year, some number like that. I'm positive a lot of this is lighting money on fire. The question is, when does that fire go up, so to speak? And as an investor, it's the issue that you struggle with the most, because we've talked about the late 90s before. People were talking about a bubble in the infrastructure build-out in the 90s in 1995, in 1996, in 97, 98, and so on. And it wasn't until 99 when things went absolutely just insane in the back half of the year that people started to point to certain things that were legitimate worries. The time has come. I think the problem you have as an investor now is you look at this level of investment, you know some of it's going to be malinvestment and wasteful, but there's no indication as of now that it's slowing down. You just need to look at SanDisk's most recent report, for example.
There's an extra wrinkle here, which is that the spending that they're doing has fueled GDP.
Sure.
The spending that they're doing is supporting the entire economy, and without that, arguably, we'd be in actually a pretty weak economy.
I disagree with that, but okay.
Okay, well, please. No, actually, I'd like to go there. And how do you sort of back out some of the ongoing CapEx spend from some of the big tech players and figure out what's left over?
So I've done a little bit of work on this, but I'll defer to Goldman, who did more work than I did. And I think Jan has a report out in the last couple of weeks or months making the case that this is completely overblown from his, I may not go that far, but that obviously AI and the investment has been contributory to GDP, no denying that. But the degree to which some people are arguing that it's half of all growth or 3/4 of all growth is overdone. The limited work I've done sort of corroborates that as well. I come down on the side of...
Well, can I just ask you what number you put it at? Because I think Michael Semblas of JP Morgan put it at about 40%.
Yeah,
about 40% of the growth of the first 3 quarters of last year.
Yeah, I'm probably close to a third or a quarter. It's
so substantial.
Yeah, but it's not some people saying GDP would be cut in half or dare I say recessionary, not that you just said that, but I'll build the straw man for a moment here.
Thank you. Go ahead.
So for me, I've always come down, listen, this is still a consumer-led economy. It's not the 70% that everybody says, because you need to X out a couple of items, but the consumer's doing fine, and to me, that and investment is what's driven GDP over the last couple of quarters. And as I mentioned earlier, nothing in either the AI reports, the Metas and the Microsofts tell me that story is slowing down. And when you look at the likes, we don't have too many consumer companies yet, but when you look at MasterCard and Visa and American Express, who see spending across destinations, all told us that the consumer's basically fine as well.
Sure, people can fly to Fiji, but they can't buy Lay's potato chips unless you lower the price, right? I mean, this is sort of essentially the conundrum for the past couple of years. Yes, we did see American Express and the credit card companies come out with really good results, but then Pepsi today is talking about 10 to 15% price cuts across the board. Flaming Hot Cheetos, John's favorite, is going to be cut in price.
Right.
I'm just wondering what the signal is for you. I mean, how strong is a consumer that needs price cuts in order to keep buying Lay's potato chips?
So there's two conversations here, and there's no way to do this without offending somebody, so I will try my best.
No, offend someone.
There is two conversations here. One is me as an investor, and then one is me as like a human being living here on Earth. Obviously, you want everybody to participate in growth. And the idea that lower-income consumers, and the reality that lower-income consumers are struggling in this environment from a human standpoint is obviously a problem that needs a solution, for sure. The consumers, you mentioned Pepsi, the consumer staple companies, for 2 years now, you go through their reports and all their sales increases are price. Volumes have been going down forever and ever. From an investor standpoint, and this has sort of been my argument for 2 years now, I don't care as much. And that's...
I'm offended.
It could be, there's someone watching might be offended at me saying that, but I have to invest in the world as it is. And as much as I care about, obviously, everybody participating, that's capitalism is about that to some degree. As an investor, it matters much less to me.
Isn't this the year where investors have to take note? Because the president is now taking note and introducing remedies to this problem that could have consequences for markets.
Crisis.
Absolutely. The cloud that's hanging over the JP Morgan, Citis and Bank of Americas of this world right now, the fact that those stocks are trading negative, and a lot of people would say the difference between Morgan Stanley and Goldman and that bucket of stocks and the other bucket is some have credit cards and the others don't.
Sure. Listen, obviously the president has taken aim at credit card rates. I don't think anything's going to get done there. Like, I certainly don't think I'm in the minority. I would just note, yeah, the big banks are in trouble, but the regional banks are doing quite well. You know, Wells Fargo's down, Citigroup is down, that whole group is down, but the KRE is up on the year, called 4 or 5% or something like that. Yeah, the affordability crisis, I care very much about it from a human level.
No, I get that. No, I'm totally with you. Tomorrow's prices don't care about your politics or your feelings.
That's right.
I understand that, but tomorrow's prices care about policy. And the policies that are being introduced right now, whether you think they're going to go through or not, are having consequences for stocks. Well, I think that's the conversation we're trying to have.
Sure, the president's trying to jawbone this, and deservedly so. The housing story is probably the biggest issue at the center of everything that's going on in politics and markets right now. On my LinkedIn page, I've talked about this repeatedly. The politician that tries to address the housing story most convincingly is going to have a following to an nth degree larger than everybody else, because it is the death of capitalism, young people's lack of interest in democracy and tilt towards communism, socialism. At its core is the inability to buy a home or live the quote-unquote American dream. So I'm all for it. But at the same time, you do have the president saying, I don't want home prices to go down. So there are conflicting...
But it's not just credit cards, it's not just housing. It's going after the defense sector on buybacks and dividends. It's taking equity stakes in
the chart of Lockheed Martin does not tell me that's too much of an issue.
Well, it's also taking equity stakes and picking winners and losers of certain companies. ISM, you look at some of this commentary, confused and uninformed tariff policies continue to plague small companies. Don't you have to care about this and actually make an investment decision based on it?
Yes, we pay attention to all of this. The question is, you have to, in the hierarchy of concerns, a phrase I've been using for some time here, as an investor, what matters most? And it is the fundamentals of the company. And there will be times where a politician, in this case the president, saying let's cap credit card rates or let's subsidize cash for clunkers type programs has an effect on the investment landscape. But as fundamental bottom-up investors, ultimately, the fundamentals of the company are what matter. And so the types of companies we invest in, you want to be as far, generally speaking, you want to be as far away from this as possible. You don't want politicians meddling in your investment process, either on the positive or certainly not on the negative. And for a lot of investors, we have learned after 10 years of this to filter out what is consequential, what is going to matter, what is going to have an effect, regulations, executive orders, et cetera, and what probably won't, which is I want credit card rates to be lower when it actually takes an act of Congress to do that.
It's funny, I thought of you when that MasterCard report came out. I was like, Dan Greenhouse would be looking at this and not the numbers from the conference board.
Yeah, this essentially is what we've continued to see, is people looking away from some of the classic indicators because of exactly this.
Do you want to thank the control room just before you go?
Than you for quickly having up the... But this is why the crack control room here at Bloomberg Surveillance.
Bobby's quick, right?
If there was an Emmy Award for chart...
ticker knowledge.
Chart ticker manifestation. I think this Jim in the control room, because there's certainly a Jim, is there not?
Yeah, no, there's a Jimmy and a Bobby.
Jimmy and a Bobby.
Both getting it done.
Of course.
And
Dan,
Freddie.
thank you. Yeah. Dan Greenhouse, appreciate your time. Thank you very much.
Guys.
Of Solus Alternative Asset Management. Let's get you an update on news worldwide. Your Bloomberg Brief with Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. President Donald Trump is pushing House Republicans to accept a deal he struck with Democrats to end the partial government shutdown. In a post on Truth Social, Trump told lawmakers to swiftly pass the measure with no changes. The bill would fund most agencies through September and the Department of Homeland Security through February 13th. Elon Musk is combining SpaceX and XAI at a $1.25 trillion valuation. Musk says the company will work on AI, rockets, space-based internet and other technologies. Sources telling us here at Bloomberg the company is still planning an IPO later this year. The offering could raise as much as $50 billion in what would be the biggest initial share sale to date. Former President Bill Clinton and his wife, former Secretary of State Hillary Clinton, will appear before a congressional committee investigating Jeffrey Epstein. The House Oversight Committee had planned a full House vote to hold the Clintons in criminal contempt if they continued defying subpoenas. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next, the morning calls, plus Jay Goldberg of Seaport Global looking ahead to a big week of big tech earnings from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
NVIDIA continues to have the best ecosystem out there, whether it be the hardware they produce or whether it be their software ecosystem. You've got OpenAI making commitments with everybody here over the last 6 to 9 months. And in reality, it doesn't matter necessarily to NVIDIA who wins this game at the customer level, but they want to be involved, I think, across the board.
That was Angela Zeno of CFRA from New York City. Welcome to the programme. Your scores look like this. Futures positive by 0.25% on the S&P, and the Nasdaq 100 up by 0.5. That's your price action. Here are your morning calls. First up, Citi, upgrading JetBlue to neutral, seeing upside risk for the shares. That stock is up by 2%. Your second call from Baird, upgrading Palantir to outperform following earnings. The firm saying Palantir's guidance implies further growth acceleration. And finally, Mizuho, raising its price target on Alphabet to 400 ahead of earnings. The firm seeing potential for the online advertising market to accelerate in 26. That stock is up by 1.2%. Let's turn back to one of our top stories today. Elon Musk consolidating his empire, combining SpaceX and XAI at a $1.25 trillion valuation. Bloomberg's Ed Ludlow has more for us. Good morning, Ed. What a valuation.
Yeah, the math is worth mathing on. My understanding is simply an all-stock transaction that values the SpaceX part at $1 trillion and the XAI part at $250 billion. And on a technical basis, XAI just becomes a subsidiary of SpaceX. There are lots of questions about the debt pile that SpaceX is taking on because XAI had a lot of debt. But, this, to the mind of like all the investors that I've spoken to, both sides of the table, is completely logical. It is a jump from SpaceX's prior valuation of $800 billion in the tender it did at the end of last year, a tender being a chance for employees to sell their own shares in an insider transaction, and a slight jump on XAI from the $230 billion on the equity raise they did in their Series E. But, the totality of it, the bigger picture is so much more than that. And are we still headed for that big IPO in June?
Well, Ed, that's the question for me. We got this big, staying private. What is the need to go public?
Yeah, I'm kind of teeing myself up a little bit, but my understanding is they are fully on track for that IPO later in the year. The big picture here, the reason why Elon Musk is doing this, XAI and SpaceX, is, frankly, Musk believes that on Earth, AI is constrained. It will break the grid. There is not enough energy and not enough space for the data centers. In space, there is literally enough energy from the sun and enough space to accommodate all of it. But the reason that the IPO has to go ahead is that the rationale was always to raise tens of billions of dollars to buy the GPUs. Whether your data center is a satellite form factor in orbit or it's here on Earth, that's the expensive part, the content relating to the accelerator. And that's what they know they need to do. It's just they're now doing it as this kind of wider vertically integrated company where SpaceX through Starship has a rocket capable of putting those satellites into orbit. XAI has the technical expertise to develop the models. And then I guess the next question that many still have is, where does Tesla fit into this?
You can answer that yourself if you want, Ed. No, we don't have any time. It's good to see you, buddy. Thank you, Ed. Thank you. Thank you very much. More from Ed a little bit later. Look out for Bloomberg Technology later on this morning. $1.25 trillion. Just think about that. Remember what we used to call a unicorn? billion-dollar company in the private market. Give me a break.
Now unicorn's $1 trillion, and that's just one part of this company, because SpaceX is $1 trillion, and then XAI is the next 250 billion.
Amazing.
Shocking.
Let's stick with tech. Another big week of earnings on deck, with AMD reporting after today's closing bell. Jay Goldberg of Seaport Global writing, as long as the big capex spenders keep up the pace, the market will likely look past the many obstacles ahead. Jay joins us now for more. Jay, what's the big obstacle for you and the team?
The list is long and getting longer. This is going to be a year of constraints across the landscape, right? The big one is TSMC capacity to actually manufacture all these chips. They're bumping up against their limits. We see disruptions in the grid and getting electricity and construction for data centers on time. The whole industry just feels constrained.
Raises a question, Jay. Has that been priced in? Because we've already seen a bit of skepticism being priced into the market. We haven't seen big tech reprise some of the highs that we saw from late last year. Even in the face of earnings that were pretty good, say, from Microsoft, the stocks sold off. I mean, is this appropriate or is there more to go?
Well, I'm a little bit downbeat, a little bit cautious about the AI spend. I think this year, everybody says there's sort of insatiable demand for AI. I'm not sure we're quite seeing that yet. I think there's a lot of open questions about that. And the Microsoft, Facebook, sort of those two companies reporting sort of demonstrated that. We saw Facebook have really good earnings and raise CapEx by a lot. Their stock is up. Microsoft raises CapEx by a smaller amount, but their numbers aren't quite as good. They're not seeing those returns from their AI investment, and their stock gets punished. I think investors are rightly starting to question how good the AI spend is for companies' earnings. And I think it's still an important open question. I think we're gonna hear a lot more of that as we move through the year.
Is that a fault of these companies and how they're spending the money, or is it fault of any single industrial build out in history where there needs to be some good money thrown after bad to build things in excess maybe of what they will be needed down the line in order to have the innovation that some of these technologies will create?
I think that's a fair assessment. Right? There is going to be some waste, some risk. It's by definition, risk means some of it won't pay off. What concerns me here is the extent to which we're adding debt on top of all this. We have a lot of companies adding debt to, we're not just investing out of free cash flow. Oracle, Facebook, others are taking on debt or debt equivalents. And that's always the point in the bubble when things get both really, really crazy, but also scary. Right. I think we're going to see a lot of that sort of debt-fueled growth flow into numbers this year. That's why we're bumping up against constraints. But when the downturn comes, and for me, semis are cyclical, there will be a downturn. At that point, the pain is amplified by that debt.
You asked this question in your note about which companies are going to potentially miss this quarter because of these constraints, because they didn't get the necessary components they need. Which companies do you think potentially could be those companies that missed this quarter because of those constraints?
I mean, it's a theme I'm hearing for all the companies I'm talking to, right? You started TSMC reported 2 weeks ago. They're having constraints. I mean, they're the monopoly, but they're having constraints. I think we're going to see that in a lot of the chip guys, a lot of the chip designers. They're not going to be able to get the capacity they want from TSMC, so that's going to be their constraint. I think that's going to be true for all of them. I think that's the big limiter on NVIDIA's growth this year is going to be how much capacity they can get out of TSMC's packaging facilities. Right, and then you talk to the AI labs, and all they say is they want more and more compute, and they can't get the chips from NVIDIA because NVIDIA can't get the chips from TSMC in the quantities they want, and it just goes all the way up the chain.
Insatiable demand. Jay, appreciate your time. Jay Goldberg there of Seaport Global, some of the biggest companies on the planet, on a monster spending spree and determined to lever up and take the risk.
Because ultimately they're worried about being left behind if they don't take that risk, because others will eat their lunch. It's the reason why I'm actually really curious to see Amazon and Alphabet, especially because of cloud computing and what they deliver based on the fact that people were disappointed with how much Microsoft was able to expand their Azure platforms. I also think about the likes of Apple and how much it's going to cost for them to actually increase the spend on their chips because of all of this spending. I mean, it's going to have to get more expensive at some point for the rest of us.
Amazing how quickly we moved on from a $300 billion market cap move on a single day in Microsoft stock.
Yeah, nobody seems to care anymore.
Like it was like nothing.
Well, gold took over. Gold was like, here, watch my beer.
It's been a crazy week, hasn't it? Coming up next, we'll catch up with Yelena Schiller-Saver of the Conference Board, with consumer confidence sitting at the lowest level in more than a decade. Plus, Yahara has your morning movers. Pfizer falling, down by about 4 to 5%.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The opening about 60 minutes away. The scores look like this. Equity futures on the S&P still positive for the session. We have been for the whole session so far. Up by 0.25% on the S&P 500. Up by 0.5 on the Nasdaq. With your morning movers, let's cross over to Yahara for more. Hey, Yahara.
Hi, John. We start with PayPal shares plunging even harder now, down 17% on a wave of news this morning. Let's start with the earnings because they appear to be the main catalyst. They were pretty rough. Not only did they miss on both the top and bottom lines, the growth outlook also did not look good. So they have chosen to make a change at the top, now choosing Enrique Lores, the CEO of HP, to lead the company, replacing Alex Chris. HP shares not taking that news well, down 2.8% in the pre-market. Meanwhile, Pfizer shares also falling down more than 4.5% now in the pre-market after it released early data from one of its new obesity treatments as the company tries to expand beyond its COVID lineup. Patients in the trial lost 12% of their body weight in 28 weeks. Solid results, but Evercore analysts saying the results leave a bit more to be desired, citing the stiff competition from the likes of Novo and Eli Lilly, which are way out ahead. Pfizer also reporting earnings, and they did beat on both the top and bottom lines. And we end on AES, those shares continuing to gain momentum, up nearly 8% now in the pre-market on our scoop. That BlackRock Global Infrastructure Partners is teaming up with EQT on a potential takeover. This is a power company based in Arlington, Virginia, and they supply energy to the likes of Microsoft. That's it, John.
Yahara, thank you. Some of the movers in the pre-market from Yahara Anand there. A mover. Some movement from the Walt Disney Company. Let's get to it. A staff move at Ludlow, widely expected. It's official.
Yep. Josh D'Amaro, the parks chief, will be the next CEO of the Walt Disney Company. It's effective March 18th, 2026. That is when he will succeed Bob Iger. Bloomberg had reported that D'Amaro was the front runner back on the 1st of February. There's also a bit of shuffling with other executives here, John, that's worth discussing. Dana Walden is going to become president and chief creative officer of the Walt Disney Company. She was the co-lead of the entertainment business. And so it seems like she is given a broader portfolio while D'Amaro jumps from leading this parks business, which was undergoing a transformation, right? They were basically saying to D'Amaro in the interim, change the parks business, invest $60 billion, look at our investments elsewhere. But this, is expected insofar as that Disney, Bloomberg, had reported on it to be the case. And in about an hour's time, I'm going to speak to the chairman of Disney, James Gorman, and I think we'll learn a little bit more about why Josh D'Amaro was the right candidate versus those internally and externally.
Well, he's the man I want to talk about, Ed, and I'm looking forward to this conversation. And I don't want to be too personal about this, but just to state a fact. We're here because Bob Iger screwed up the succession planning and had to come back after selecting Bob Chapek. How important was it to get James Gorman involved in this process, a man who handled that process brilliantly at Morgan Stanley?
Yeah, so James Gorman took over the search in 2024, and it had been going on a little bit prior to that. It's a 3-year process. I remember being sat opposite Bob Chapek, the short-timed Disney CEO, back in May 2019 when they opened Star Wars Galaxy's Edge. And the idea was, when he was named CEO of Disney in February of 2020, he would take his experience of the parks and expanding IP, right? The Star Wars IP was absolutely critical. But by the end of 2020, he was no longer CEO, right? And it was well documented, some of the tensity and relationship between him and Bob Iger. I'm just going to say it for what it is, and I guess we'll pose the question. Josh D'Amaro jumping from Parks to lead the whole company is quite similar to the scenario of Mr. Chapek jumping from that unit to lead the company. And so, I'm very interested to hear why the internal candidates were best and what the options were externally as well.
And Ed, I do want to go back in time too. Why this company believed that the only man who could run this company was Bob Iger. How did this company get to that place?
Experienced operator. I mean, what's so interesting in the release that Disney have just put out, that they emphasized Josh D'Amaro is a 28-year veteran of this company and has held a multitude of roles. But with Mr. Iger's return, it was defaulting back to somebody that could handle the many tentacled beast, right? These different divisions, parks, cruises, entertainment, the restructure where they had the new business lines. It's difficult to run basically several different companies doing different things, particularly at a time, 2020, in the COVID era, where there was an intensity between the different streaming platform providers. That was really where they wanted to focus initially. Again, that's a great question to ask, right? Is that still the mainstay focus here, or is the parks business, the entertainment business, on parallel terms in terms of priority? Bob Iger understood how to run them all.
Ed, looking forward to the conversation in the next hour. Thank you, sir. Bloomberg's Ed Ludlow on the changes at the top of the Walt Disney Company. Leading those changes, James Gorman, the Walt Disney Company chairman, is going to be joining the programme in the next hour.
It's somebody who, as you were talking about, has had deep experience in terms of handing over the reins of a very big corporation, and that would be Morgan Stanley. Look, we just are now seeing the 9th CEO for Disney in its 102-year history at a time of incredible transformation. The question of how they're going to deal with intellectual property, how they're going to deal with technology, how they're going to deal with the international relations at a time where international visitors to Disney parks have come down. These are all some of the challenges that people are going to be looking for solutions from Josh D'Amaro.
The problem with Bob Iger, of course, was he was sticking around as chairman, and it felt like he didn't really want to give up the reins. And you basically had two almost co-CEOs running the company, even though one was supposed to give up the reins and move to the side. James Gorman is taking a different approach. He's really coming from the outside. It's not Bob Iger going out and picking his successor. It's James Gorman. And maybe that gives him a kind of fresh slate coming into this.
Look, maybe I'm too hypercritical about this situation, but succession planning is a core part of any CEO's job. You're a custodian of the company. You are not the founder. And it's your job to find someone who can run the company. If the company's too complex for anyone else to run it, you've also failed. And I think these are conversations you have to have. As a Disney shareholder, for anyone who's watched this play out over the last 10 years or so, you can't be too happy with some of the returns you've seen.
This is the reason why James Gorman was put in there, right? I mean, how much has this literally been the reason for his being there and what he's been focused on up until this point?
Let's return to the labour market and get away from this. We're looking forward to the conversation anyway at 9:30 Eastern Time. Let's turn to the labour market. The impact of the shutdown beginning to build, with Friday's payrolls already delayed. Mike McKee has more for us. Good morning, Mike.
Good morning, John. We also lost JOLTS today. Fortunately, you've got Elon Musk and AI and the Disney stories to fill in for the lack of economic data, which will only get worse on Friday because we don't get the jobs report either. Now, the question is, does this shutdown run longer and we lose some important data next week? Import prices, the ECI on Tuesday, and then Wednesday, the CPI. Those are in jeopardy because they are done by the Bureau of Labor Statistics, and it's labor that is not getting funded. We do have some good news for next week because private sector data and Commerce Department data do come out along with Census Bureau data. We get ADP and ISM services tomorrow, Michigan sentiment on Friday, and then we do get retail sales and existing homes next week. The question is, where do they fit in JOLTS and where do they fit in jobs? They could just move jobs to next Friday if this shutdown ends. We've got nothing of significance on Friday of next week.
Mike McKee, thank you. Hopefully we can sort this out. Hopefully we can get some data sometime soon. We've got some data from Yelena Shuletseva of the Conference Board. She writes this about consumer confidence. Confidence collapsed in January, hitting its lowest level since May 2014. Concerns worsened across all age groups, income levels and political affiliations. This wasn't a one-month fluke. Yelena joins us now for more. Yelena, good morning.
Good morning.
This one is really hard to internalise. Just the idea that consumer confidence is worse now than it was in the pandemic. Can you make sense of some of this for us?
And what makes it even worse is that it's a trend. It's just not 1 month thing, right? We have seen it declining for quite some time now. And that what makes it very legitimate, actually. So confidence right now is at the worst level since 10 years ago. But it was worse before. If you go back to the Great Recession, coming out of the Great Recession, that's how consumers felt at that time. So think about it this way. Now consumers are feeling actually that as bad as they were coming out of the Great Recession. So that tells you something.
So what does it tell you? Because a lot of people come on the show and they say ignore it, because frankly it has not been instructive to how the economy has done, and frankly how you've seen companies and even workers demonstrate their spending capacities.
Well, every bird likes its own nest, and kind of like I do believe in the data, just again, because it's a trend. It's not just a 1 month thing. So I think there's something to it. Consumers are worried about jobs, consumers are worried about affordability, and consumers are worried about their income levels. So this is very important because that actually coincides with what the actual data are telling us. If everybody was talking about how great GDP numbers were in Q3, but I looked at income data in the same exact BA report, and that data is telling me that disposable personal income in real terms, which is income essentially adjusted for inflation and taxes, that has been flat since Q3 of this year. So that is weakening, and that is the fuel for consumers to spend going forward.
Is this an economic issue or is this a political issue?
In terms of consumer confidence?
Yeah, and I ask this because ultimately, if you look at the averages, they're pretty good.
Mm-hmm.
But if you look at the politics, it's the affordability crisis that you're talking about, and certainly a lot of people are feeling every single day. So does this get represented in the overall economic data, or in terms of what policies are going to come out of Washington, D.C. to respond to some of these issues?
I think it's both. It's really about how unaffordable things are, and it's all about the economy, stupid, right? At the end of the day, it's about prices, it's about jobs. Consumers are not feeling confident about finding a job. So it is about the economy. I do think that political things and other disruptions are playing a role as well. Consumers do hear the news, and oftentimes, confidence and sentiment indicators reflect what is happening in the news. And there's like even some special indexes like news heard in the Michigan survey, right? So that is something to take into account.
Yelena, a lot of guests will come on and they're talking about the excitement of the tax rebate. Where do you see that money going?
I think, I'm very cautious about that because I think that people spend a lot of money during the holiday season, and they may have to return this money.
It's spent already.
It's already spent. You do see a significant pickup in credit card balances over the last several months, and that is the data coming from the New York Fed. And I think that given, the constraints in terms of income growth, in terms of the labor market, people will be cautious and will try to pay back some debt.
We've said it a few times on this show, energy bills in the Northeast are going to be insane over the next month.
Yeah, and it's not just because of the weather. It's also because of some of the other demands on it. I mean, yes, it's been really cold, and that's why I like to turn down the thermostat. At the same time, to save money on bills. This is going to be an increasing
Sound like
political
Jimmy Carter.
area.
But yeah, the electricity prices are going up.
You know what Bramo does? When Bramo comes to work, turns the thermostat down and the boys sit at home and put on extra layers. You know about this?
Let's be honest. They're under
and they're
blankets.
watching right now, so now they
It's
know.
fine. No, they're at school. I mean, honestly, it's better for your health to sleep in the cold.
They're watching. Turn the thermostat up, boys. Yelena, thank you.
Hey.
Yelena, thank you very much. Good to see you. Yelena Shuletseva there of the Conference Board. Let's give an update on stories worldwide with your Bloomberg brief. Is Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you.
Disney has named Josh D'Amaro as the entertainment giant's next CEO. D'Amaro will succeed longtime chief executive Bob Iger beginning March 18th, ending a 3-year search process. D'Amaro is a 28-year-old veteran at Disney and currently heads the company's parks division, which is by far its largest source of profit. PepsiCo is cutting prices by as much as 15% for its key brands, including Lay's and Doritos. The snack and beverage company is making the cuts this week ahead of Sunday's Super Bowl. Pepsi said it's keeping its package sizes the same and hopes more affordable products will help lift sales. President Donald Trump is calling on Republicans to nationalize voting in the United States ahead of this year's midterm elections. In a podcast interview with former FBI Director Dan Bongino, the president saying non-citizen voting is improperly influencing election outcomes. That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate the update. Up next, Chris Harvey of CIBC anticipating a Walsh-led Fed to favour Main Street over Wall Street. That's up next. This is Bloomberg.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
It is an environment where we are in a state of unprecedented flux and change, geopolitical makeovers, but the abiding concept when you look as an equity investor is that earnings are really going strong.
That was Julian Emmanuel of Evercore looking ahead to results from Alphabet tomorrow, Amazon the following day. Equities at the moment shaping up as follows going into the open and bound. Futures positive by 0.2% on the S&P. On the Nasdaq, up by close to 0.5. Turning to the economy, investors are awaiting a new regime of the Federal Reserve under Kevin Warsh. Chris Harvey of CIBC writing, expect Warsh to lean QE hawkish, Fed funds dovish, and Main Street over Wall Street. Chris joins us now for more. Chris, good morning.
Good morning.
Let's breathe some life into that particular quote. What does that mean for equities?
So what that means is for equities is I think it's okay, right? I think let's just go piece by piece. On QE, Warsh is out there saying, hey, he's not a big fan. But really, what is he going to do? Is he going to shrink the balance sheet? No. But what he's going to do is probably he's going to change the duration around. He's been out there saying duration should probably come down, should match issuance, so on and so forth. In addition to that, he's been saying, or the belief is that MBS doesn't belong there. Maybe they do something with MBS, but nothing radical, right? If we go over to Fed funds, right, if you're going to favor Wall Street over Main Street, who funds at the front of the curve? You have auto loans, you have HELOCs, you have small businesses, and so you will be much more aggressive, or probably be more aggressive at the front end of the curve, right? And we're going into midterm elections, right? He just got nominated. We believe he will be appointed. And the belief is we need to do something for the average person. And so that's not growing the balance sheet. That's not providing liquidity. That's really providing funding or relief at the front end of the curve.
Is that the kind of market that I want to be in cyclicals, in small caps?
Yeah, you do. But remember, this is probably not coming until June, maybe later. And so between now and then, that's a financial eternity. And one of the things that we've seen is small caps. We saw the January effect. I don't know if we really saw the rotation, because once earnings began, that January effect stopped. Small caps stopped outperforming. Risk stopped outperforming. And so I think what the market's saying is, yeah, there's some geopolitical risk, but maybe the fundamentals aren't strong enough. And the belief is if the Fed's not going to cut in the first half of the year, or not until the end of the first half of the year, we really have to think otherwise.
So what do you do in the meantime during this financial eternity where suddenly there's a question about whether Main Street gets some of the stimulus, and frankly, Wall Street is struggling with questions around artificial intelligence?
Right. So not to be too wonky, but one of the things we say, we want you to go up in quality, so higher quality companies, good balance sheets, good stewards of capital. In addition to that, we don't think it's the time to go bottom fishing, right? The chart can't look bad. The chart has to look good. Because a lot of these companies with positive price momentum, right, they do have better fundamentals. So we want to marry higher quality companies with companies that the market's already rewarding, be it no matter what sector you're looking at.
Is big tech still high quality at these valuations?
I think so. And I think one of the really interesting things is yesterday Oracle had a bond issuance. I think they had a convert issuance. That went quite well. Right, there's been a lot of concern about hyperscaler funding, and I think that put a lot of concerns and a lot of fears to rest.
Are you hopeful for the numbers we get from Alphabet and Amazon that this just continues?
I think the numbers in earnings season have been pretty good. The one thing I'm not seeing, and you still have a lot of idiosyncratic risk, right? But the one thing I'm not seeing is not seeing this acceleration, right? And if you need an acceleration in the economy, you need an acceleration in earnings to really go down to that secondary and tertiary bucket.
One thing we talked about is how much the tech trade has just changed.
Yeah.
Hardware versus software within Mag 7 as well. I'm not sure we can even talk about Mag 7 as a group of stocks.
No.
It just looks so different from Meta to Microsoft, and Apple has an O place in that group.
I don't know if it has no place, but you're right. The phrase that I hate, and the phrase a lot of people use coming into this year, is it's a stock picker's market. Every year, it's always a stock picker's market. I don't understand that phrase, but I think it is applicable here. You do have, because idiosyncratic risk is getting bigger, you're later in the cycle, because the economy is not accelerating, because earnings are not accelerating, you really need a good idiosyncratic or stock-specific story.
Can I just pick up on that phrase,
Yeah.
later in the cycle?
Yeah.
Late cycle or later in the cycle?
I think it's later in the cycle. So credit spreads, and you probably have seen this, hit a low we haven't seen since Astor Watch jeans were in favor, right, since 1997. The amount of issuance that we're seeing is really rather significant. These are the things you see later in the cycle. Right? Do I think the cycle will continue? I do think the cycle will continue, because I do think there's a lot of accommodation in the system, and I don't think the monetary policy accommodation is done.
So what kind of returns are you expecting this year? We've seen some projections for 7,800, 8,000. Right. This idea that you can have AI continue to fuel this, even amid some of the wobbles that we've seen recently. Do you think that that's fair, or do you think that it's going to be more of a churn to year end?
I think so. Our expectations for high single digits, it's 74.50, right? Last year we were much more aggressive, and what we think is by the end of the year you're going to start looking to 27, and now you're going to start looking at a situation where it's beginning to decelerate. That said, with so much accommodation on the table, and with the Trump administration pushing things in front of midterms, we could have a little bit of a melt up or a pop summertime, fall, I think.
So this is sort of the bipolar aspect of a lot of the conversations we have. Some people say because of the midterm elections, you're going to get a melt up. Other people say you could get a meltdown in certain names. I'm thinking in particular of artificial intelligence related energy types of projects, especially with the affordability crisis and how much you could crack down. There's been questions around the banks trade and what we've seen there. How do you pair these two ideas?
So what we're saying is, I think in the first half, right, you're going to have bouts of risk aversion. We've already seen a couple bouts of risk aversion, not excessive. That's going to continue. I think people are really coming into the year underappreciated the macro and some of the macro concerns. Underlying fundamentals are still good. We would buy any sort of 5% plus pullback. I think we do get some of that, right, because expectations are so high. But at the end of the day, we think equities do go higher later in the year, and there is a possibility for a sharp pop higher sometime, maybe in the summertime, maybe in the fall.
What are you thinking of in terms of the summertime? A fiscal impulse from this administration? I just don't see what they can actually get through.
So it's a couple things. One, the deregulation, right? We've seen the change on multiples, but the E is going to start to fill in. And I think the economy, even though it's not accelerating, it's still pretty good. M&A activity, when you have credit spreads and the cost of funding this cheap, you're going to have a lot more M&A. We haven't even talked about IPOs and things of that nature. We see what's happening in the metal space. The momentum factor in the market is quite strong, and if it comes back, swings back to equities, it can really change prices very quickly.
We could see some massive IPOs in the next 12 months. The biggest IPOs we've ever seen. SpaceX could be one. That combination, $1.25 trillion. Just think about the fact that we just managed to build, Elon Musk and his team built this, but ultimately financial markets contributed to it. We just managed to build a $1.25 trillion company in private markets. That, 10, 15, 20 years ago, unthinkable, absolutely unthinkable.
What's even more unthinkable is it's not the only one. What kind of valuation is OpenAI going to have when they potentially IPO? And then will it be the justification for some of these private market valuations, or will it be maybe a bit of a rebuttal when they actually have to face the music and do an initial public offering? A lot of people wondering what the pricing will be like.
Chris, it's good to see you.
It's good to see you,
Thanks
too.
for being here. Thank you, sir. Lots to think about. Chris Harvey of CIBC. Coming up tomorrow, here's the lineup for you. Chris Ferrone of Strategas, Libby Cantrell of PIMCO, Gene Soroka of the Port of Los Angeles, Michelle Weaver of Morgan Stanley, and a whole lot more. Your equity market on the S&P 500 just about positive this morning, up by 0.2%. Succession planning in full force at the Walt Disney Company. Look out, James Gorman, the chairman of the Walt Disney Company, speaking to Ed Ludlow about 35 minutes from now. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content, and never the two shall meet. But there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction, might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. When I started to realize what was happening, it was 12 years, and we haven't done it.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg. 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, a cosmic reward. Palantir's blockbuster results help reignite a rally in stocks.
And it's official. Elon Musk merges SpaceX and xAI in a deal that values the combo at $1.25 trillion.
That's even more cosmic. Big news from the House of Mouse. Disney names its next CEO.
Also cosmic? I don't know. I like that as an adjective. I'm into it. I'm just going to start calling every deal, every CEO announcement.
Get into it,
yeah, I like it. Anyway, I've got to check on Disney shares this morning off the back of that announcement. They're up 1.25%. It tapped into something that we thought might be coming. They've tapped their Parks and Cruise unit head, Josh D'Amaro, as CEO, succeeding Bob Iger. D'Amaro, a 28-year-old veteran of the company, he will take over on March 18th.
Yeah, I'm looking forward to seeing what he can do there. Palantir, this has been an incredible story. Earnings and revenue forecasts significantly topped the already punchy expectations as it strengthens ties to the Trump administration to help carry out military and immigration efforts. You can see the shares already very highly valued indeed, up another 11% in today's trade, Danny.
Matt, let's start with those movers, and specifically Disney. Here to discuss is Bloomberg Tech's Ed Ludlow. I gotta say, Ed, the feeling of having the head of the parks now becoming the CEO makes Disney feel a little bit less techy these days.
Yeah, but the parks is so core to the bottom line. It's been a huge focus of Josh D'Amaro to embark on a $60 billion transformation. And one thing I'd say, just looking at the share reaction to this confirmation that Josh D'Amaro will succeed Bob Iger as CEO at Disney effective March 18th, 2026, it's not far away, is that Bloomberg reported this on February 1st. Right, and it seems that within those 4 internal candidates, Josh D'Amaro has been the board's front runner. And just looking at the language of the statement that the board put out, the decision was unanimous. And in it, Mr. James Gorman, chairman of the board of Disney, says that Josh D'Amaro possesses a rare combination of inspiring leadership and innovation. There's a lot of questions, right, about, well, what else apart from the parks? And so within that news is the item that Dana Wollman gets promoted essentially to be president and chief creative officer, but report into Josh D'Amaro, who also joins the board. And so the division of duties across parks and then entertainment streaming, that's going to be really interesting.
It's interesting because streaming is still growing faster than the parks business, right? I know the parks business makes up a massive chunk of profits, like 60%, but it won't be the biggest share of the money Disney makes for much longer.
Yeah, and I think about the environment that we're in right now with potentially Netflix, Warner Brothers Discovery, or Paramount Skydance, Warner Brothers Discovery. On the earnings call, you know, in the last 48 hours, a lot of that focus was Josh D'Amaro talking. But, you know, they are clearly conscious of what the changing landscape looks like. And, you know, back in 2020, when Mr. Chapek took on the role, had formerly been Parks chief, it was the same thing in that COVID era where there was a huge battle to gain streaming subscribers. So I'm very interested to hear Mr. Gorman's thoughts in 30 minutes' time about why Josh's background as the Parks chief is the best for Disney in its entirety.
All right, looking forward to that interview. Ed Ludlow of Bloomberg Tech is going to speak with Disney's chairman, James Gorman, at the Open. So stay tuned with us at 9:30. That interview kicks off. Now, Palantir's revenue forecast for the year is $7.2 billion. And that tops Wall Street estimates by nearly $1 billion. Bloomberg Tech's Caroline Hyde is at the desk with us to talk about this big beat, really, for a company that's already very highly valued, but I guess showing its worth.
90 times future revenue is where it currently trades, more than 140 times future earnings. This is why you might see the odd price target actually getting pulled down by certain analysts today. But in general, a smashing beat. And actually, stock has been under pressure really leading into these numbers. So we did see a bounce in the pre-market. We're still currently trading high. We could wipe out a lot of this year's losses, which to the tune of 17% already year to date, and we've only just done January. But we had been questioning whether this was really the AI performer or whether it was getting mixed up in the rest of the software names, which have been performing dismally. But clearly, many analysts are thinking Palantir is just in its own league when it comes to actually understanding your data, using your data, and making sure that you can make the right decisions, whether it's commercially, where they've grown the business more than double in the previous quarter in the US, or whether it's from a government perspective, and more broadly, the United States, they're just seeing 90% growth. You can't question that for many, and no wonder we're therefore seeing a lot of analysts saying this looks pretty stellar all round.
By the way, I should point out that it was the CEO, Alex Karp, who described their revenue as a cosmic reward. It wasn't just Matt and I turning a new phrase.
He loves it gaming. Deng Xiaoping, I hope you're going to start citing his legacy as well, as that was also in the earnings.
I mean, Karp always has something colorful to say. But one of the things I was interested, he also went on to talk about, is that this is a company that does feel like it's facing some backlash for its involvement in the U.S. Government's immigration efforts. He said that they cast their software systems as capable of preventing an unconstitutional intrusion into the private lives of citizens by the state. How is Palantir handling some of the political baggage that might come with some of their work?
This political baggage has gone on for years, and he has always been saying that they very much deepen themselves within their moral code, that they feel as though they should be pushing forward Western ideals, and they will work with Western governments, and particularly the United States. Now, he says these sort of internal conversations aren't always easy, and there's a lot of debate, but particularly when it comes to their work with ICE. Look, they use a Palantir app called Elite at ICE at the moment, and that is a way of understanding who's overstayed their visas, what their addresses are, and no wonder that this is getting very politicized at this moment. There are a lot of internal conversations that they have to have with those that work with them, but thus far they have stayed steadfast to focusing on the government, and actually that's where their roots are. You know, this company wasn't Alex Karp's, but also with Peter Thiel, who has very close relationships with the US government, and we're seeing actually, of late, a huge sentiment shift. Think how Google's internal conversations have changed in recent years about serving different governments worldwide with their software. Palantir has been steadfast that they always will, and look at the amount of money that's been going into defense tech more broadly. But yes, this is particularly heated at this particular moment. No one really knows what they mean by saying capable of preventing an unconstitutional intrusion into private lives. we need more information about that.
That is for certain. Hey, Caroline, really looking forward to your show today. Caroline Hyde, who, of course, will be her and Ed Ludlow at 11 a.m. Lots of news to go through. By the way, another huge Bloomberg scoop confirmed now that SpaceX is taking over xAI to create a combined company valued at $1.25 trillion. Bloomberg's Lauren Grush broke the story with Ed Ludlow and joins us now. Lauren, first of all, amazing reporting. Now we have the confirmation. What are the details about why Elon Musk is bringing two of his companies together?
Yeah, so I really think that Elon was laying the groundwork for this late last year. And if there's anything I've learned in my time covering SpaceX is that this company and Elon move fast when they have an idea. So he's been talking very openly about this grand vision of putting data centers into space for doing complex computing for artificial intelligence. And so I think he's been really kind of setting the stage for this merger ever since then. And so the idea is that, you know, SpaceX will be the tool that creates these data centers, and then xAI will be the customer that then benefits from those data centers and the computations that they do.
So what's the point of this merger, if you will, Lauren? I hate that term historically, but I guess since it's all under Musk, we can say it's a tie-up. It's always exciting to hear Elon Musk forecast things that are going to happen in the next couple of years, and then they take 5 to 10. But what are those current forecasts?
Right. So as of now, there are still plans to IPO the entire company later this year. Obviously, we are keeping an eye on that, and it also remains to be seen. But I also want to say that a lot of this relies on some very ambitious technology that Elon has been proposing, right? These data centers in space, they sound very good. SpaceX recently filed an FCC application in order to launch 1 million satellites for that purpose. But again, that's a lot of satellites, and there's a lot of technology that they will need to mature in order for these things to actually be viable. So that's going to take some time. And Elon, has given a very rosy schedule for when those will be ready. Obviously, I would add a few years to that, if not more. And then, of course, a lot of this relies on their Starship vehicle being ready, and that vehicle is still under development and has some time to go through in order to be an operational launch system. So, but that's what Elon and SpaceX do. They set these very ambitious goals. Typically, they meet them, but just not on the schedule that they normally set them for.
Yeah, that seems to be a very common theme among all of Elon Musk's businesses. Lauren, excellent reporting. We're looking forward to following this saga with you. Lauren Grush. And by the way, this will probably, just maybe, featured on tomorrow's debut of Bloomberg Deals.
That kicks off tomorrow?
It does. In case you haven't heard, we're going to be tracking all the major deals, the power players, the major moves, capital flows, shaping global markets. Catch it Wednesday, February 4th at 12 p.m. New York time, which, yes, is tomorrow.
I'm looking forward. I'll set my DVR and watch live.
I was going to say, Matt,
I'm going to do both.
You don't watch it live.
I want to just keep it. For posterity's sake, Danny, really looking forward to that deal show. And every week, we'll get everything we need to know on M&A. Let's take a look at what's going on in futures right now. In terms of the stock market picture, S&P futures are up just 0.1% now. So not feeling the kind of momentum we saw a little bit earlier in the pre-market session. NASDAQ futures still at 0.4%. Let's get a look at some of the individual movers on our radar, starting with PayPal. Quarterly earnings disappointed, and the company says CEO Alex Chriss will be replaced by HP, Hewlett-Packard's current leader, Enrique Lores, in March.
That must hurt. Like, you're named as the CEO, and then the shares plunge 17.5%.
Yes.
Probably not fun. Not fun to be that
but
person.
But at least you're starting at a low level, so and you can outperform.
It's a really good point. Also, we heard from Pfizer. They had sales estimates that beat. Demand for older drugs is helping to offset gaps from its declining COVID shot and pill franchises. They are facing a patent cliff, though. Shares are falling 4.5% this morning.
Pepsi says it will cut prices for top brands like Lay's potato chips and Doritos corn chips by up to 15% in a bid to lift sales because I guess consumers said they're too expensive.
Yeah, just in time for the Super Bowl. Coming up, HSBC's Max Kettner is going to share details of their investor survey and explain why Kevin Warsh's nomination changes little, at least for now, for his equity outlook. That's coming up next. Stay with us.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Let's get to high interest now. Look at what's making headlines around the world. NASA is pushing the proposed launch date for its Artemis 2 lunar mission back to at least March. The move comes after engineers found a hydrogen leak during a major fueling test, with the delay allowing the agency to review data and conduct a second test. The mission aims to return astronauts to the vicinity of the moon for the first time since 1972. Data services stocks are falling after Anthropic released a new AI-powered tool for lawyers. Anthropic said the tool can automate legal work like contract reviewing, briefings, and templated responses. The move highlights broader concerns about threats posed by AI to businesses in the media and information industries, or rather maybe to the jobs in those industries. Gold and silver are rebounding after an historic collapse from all-time highs. Precious metals surged at the start of the year on speculative momentum and diversification needs, geopolitical uncertainty, and concern about Fed independence. The rally came to an abrupt halt last week after warnings that the advances had been too large and too swift. But we're seeing a little bit of a recovery now. Danny, I heard someone forecast on Bloomberg Radio this morning $5,500 an ounce again.
I guess if you loved gold at 5,000, you'd love it under 5,000. So why not buy the dip? Equities are rebounding alongside of it, but we have had days of volatility. There was the Fed chair pick, that metals boom and bust, concern over AI deals and overspending. Evercore's Julian Emanuel says that earnings are not a concern for the stock market.
It is an environment where we are in a state of unprecedented flux and change, geopolitical makeovers, but the abiding concept when you look as an equity investor is that earnings are really going strong.
Let's bring in HSBC's chief multi-asset strategist, Max Kettner. Max, always such a joy to see you. And I know that you've got a very constructive outlook for this year. I'm sure you agree with Mr. Emanuel that earnings look strong, but kind of these sideshows we're seeing, be it the politics, be it metals, be it elsewhere, do they have the potential to derail any rally we might get?
Maybe, over the very short term. So maybe that is the sort of stuff that keeps people on their toes over a day or two. But actually, when we look at it, not even over just 3 or 6 months, but even within a month, what it really does, those kind of sideshows, whether it's geopolitics or whether it's what we've just heard, this unprecedented flux, these daily ins and outs of politics, what it really does is it actually keeps positioning capped. So one of the concerns that we had at the start of this year was that sentiment and positioning in our framework got quite a bit stretched. So we did have at the start of this year, after the run-up in November and December, we did have a bit of a sell signal more broadly in terms of risk on and risk off. So for the likes of high yield equities and so on, we did start to get a sell signal. That has now all but disappeared in the wake of those geopolitical events around Venezuela and Greenland and Iran, and now obviously also those gold and Bitcoin sell-offs. So what it really does, it does help bringing down sentiment and positioning, and that, of course, over then a bit of a longer time period. I'm not saying a day or two, I'm just saying a month or 2 months, is really bullish. It takes that excess positioning, it takes that froth away, and that opens up really the space to focus once again on what's important, on the earnings numbers, on the growth numbers, on the earnings revisions, the expectations, and those continue to be really strong.
Yeah, I note Nicole Inouye has a forecast for $300 on S&P earnings for 2026, which is not among the highest or even the median levels there. Is there, you think, room for that forecast?
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.
Especially for the labor market where we have a lot of touch points. Obviously, the PMI yesterday was much stronger.
Conversation. This is Bloomberg Surveillance.
Well, welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
All right, a check on your equity market this morning. We're doing decently well, if we ever see it. We're up, I believe, like actually, we've taken some of the gains back. We're basically flat on the S&P. NASDAQ turns negative. It's down 0.2%. Russell 2000, a big outperformance, though, up 0.7%. Let's look at some of the top calls, the analyst action we are watching. First up, BNP Paribas. They downgrade ExxonMobil to a rare underperform rating. They cite valuation concerns following the company's earnings report last week. Those shares, though, are up 1.4%. Citi, they upgrade JetBlue to neutral, seeing upside risk for the shares as the airline maintains strategic optionality. Shares are up almost 6.5%. Finally, Northland upgrades Palantir to outperform. They point to the company's, quote, extravagant fourth quarter results, something that Alex Karp called cosmic returns, cosmic performance, something cosmic.
Cosmic payback, maybe?
Yeah, yes.
I think his thing, cosmic reward. His
yes.
thing is that he wants to spite all the short sellers. Like his greatest enjoyment in life is retribution, which I appreciate. It's dramatic. I do want to point out, Danny, that yes. I believe we have achieved, at least on the S&P momentarily, a new intraday high, all-time high. So at one point, the S&P was as high as 69.93, and that is the highest that we've ever been.
Although get to 7,000.
Yeah, we're. Wait, did we make it to 7,000? We did. We did push through that at one point, didn't we?
Yes, last week.
Okay, so I'm wrong. Forget it. I'm looking at my HCPI.
I think it's on a closing basis,
function.
probably that was a high.
It would be if we closed at that level. But yeah, you're right. 7,002 we achieved on January 28th. Forget I said that. PayPal posted profit and revenue that fell short of expectations. The company also announced that CEO Alex Chriss will be replaced by HP CEO Enrique Loras. Joining us now is Bloomberg's Paige Smith. She covers consumer finance. So it's interesting that the shares dropped 18% in the early session. Is this because they're concerned about Enrique Loras? Or, I mean, do they expect the new CEO to throw everything out?
Well, PayPal has had a really interesting story, I would say, over the last couple of years. I think analysts have really closely watched the company for indication of some kind of a turnaround, whether it's in branded checkout in particular. That's been an area that has been very watched very closely. And, you know, PayPal has made some progress in components of its business like Venmo and BNPL, or buy now, pay later options. But I think that as the CFO, now interim CEO, Jamie Miller, said this morning, she made it very clear that there was a timeline that just hadn't been met, and the CEO, Alex Chriss, essentially didn't execute in a timely manner, and that resulted in Jamie Miller taking over as interim CEO, and Enrique Loras, the HP CEO, will step into the role permanently.
What do we know about Enrique Loras? I realize PayPal also had poor results, but man, it just sucks. You're announced as CEO, and then you're like, oh, shares are down 18% after that.
Significantly down, and I think that it is, we kind of joke that PayPal shares, you have to watch them very closely around earnings, because even if it seems like over the past few quarters there were instances where there were beats in core components of the business and shares plummeted soon after earnings were reported. But yes, Enrique Loras is coming over to PayPal from after a long run at HP, so we'll have to see how he fares. But I will say, our focus has been on PayPal primarily at the moment.
The stock, I mean, I don't know if we pulled up a 5-year chart. It's down 83% over the past 5 years, and it's no surprise. It's like the MySpace of payment methods, because obviously Venmo is first and foremost, but you've got new competitors like Apple Pay, you've got bank competitors like Zelle. I mean, there was a time when PayPal was inextricably linked to eBay, but that time is long gone. So what's their edge now? What's their unique selling point?
Well, so you did mention Venmo, and Venmo is a major business for PayPal, but I think you also hit on a point there that was, a lot of consumers know and love Venmo very well, but it is, it was a long period of time of Venmo just sort of sitting consistently and not really innovating significantly. And then, Alex Chriss stepped into the role a bit over 2 years ago and, really tried to lean in to monetize that business. And we have seen progress there. But kind of as you mentioned, there were, we have not seen the amount of growth, or rather the board certainly didn't see the amount of growth in PayPal branded checkout that was sort of like the best known, used to be the best known business of PayPal, and unfortunately that growth just hasn't been as significant as they wanted it.
I guess a long road ahead for the new CEO of PayPal. Paige, thank you so much for joining us. Paige Smith, there on the latest of PayPal as shares sink 18%. More on these markets coming up. You are watching Open Interest.
up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what stocks are doing right now. Actually coming down on the S&P and on the NASDAQ after a morning of pre-market moves to the upside driven by Palantir's gains after knockout outlook and a rebound in the metals trade. We're sliding lower again, 69.70 on the S&P after reaching 69.93 at one point on the upside. NVIDIA down 1 2/3% right now. Palantir still gaining 5%. Actually, Eric, swing back over here and look at gold, gaining 5 2/3% right now. Gold at 49.26. We are going to be coming back with a lot more news on these markets, a lot more news on the industry breakdown, as well as JP Morgan's Mira Pandit on AI disruption, Siemens Energy's CEO, and EQT's incoming chairman, along with Dan Zwirn.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. Sheriff's officials in Arizona are calling the disappearance of the mother of the Today Show Savannah Guthrie an abduction. They've also launched a homicide investigation. This man lives near 84-year-old Nancy Guthrie's home in Tucson.
It's a very safe neighborhood. This is highly unusual, and obviously we're very concerned about her.
Correspondent Andres Gutierrez is there.
This is a place where there are no street lights, and so there are acre lots here, and so there is some separation between neighbors. And so they're asking anyone to go through their home video cameras, see if there's anything that may have stood out between the hours of 1 a.m. and 4 a.m. Sunday.
Democrats are concerned after President Trump said he may try to interfere with this year's midterm elections. He made his comments on former Deputy FBI Director Dan Bongino's podcast.
We should take over the voting in at least 15 places. The Republicans ought to nationalize the voting.
Elections are run by states. Mr. Trump referenced Georgia, where the FBI recently raided a Fulton County election center. It's unclear what they were looking for. Survivors and family members have signed a statement blasting the Justice Department for revealing the names of Jeffrey Epstein's accusers in documents released last week. Among them, the brother of Virginia Giuffre, who died by suicide.
Sky Roberts told CBS Mornings.
What they're doing is straight and flat out illegal. They're redacting the names of perpetrators and they're unredacting the names of victims.
Virginia's sister-in-law Amanda says the DOJ needs to seek the truth.
We're talking about a case with over 1,000 victims.
And she said for anyone implicated, they need to ask,
what did you know?
Stacey Lynn, CBS News.
Fuel leaks are delaying the scheduled launch of NASA's moon rocket. Correspondent Michael Wallace has the update.
During a wet dress rehearsal countdown, NASA discovered a hydrogen fuel leak near the base of the Artemis 2 rocket. The space agency pushed this month's scheduled launch to next month at the earliest. Teams need to assess all the test data before setting a new launch date. The 4 astronauts who hope to take a 9-day flight around the moon will be released from their 2-week quarantine.
A member of one of the most successful 1970s rock bands has died. Three Dog Nights lead singer Chuck Negron had 3 #1 songs between 1969 and 1974. His publicist says Negron died at his home in Studio City, California, after battling COPD and heart failure. Chuck Negron was 83. This is CBS News. Ticket prices for the Super Bowl are falling.
The get-in price for the Super Bowl is now $4,399, down 28% from just over $6,000 last Thursday, according to the ticket marketplace TickPick. with nearly double the amount of purchases coming from Massachusetts, home of the Patriots, compared to Washington State, where the Seattle Seahawks call home. The average ticket price last year at Super Bowl 59 in New Orleans was just over $8,000, which was the cheapest ticket to the big game in the last 5 years. Steve Kathan, CBS News.
This should get people to blow lots of money on an arcade game. Dave & Buster's is placing 5 $15,000 3-carat diamond engagement rings in its viral human crane game for Valentine's Day. To play, customers are lowered into a pit of giant prizes, then grab whatever they can before they're lifted out. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well. So head over to YouTube and search Bloomberg Podcast, and that's where you'll find us. Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence programming. Coming up here, we're going to check in with Christian Bruch, Siemens Energy CEO. He's going to be in our studio here. Siemens Energy is to invest $1 billion in the U.S. to tap the power boom here. We'll get the strategy there. Caroline Hyde, BTech co-anchor. She's going to join us here. We'll talk about some of the things going on in the world of technology, including Palantir, big numbers, Disney, new CEO. That's all good there. Dryden Pence, Chief Investment Officer at Pence Wealth Management. We'll get his market outlook here. Ken Shea, Bloomberg Intelligence, Senior Consumer Products Analyst. PepsiCo reported some numbers today, some pretty good numbers. They're actually going to cut prices on some of their products. I can't remember when the last time I saw that for a consumer products company.
And not make them smaller either. Not
make
the bag
them smaller. Good point. You know what? You put a Pepsi, I'm a Coke guy, but you put a Pepsi in front of me, I'm just as happy.
You'll drink it.
But I'll tell you what, huge Doritos fan. That is my go-to. So I'm a big Pepsi
Put some protein powder on it. That's the next thing they're doing.
Oh, boy. So there's a lot coming up. That's the bottom line. We got a lot of earnings, a lot of news, and then just the news flow of the day. Let's kick everything off here with John Tucker and the Bloomberg Business Flash.
Oh, I'm sorry.
There you go.
Sorry. This Bloomberg Business Flash brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. Right now, the major stock averages kind of mixed. S&P 500 down 32 points. The Dow up 56 points right now, and the tech-heavy NASDAQ 241 points lower. It's the software shares among the biggest drags right now. You have Microsoft down 1.8%. And yes, another member of the trillion-dollar club, Walmart shares up 1%, pushing its market cap to that milestone. And then a quick look at Disney shares, down 1.5%. Josh DeMauro will succeed Bob Iger as the CEO there. Meantime, Victoria Fernandez at Crossbuy Global says the market bulls may have to temper their expectations.
We want to be in this market. We want to be invested because we think we will have positive returns. But in our opinion, you're looking at much lower returns than what you've seen over the last couple of years.
And Netflix plans to host what could be the largest live K-pop event to date with the return of BTS to the stage. I have no idea what this means. This is the Comeback Live concert. It's going to stream March 21st, a day after the group releases its new album. And let me tell you, I can't wait. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg.
So at the halftime for the Super Bowl, you're all in Bad Bunny, right?
Mr. Bunny, yeah. Love him. Love that.
Right, there you go.
He's the artist of the, when is he now? The artist of the year or the best?
Yeah, he just won the album of the year last year? Yeah.
And
right,
also, I'm told a huge fan of Doritos. So.
Huge Dorito fan. So we got it all covered here. John Tucker, thank you so much. We appreciate that.
He's so of the moment.
Yeah, absolutely. He's zeitgeist. He's
I
right
only
in
took
it.
this from upstairs as a prop, but I have eaten the entire bag in the process.
That's what happens with Doritos. That's why they're so good. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John was mentioning, red and green on the screen out there, kids. But let's take a look at some of the stocks that are on the move today. We can do that with Bloomberg's Bailey Lifshultz. Bailey, what are you looking at today?
Let's start with the stock that everyone's talking about, although the move is not as dramatic as some in the market. I'm talking about Walt Disney Company, ticker DIS, right now down about 1.5%. This does come after the company finally unveils their successor to Bob Iger, Josh Tomorrow, a 3-year search.
No, dude, this is a 10, 12-year search.
The funny thing is
we
that
first started this like 12 years ago.
I love how it's like the view and like how it's being reported is like this time though they got their guy. Like sure in the past they kind of botched naming a different Bob to lead the company, but this one makes sense. Tomorrow, 28-year vet of the company, succeeding Iger effective March 18th, does lead the experiences division, biggest generator of profit, but also an area that's fallen under some pressure. Everything going on geopolitically. Overseas consumers not flying to America to go to our parks.
But Paul, you said that might just be lowering the bar for the new CEO.
Maybe, I think so.
To make things a little bit, clean slate for the new guy.
Yeah, we'll see. But I mean, he's, it's the interesting thing. I read the 8K that talked about this new hire. Most important thing I read in there is Bob Iger, who everybody loves. Every shareholder loves Bob Iger, but it's time to move on, and he will leave December year-end this year.
He's not going to lurk
it's in the contract.
shadows.
No, there's no chairman, none of this. He'll be out, and so that's going to be clean.
Yeah, want to also pivot to a stock that is rallying this morning. That is Teradyne, ticker TER. This is a company that makes semiconductor testing. They also do have a robotics arm. The stock right now up more than 8%, trading at a record high. On the trailing 12 months, the 10th best performer in the S&P 500, up 140%. So alongside the likes of the Intels and Lam Researches of the world. This comes after earnings beat expectations. Again, everyone wants to get exposure to AI, whether that's from the picks and shovels or actually just given that you can't invest in the LLMs publicly right now. So Teradyne, a key beneficiary of that.
All right, let's go Palantir, ripping it today.
Yeah, ripping today, up 6.5%. Was up pretty much double that. So biggest move right now on an intraday basis since late November, beating expectations. This is continuing to be one of the few companies in the software space, AI software space, that is benefiting from the kind of uncertainty around everything with Claude and some of these LLMs. So beating expectations. CEO Alex Karp talking about the financial results even exceeding their most ambitious expectations. Pretty strong growth. You look at the analyst on the sell side really pounding the table, saying this is another example that this is a juggernaut company that will remain here to stay for quite some time.
All right, good stuff. Bailey Lifshultz, thank you so much. Bailey Lifshultz covers IPOs for us along with other market news. He's our senior equities reporter here. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Deal making is in full force in 2026, Paul. Yep. I mean, it's just happening, and there's very little to stop it. We know that this administration is pro deals, and we're certainly seeing that take place right now. One of the latest investments we can tell you about is Siemens Energy investing $1 billion in the U.S. to tap this power boom. And we're pleased to welcome Christian Bruch. He is the CEO of Siemens Energy, and he is here with us in studio. Good to see you.
Thank you very much for having me. It's a pleasure.
So tell us a little bit about the thinking here. What is the goal by investing $1 billion in manufacturing capacity in the U.S. over the next 2 years?
Yeah, thanks for the question. First of all, obviously, it's a goal to keep up with the fantastic growth which we see currently in the electricity market. And, gas turbines, grid, making sure that the AI transformation can really be fueled with electricity is one of the hottest markets you can see globally at the moment. And we are obviously trying to keep up with our customers, and we're trying to bring all this equipment what is needed, gas turbine, transformers and the likes. This means we are expanding a lot of our industrial footprint here. We are hiring people, adding factories to keep up with that. And this is obviously one important step really to create also this energy dominance, what the US is looking for.
You recently met with President Trump. What was the takeaway from your meeting there? How related is that meeting to your announcement in the investments in the U.S.?
Well, there was a, let's say, reception in Davos, right, which was a big group meeting. So what for me is important that the Trump administration is very approachable for us. And I have to say, I'm very grateful for that. At the moment, my key interactions is really with the secretaries in terms of really understanding, hey, what needs to be done? How do we need looking forward on the opportunities? And this is taken up excellently. At the moment, that is my main interaction also with the Trump administration.
We do have some breaking news. I'm just going to bring everyone the headline. It's called a redhead here at Bloomberg. Major builders are said to consider a plan for 1 million so-called Trump homes. And without knowing a whole lot more, we know that in context, the president has been pushing this affordability idea to make homes, to make cost of living more affordable for Americans in this crucial midterm election year.
Also, red headline, the U.S. plans to issue licenses for companies to pump Venezuelan oil. So the news continues to come
You
here.
have to fix a lot of things first, though.
Exactly. Christian, how would you characterize the U.S. energy grid here as you get set to increase your investment here?
Yeah, I mean, first of all, what you see, the US market on the grid side is influenced by two things. The one thing is that you have a massive investment wave ongoing just for replacement, refurbishment of existing facilities. This is very much a utility-driven business, which is very active, which sometimes gets overlooked, seeing the data center discussion. And at the same time, you obviously have an unprecedented growth in electricity on the data center side, which does require heavy investments into the grid side as well. And we need to understand also how do we operate all the things? I mean, everybody easily talks about gigawatts of additional electricity. There's not so many sites today in the US which like a 1 gigawatt type of consumption. This will require grid stabilization. And this is what we are trying to contribute. So what we are doing here is building factories for switchgear, transformers, components which supply to that industry, and obviously also bringing up people who can help to do this overarching design on the grid side. We believe that is let's say, really a long run, and we will see it for a long time because electricity grid is an important backbone of the critical infrastructure. And this is why I feel very comfortable with the investment we're doing, and I'm very happy with the market here.
So I want to pick up on where you just left off, bring in more people to design some of the grid work there. Talk to us about jobs. How many jobs will your initiatives create? What kinds of jobs are they going to be? What level, what kind of education is needed? How much training will there be in order for you to find the right people for those jobs?
Yeah, right. I mean, we had today an organization with around 12,000 people in the US, right? And we're going to add another 1,500 on top of that. And this will be accompanied by a lot of education and training programs. A lot of this will be blue-collar working jobs also in the factories, making sure that we can produce, and also that we have people going out in the fields and fixing things. So this will go through training academies, which we build up in parallel in this. We have one big new facility coming up in Jackson, Mississippi, which will obviously also will be with one training center. We have a big site in Charlotte, which we also will increase on that. At the same time, building up factories is also then coming with some engineering work on the white collar side. So it will be both. But the big thing, and this is why we went out, is really, hey, this is I would call it a blue collar wave now, really, in terms of really getting educated workers. That is my biggest constraint at the moment also in the market. And it goes down to the construction workers, really people in the factories. And we should never, ever underestimate the need to finally get something done. And that will require more people, more skilled labor. And we will definitely contribute to that and to help to build up that workforce.
Christian, thank you so much. Really appreciate it.
Thank
Christian
you.
Brew, CEO, Siemens Energy. That is a publicly traded company on the German exchange here. ENR, is the ticker. Joining us here in our Bloomberg Interactive Broker Studio. Again, Siemens Energy to invest $1 billion in the U.S. More coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major averages, they are mixed, with the Dow Jones Industrial Average up 64 points. The NASDAQ Composite Index 200 at 15 points lower. The S&P 500 right now is down 37 points. That is a decline of 0.5%. Seeing something of a rotation right now. The smaller cap index, Russell 2000, that is higher right now, up 0.6%. Again, shares of Microsoft down 2%. And then you have PayPal Holdings, also one of the laggards in the S&P 500 right now. Those shares are down just about 1% right now. They said that CEO Enrique Lores will take the top job from Alex Chris. His turnaround plan failed to meet targets, also streamline the payments business. Shares, down 17%. It's a bit of a difference. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
JT, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. Boy, there's a lot of tech news out there today. Like it's every day, let's be honest. Come on. Caroline Hyde, she's on top of it. She's B-Tech co-anchor for Bloomberg News. She joins us live here in our Bloomberg Interactive Broker Studio. I'm sticking with this SpaceX XAI thing. Two monster companies. I know nothing about any of them because they don't disclose any real information. But I know they're Elon Musk, and I know there's talk about them merging. What's the story behind that? Why would Elon want to do that?
Well, the newer bet is that you're going to put data centers in space. And this is in theory why you need a vertically integrated AI and space and satellite company that is worth $1.25 trillion. So an extraordinary combination of Elon Musk, two of his very successful private companies. Now, there had, of course, been discussion as to whether or not we'd see XAI being consumed into Tesla. Maybe one day we have the enormous conglomerate. But for now, it's much easier to combine private companies. And investors have been excited about the idea that maybe if we could, break through a few more physical feats, we might be able to get data centers in space where far less property issues over there, far less, in general, issues on space in theory and in practice, but also the fact that you're close to the sun. All of this just means that you'll be able to have far more sophisticated data centers out there, and that is something that Elon Musk has been talking about over at Davos and much more. So you have the AI that can be, of course, deeply useful and wanted to be, XAI is basically digging in $1 billion a month in terms of how much it costs them. So they need to be able to spread the costs. They need to be able to talk about a vertically integrated business. And look, maybe AI and XAI's own learnings and powerful engineers and talent and technology will help speed up how quickly we get Starship up and running over at SpaceX as well, the real area of focus that they have to getting to Mars, the moon, etc. So there is, in theory, some sense to all of this.
And it's a $1.25 trillion valuation once we're talking about the combination of the two. Which company is more financially strong? Which one is providing the money? Okay.
Definitely.
Because it has contracts with the U.S. government.
Yeah, it's a money spinner. Starlink, don't get me even started. Satellite's a really strong growth area for them. And so really this has been a business that has been secure, has been well financed, has been the darling of the private venture capital area, and is also talked of doing a whopping IPO in the summer. And so you want to get this deal done ahead of that.
Do you think that I'm hearing about an IPO and the numbers are extraordinary. Yeah. Do we really think that's going to happen? Because I would think the amount of information they'd have to disclose to support that kind of valuation would be extraordinary. But that's the thinking, right?
And he's done it with Tesla.
Yeah,
and just think it's still one of the most expensive stocks out there in terms of where it trades. So I do think there is enough money that needs to become liquid and enough just sheer scale of money that needs to be coming from the public now. I mean, yes, these companies can stay private for longer and longer. Yes, it feels that there's just a never-ending lake of money from venture capital, but they really need to start tapping public markets.
I'm going to even see the traditional tech companies hitting the bond market like we've never seen before.
Everyone's looking for money right now, and Elon has come up with a creative way to do just that.
Well, we were talking to, I can't remember the show or the last show, the guy from JP Morgan. Oh, yeah, on surveillance, JP Morgan Asset Management. They're like, back up the truck. We were buying Oracle bonds, open market, new issuance?
So far, the demand has proven to be there, and that has, the question is, does that change going forward?
Right,
Because there's
right.
so much supply coming to market. Let's also quickly talk about Palantir.
Yeah.
Palantir, another darling of the whole AI trade. The shares are up about 6% after a stronger than expected sales outlook.
Yeah, and this is a huge relief to those in the software space. Look, today we're still seeing ServiceNow, Salesforce, Adobe getting smashed. So this isn't suddenly changing the whole viewpoint on whether or not SaaS is under pressure from generative AI. But what you can see is a clear AI winner, and many people are putting their views that this is what Palantir is. Their growth is extraordinary. The fact that you're seeing them guide to 70% growth for fiscal 2026 in terms of revenue, but can that vindicate a 90x where they trade on future revenue as well? Can it substantiate 140 times future earnings? At the moment, people are still buying back into Palantir because Alex Karp has shown and delivered significant growth, not just in government, not just in the area of the United States, but commercial as well. And we're seeing more than 100% growth in that particular area of the business as well. They do need to think about international growth speeding up a little bit. That was up about 22%, but they really feel at the moment that just the way in which they're able to use your data, focus it in, make sure that you're making the right decisions at the right time. Many people are wanting to get their hands on that sort of a software.
Yeah, Paul, I'm looking at the DES page for Palantir. PE 245, estimated PE 140.
Yep. They're earning the way into the multiple, as they say. Caroline Hyde, thanks so much. We appreciate that. As always, Caroline Hyde, BTech co-anchor for Bloomberg News, joining us live here in the studio. Looking at the markets here, red and green on the screen here today. The tech-heavy NASDAQ down 1% there, so we'll keep an eye on that. Next guest is Dryden Pence. He's the Chief Investment Officer at Pence Wealth Management. Dryden joins us here in our studio. Thanks very much for making the trip there, Dryden. 2025, great year.
It was.
Stocks, bonds, commodities. How are you setting up the conversation for 26 with your clients these days?
Well, we think there's really three big catalysts for 2026. It's going to be tax policy, it's going to be labor productivity, and it's going to be monetary policy. I mean, what people don't realize is that between the additional refunds that everybody's going to get because we withheld so much last year, plus the lower taxes in the great big beautiful bill, that's about $790 billion worth of additional stimulus coming into the market. And when you take that and you recognize that it was only 860 during COVID, we've got almost as much stimulus coming into the market this year as we did all those checks everybody got during COVID. And we know what happened after that. And so I think that we look at those fundamentals and we recognize that the economy is going to be pretty strong. Consumers are going to do pretty well. Companies are going to do pretty well. And you're beginning to see all of this stimulus working its way into the system. So we're very constructive for 2026.
There's also a lot of policy risk. I'm looking at the Home Builders Index right now, up 5.6%, with every member up at least 2%. This is after we had that headline saying the major builders are considering said to consider a plan for 1 million Trump homes. The president says something, and in this case, it's usually tied to addressing affordability concerns, and stocks move immediately. And it could be something like Trump homes. It could be something like capping interest rates on credit cards to 10% for a year. That is something that investors like you have to navigate around. How do you move through that? Because this kind of thing can pop up at any given day.
Well, I think that markets overreact a lot of times. I mean, like, do you know any irrational people? I mean, you can have irrational exuberance and irrational fear. But I think one of the things that's happened with this particular president is he tends to get what he wants. He tends to be able to pull it off. And at least until the midterms, you've got control of both houses of Congress. And so he's been successful in push. I mean, we just got a trade deal with India that people thought we would never get, right? So he's been successful. And so when you look at these big initiatives, people are going to react to that early. And I think that this is going to go up and down and it's going to move around, but there's going to be overreaction. But I think at the core, we have to recognize that these are policy initiatives that probably have long-term legs. And I think that's the thing that we have to look at. So I'd rather be a little late and safe than a little early and sorry on a lot of these things. But I think that home building in America is extremely important. We have a shortage. We have a shortage of affordability. And so that's just a huge demand driver. And now we just have to figure out how to supply that demand.
In your notes, I see one of your stock picks is Microsoft. And that's something we've been talking about a while, as Caroline Hyde from BTech was just in here talking about software as a service. I'm kind of at risk here, or some investor concern as it relates to AI. And Microsoft's been underperforming, which is a shock to so many people because it's been the business results they put up are so strong. What's your call on Microsoft here?
Well, we actually are kind of buyers of it on this. When you get these pull down, this overreaction that we just talked about, you take a look at the fundamentals on Microsoft, and they're spending a lot of money. They've spent a lot of CapEx. They've made big investments, but they have the ability to do so. I mean, they're one of the biggest spenders for R&D and development. And when you spend billions of dollars on research and development and talent, you come up with something. And so I think when they take a look at spending their money, developing Copilot, getting their AI version of this embedded into the systems that they have that are completely dominant in the U.S. and pretty much overall, I think that you really see a good long-term catalyst. So maybe there's a little short-term pain here as people are looking at it, but we think long-term, and long term is now not 10 years, long term is like 2 years, And so we now are beginning to look at, you've got, $625 billion in long term obligations that they have in terms of just contracts and things moving forward. So I think the bookings going up 23%. I think all of these things moving forward are going to be good for Microsoft long term.
Are you also a buyer of the big tech companies' credit? Because they're going to have to raise a lot of money, as we just discussed, to fund this AI build out. And given that banks are traditionally the biggest issuers of credit, tech is going to overtake that very easily this year. And I wonder if there's concentration risk in having so much equities exposed to big tech and now credit exposed to big tech too.
Well, I think individual investors have to take a look at how much exposure they have between fixed income and equity, and that's institutional versus retail, and so people are going to have to take a look at that. But in the end, the whole issue is earnings, whether it's equity or fixed income, and you have these massive earnings engines going through. I mean, AI, we're at the early stages. We're just barely building out the Transcontinental Railroad right now. We're just in the infrastructure stage. We're not even into implementation yet. And so as we begin to really get deep into AI implementation, it increases labor productivity. That's the thing that matters. In the last 2 quarters, we've seen labor productivity go up at an annualized rate of 4%. So increased labor productivity, that's a solution for inflation. Increased labor productivity really pushes margins up. So when we take a look at adding these factors in, that's a huge catalyst.
That's what our nominee for Fed chair, that he believes that as well, AI and productivity. Dryden Pence, thank you so much. We appreciate it. Dryden Pence, Chief Investment Officer, Pence Wealth Management, 33-year U.S. Army officer, 33 years. Thank you for your service. My father was 32. How you guys pick these round numbers to say, that's it, I'm done, I don't get it. But Dryden, thank you so much. Yeah, we appreciate it from Pence Wealth Management. Looking at the markets here, S&P off 38 points, the Dow up 53, the NASDAQ's down 284. So there you go, no directions whatsoever. Tom from the Upper East Side asking for a VIX quote just above 19 right here. Looking at some commodities, gold, guess what? It's back higher again. Had that pullback, but some dip buyers came in. It's now up $250. That's 5.5%, $4,900 for an ounce of gold. More coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And the major stock averages mixed right now. I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. You have technology shares, they're pushing lower, and in particular, the pressure on software stock. So there's this theme that AI is going to crush software. Anthropic released this tool. It's designed to automate, among other things, legal work, and that's adding to worries about the impact that AI is going to have on data services and information businesses. And Microsoft is bearing some of the brunt of this, down right now 2.5%. Now, according to our sources, Lennar is among the firms that have worked on this proposal, which is calling for builders to sell entry-level homes into a pathway to ownership program. It'll be funded by private investors. Lennar right now, the home builder, is up just about 6%. Jennifer Lee at BMO Capital Markets says she is looking right now at a pretty resilient U.S. economy.
It's going to be all back down to jobs. We've actually been upgrading our growth forecast for the U.S. roughly about 2.5% on average over the last couple of years, 2025 and 2026.
Right now, the S&P 500, 35 points lower. That's down 0.5%, 69.40 on the index. The Dow up 36 points. The NASDAQ Composite Index, 264 points lower. That is down 1.1%. And then the Russell 2000, the smaller medium cap, that is up right now 0.7%. Oh, good news. Avocados, the cheapest.
I saw that
they've been in years ahead of the Super Bowl. Prices down more than 19% from a year ago, according to Circana. The U.S. on track to import 290 million pounds of the fruit from Mexico, leading up to the,
Are we tariffing these things?
That would be
an avocado exemption.
Is that covered under NAFTA or USMCA?
Avocados? No, I don't know. You know, that's a really good question. Why didn't I look into that before doing this?
We'll go ask AI.
Story.
Grok might give you an answer that you can't say out loud.
Oh, okay. All right. So maybe
listen to you. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right, very good. John Tucker, we appreciate that as always. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Pepsi out with some numbers today. Their earnings beat estimates, but for me, the big thing is Pepsi's going to cut Doritos prices by as much as 15% to boost demand. When do you see that? I just can't remember.
A double-digit price cut? What?
Yeah, I just don't think you.
Well, they raised the prices initially,
exactly.
So are we back to square one?
When all the supply chain stuff happened, okay, I could see how they were jacking up prices because
and post-pandemic.
But they don't come down after the stuff's over, do they? I mean, it's not like an avocado, which is a commodity.
I want to see this charted out, what it looks like over time.
Ken Shea, Senior Consumer Products Analyst, joins us here from Bloomberg Intelligence. Ken, talk to us about Pepsi. Again, came out with some earnings results and then some interesting topics about pricing some of their products.
Yeah, hi, Paul. Yeah, PepsiCo's numbers today, as you alluded to, they beat their expectations by a little bit. But I think the broad takeaway for investors from today is that PepsiCo is committed to bringing better focus to this company. You know, I've covered this company a long time, and its primary competitors, Coca-Cola, Keurig Dr. Pepper, you can say Primo Water, Monster. How they differ from PepsiCo is they're much more focused, particularly on specific categories. But PepsiCo, with the urging of the activists, urging them on, is bringing more focus to this company. And what I mean is they're rationalizing a lot of the SKUs that really aren't contributing much. They're consolidating plants. They are bringing more rationality to their trade spending. So when I hear things like, cutting price, that's tactical. That's just a way to, move the needle a little bit with near-term sales. But I think the bigger picture is they're bringing more focus to this enterprise. And I think that's what's behind a lot of the enthusiasm behind the share price today.
Right. I mean, investors are excited about its strategy as opposed to just kind of moving forward with the way it's always been. When it comes to those price cuts, though, I wonder if this is going to spark any kind of price war. Will other snack makers feel the pressure to also reduce prices, even if they've gone up quite a bit since the pandemic?
That's possible, Scarlett. In the case of Frito-Lay, though, they have such a dominant market share. They have like 60% of the market in the measured channels. And when you have that much of a share, you deserve a premium, particularly with PepsiCo's direct store delivery system. What that means is that they help their retailers much more than a lot of their competitors, and that is they actually go to the store. They're quick to respond to out of stocks. They help position the product. They create the end caps in the store. They do a lot more for the retailer than their competitors, and so that's how they are helped to get premium pricing. So yes, they're rolling back some prices. It's no secret that price increases have been up quite a bit since the pandemic. A lot of it's cost driven, and private label has encroached a little bit on PepsiCo's share. But to answer your question directly, they are the dominant player. I would not expect them to give back too much over time. And while their competitors may cut prices as well, I think retail would be alienating consumers if they push too hard on PepsiCo's price increases down the road.
I was just in the ShopRite in Belmar, New Jersey yesterday. Lots of private label stuff on the shelves. I mean, prominent shelf
space. And are you reaching for those?
I am in many cases. Ken, talk to us about Elliott Management. They've been in this company. They've owned this stock here, pushing for some change. How much of an impact are they having?
I think on the margin, there's an impact, Paul. Maybe to the degree that PepsiCo is hastening its move to more focus. A lot of the things that it's been doing all along, and that is upgrading their portfolio with more functionality. This is some of the things we talked about in the past. They're bringing more protein to their mix, the Poppy prebiotic sodas. They're bringing, more fiber, the prebiotic sodas. They're bringing more protein by restaging muscle milk. So bringing more value to the beverages. So they've always been doing that. But to your question, Elliott is pushing them to do things like, okay, you can still do that, but also cut costs a little more aggressively. Maybe you don't need all these plants. Maybe you can consolidate some. Maybe there's some SKUs, some products that aren't selling well. You can roll those back. Be a little more nimble when it comes to getting rid of some products that aren't winners. Because at the end of the day, you have to grab as much shelf space at the retailer as possible. And when you have products on the shelf that aren't moving, you're not helping them, with their business. So be a little more aggressive with that. So it's helping. And I think that's a positive thing for shareholders.
Is this a company that's going to have to separate its drinks business from its snack business?
Well, that's the age-old question we've been talking about for a while. And as I mentioned, if it can prove to the market that this increased focus that they have with just doing their, daily business or running these operations, if they can improve them, I think the heat will be off for them to go to the draconian measure of breaking up food and beverages. That's always, the wild card, I think, down the road. And I think it'll be well received by the market, quite frankly. But I don't think it's necessary at this point.
What are your consumer products companies telling you, Ken, about just the consumer out there?
Well, Altria just the other day, it's a different market with cigarettes. They noted that consumers are still hesitant in paying up for premium products. Now, cigarettes, as I mentioned, isn't the same category as salty snacks, but they do note that consumers are reaching for the private label, the low-priced alternative more than they've done in the past. And to the extent that carries over to, snacks and beverages, I can see some parallel lines here. And as more companies, release their numbers, I think that could be a common theme here, that private label is encroaching, and maybe there needs to be some more deceleration in the, reliance on price increases to stimulate sales growth.
Can you imagine if private label starts advertising during the Super Bowl? Not that they would, right, because they don't have that kind of expense budget, but the big brands do. And I wonder how much that really pays off.
I know. They've spent my entire lifetime building brand value with me. Mm-hmm. And now, poof.
Now you're going to the ShopRite and saying, you know what, I'll just get this one.
Exactly. That's brutal. If I were a marketer and all the money they spent on me, and now, go figure. It's tough biz. Tough business.
You're not loyal, Paul Sweeney.
Senior Consumer Products Analyst, Bloomberg Intelligence. And the other thing I want to ask Ken is, what's about every store, every restaurant now has hot sauce? When did hot sauce become a thing?
We need to talk about this.
We need to talk about it. We never had hot sauce growing up, except on Mexican food. Now
the palate has changed.
My kids put it on everything.
The American palate has changed.
The young folks are all into the hot sauce. I don't get it. This is Bloomberg. Good morning.